What's up, everybody? What's up, Chad? Good morning. Let's do that thing again. Hold on. Which screen is this? It's been doing this. I need to figure out how this. No. Okay, wait, which one is it? Come on. What's up, guys? Good morning. Nope. The monitor turns on and off. I still have to figure out how it is. No, not that either. No, it's the last. It's gotta be the last choice. Ayo, we're back. The monitor turns off, so then the encoder is like, well, it's gonna figure out which monitor it is. It's amazing. All right, market opening in 6 minutes. What's up, guys? Good morning. Get situated here. The OLED monitor, about the 360 hertz refresh rate OLED. You know how it goes. And then it turns off. Before overnight. Oh, guess what? Yeah, guess who took the long on that? I did. I grabbed that long last night. I'm not up too much. I'm only up. Let's see, how much am I up? 25.75. Nothing big. 2,500 just already. Just get started. I made a tweet last night. Oh, by the way, no Zoom call today. Yet again, hold on. Monthly match should be working, yeah. They'll be on when the market's open. You got 5 minutes. Nothing else will be there. All right, hold on. We let everybody know. No Zoom call against 8 either. Don't forget to hit that like button, friends. Let's go. I got off to a late start. I slept in. I partied my ass off on New Year's, though. Wait. How did the Zoom call started? Running late. No Zoom this morning. No time. Where's my pencil tool? All right, let's go. What's up? Good morning, guys. All right, market has run up. All up to DD bands today, 59.80 at the top. Overnight monthly hedge for make or break. We always talk about this one. Market had a liquidity flush and reclaimed, and right here, I got it on the long. Had a stop, got out right there. Made about $2,500 just to start out the day, which is awesome. Now we're trading inside of DD bands, so this is a trading day. Usually sitting out outside the DD bands on both sides, unless there's a good strong long pivot to take. I don't short outside the bands. We see what the ratio is in a little bit when it comes up. Don't forget to hit the like button, friends. Front and center live. Let's go. Good morning. What's up, everybody? Coming back from last time. A lot of new faces. Let's get some magic today happening, hopefully. I hate this playlist. I need a new one. All right. 3 minutes till market opens. Let's take a look at the... I think today is the last day of Apex. 90% off sale, right? And Elite Trader Funding is having 90% off sale as well. Don't forget to use our code. Enters you into drawings. We're giving away a lifetime membership as our first drawing. A little bit into the first of the year. the opening today. See what's going on here. We have jobless claims came out this morning. Continuing initial came out. We'll chat about those as soon as we get some trading in, because the market opens in 3 minutes. I'll help you plan to see what the FOMC is going to do. You can actually look at the inflation target. Remember, in the FOMC, the problem with the FOMC meeting last time is that they were split on their decision. The FOMC dot plot shows the longer term. FOMC is split 2 different camps. Half of them think 2 basis point over the next 3 years. The other half think a little bit more. So 2 more cuts this year is all we're going to get, and then they're going to freeze. Half of them are going to freeze, which means the dissent means they're going to fight. They fight with each other, and I can come out with a clear solution. Wall Street hates the idea that something isn't clear, and so we sold off pretty hard on that news alone. That was pretty that was enough to kick us into a bearish-ish market right out the door. Just look at the inflation front. Initial jobless claims are trending down, even into the holidays, which is interesting, which means layoffs. This is your layoffs first week. That is trending down. These are people that file for unemployment. You can only file for unemployment if you qualify, and you qualify only if you got laid off for non-performance related reasons. So basically getting trimmed or cut from the job, not because you sucked at your job. So these are people, layoffs per week or less over the last few quarters, which isn't bad. Continuing jobless claims of people after the first week still can't get their job back. And while it has been somewhat trending up since 2022, 2 million a week is actually remarkably average and actually even low for a good bull market. So we're not any kind of employment situation where people are getting fired. Or the economy is, don't listen to the bears right now saying the economy is doomed and gloomed and all that. We do have inflation, but people aren't getting laid off. One of the 2 signs of a recession are people getting laid off. The other one is negative quarter-over-quarter GDP growth. GDP growth is positive and people still have their jobs. Economy's doing good enough. Oh God, that bot's now kicking in faster all the time. No giveaway today. Jesus Christ, hold on. Ugh. We're good here. Hold on, let me do that. Now the bot's like going out of control. I see you, bot. I have to do that. No giveaway today, but there'll be a giveaway on Friday, so stay tuned for that. All right. Market is open. Now, one of the things to remember out the door, DD bands, you have a 4% of days close above, 8% of days below, 88% of days close within. We're going to wait till we get our liquidity maps. Take it off of that this morning. Yesterday, we took a quick liquidity seeking run at the first of the new year after all that tax loss harvesting. We reclaimed 59.38, which is the make or break for monthly hedge structure, and now we're pushing up this way. So let's take a look. I did take a long right on that reclaim. Made $2,500. That's only traded one account. Only trading the ETF account. And trade anywhere else. With the ETF account, I'm about to request another 5-figure payout. Probably done this week. Probably gonna do 20K. Something relatively small to keep the account going. All right, let's take a look at the liquidity maps coming through here. Good morning, guys. Don't forget the like button, friends. Good morning. Let's see what we got. So no news, nothing crazy today. All right, we are in a BSU and S&P. So here's how BSU works. We have resilience greater than 0. So resilience is positive. This pushes here. Outside the box, resilience pushes here. Any break of blue is a long. Now, one of the problems is we're outside the DD bands up way up here. So we're going to long just the DD band, wherever that is. Okay. Ideal setup would be orange to blue. This would be fantastic to take. So basically today, right up in here, that's the end of a trade. So there's really nothing to do. So what I'm going to do is I'm going to sit on this one and let it chill. If you do hit the half gap and resilience is greater than 0, then I like to take that long as well. So we're going to look at this one. Look at QQQ in a second to get some extra clues. All right. So inside of here, any break of here is a long push. Okay. So I'm going to let this dip and rip. This nice little bull day we have going on today. I love it. But it's going a little crazy. All right. So BLU liquidity map on NASDAQ is in a similar boat. There is a long setup. If it supports here, it goes up to the DD band. That is the trade to take. And we already passed the DD band once today. Let's find out where those are. And then a dip. So here's one thing as well. This being right here makes it hard to trade. So problematic. We're going to mark this right here on QQQ. And when any one of the 3 indices hit that target, all 3 of them, you take that caution. So essentially QQQ has a CD band right up here, literally right there. So there's not a lot of wiggle room for upside momentum here. And then outside of DD band, I only long on strong pivots anyway. So this is really not a trade. What's up, guys? Good morning. Welcome to the stream. Now, ideally, you guys know, the stronger, better setup to take. As Nasdaq is a Q, it's going to have a better pivot than the S&P. Right here, you have hedge pressure, monthly hedge pressure, all stacking up at the same place. This is the open blue open setup on BLU. This one I take all the time. I love this one. Bull zone supports 90% of days. Support MHP. Under ideal conditions, 90% of days will support down here. Okay, let me let that bot stop playing chat. All right, Interval online. Oh. Yeah, let's change that one. I was having trouble with it on Friday, and then I changed the timers to like go off. I was like, okay, let me see what the timers are. Now it's going off like every second. I'm like, okay, this is not what I want to get. Let me change that. Well, shit, there it is. Where it fucking is. Let's go. Oh, all right, right on the edge here. All right, let's use something small. Just two, nothing crazy. Just something small. That's a pretty quick dive to it. Just something small. Nothing too crazy. That's a quick dive. I don't trust sharp setting candles like that. Let's take a look. Just for a scalp. Just for a scalp. Something small. There you go. Resilience is positive. Nasdaq resilience is negative, so be very careful on this one. But just something small right on the edge, nothing big. It's going to be kind of a quick moving day today. I like to take this one. Just something small. I'm gonna try to get the hook right in there. That would be crazy for us to just dive through and keep falling. That was a quick, damn, that's quick. Okay. Holy Lord. I don't like this one that much. That is a sharp freaking candle. I'm out of that one. Screw that. Wow. Okay, no. I'm going to deal with that one. Okay. Let's wait again until I get the reclaim and I'll take it. Good lordy, that was crazy. Yeah, I was moving quick. See if we reclaim and I'll take it. That was crazy. Okay, let's see though. Stuff is still pretty decent here. I want to see that support of the bull zone. You don't normally, and this would be 2 days in a row where you hit these like things that you don't normally do. Let me wait till the reclaim and I'll try to take it. If you guys are here last time, I ended up turning 2 days ago into a green day, by the way. I took some losses at the start of the stream, but at the end of the day, made them all back. Jeez, that was crazy. That's too much. All right. Sometimes Nasdaq just moves quick. On this one, yeah. No, I'm gonna wait till I reclaim and then see. That was very fast moving though. Good. Yeah, this is nuts. Okay, let's see what we get here. That's at the impact red line on Nasdaq. Let's wait on this one. I'm not gonna touch it just yet. Music's unbearable. Let me turn it off. I actually hate. Let's turn the music off. I'll come back. You know, you put music in just to like fill the space, but yeah, they have these like the thing is with YouTube doesn't let me play the music I want to play. They have these like copyright free playlists because you have to put something on so that's not dead air. But honestly though, if I had music I could play, then YouTube would block on my streams. That's the one thing about it. Don't worry, I don't no coffee today. It's okay. Actually, I'll put on some lo-fi. It might even be a better setup here. Lo-fi. Something more chill. I'll turn it down a little bit. All right, that'll be a little better. Okay, so this move just a little quick for comfort, but I'm looking for support at bull zone. DD ratio is good and positive. The market's gonna hopefully be decent here. So I'm not looking for this to sell off or crash out, but we're gonna keep our eyes open here because this slammed very hard right at the door. So that was unusual to see. I would like this. Most days will close above here and above here. So there's also a trade setup I do take, which is from here to here. I love to take that setup. And so I'm going to wait as this one moved very, very, very quick. That was kind of scary. Watching this just plow through like it wasn't even there. That's kind of unusual. So look at SPY again one more time. NASDAQ gaps, just gap and go, completely selling off. S&P. So let me wait. There's some stronger pivots closer down to here, especially on S&P. From here to here is a good setup. I'm going to wait on that. In fact, the prices move 5% intervals matter. It doesn't matter that it has moved a certain amount of distance. It doesn't, but you did break through the DD band, so there's limited upside in the trade. I don't know if I expect this to just crash out today, but we'll see. That today, again, just like 2 days ago, unusual behavior. We're in a transitional market where the market is moving from what used to be strong, stable, and bullish into something a little more bearish. So, yeah, it's kind of bad. Let's take a look at the monthly maps today while we're waiting for the setup to happen. Right here, we are still looking at bear side liquidation, bull side liquidation, and bear side increasing. So market is very, very, very poor state right now. There is no strong bull setup, and it goes all the way through the middle of January. That's on QQQ. So you have bear side resistance the whole way up. SPY, very, very, very much similar boat. You don't have strong bull side. What you want to see for future strong bull markets is you want to actually see this dark gray sloping down like this without anything above it. So essentially we are stepping out of a bear zone, which is good, but we're still not getting that good strong bull territory, and bear side is still liquidating to like January the 10th. So nothing's super strong yet. So got to wait on that one to turn out to be a little better. But all three of the other setups that we have for greater market are still bullish. 2 of the 3 are bullish. The stocks are still bullish. DD ratio is good. We're trading above MHP, which is good. And monthly maps is just kind of wonky. It's stronger than 2 days ago, which is good. Don't forget, friends, hit that like button. We love y'all. And now resiliences are negative, so this is going to be tough. So stocks are now slamming very hard right at the open. Res is a pivot point right here at this dotted line. So now the stocks have deteriorated. There tends to be pressure from here to here more than anything. So today's setup, I'm looking for this to kind of like dip inside of there. Yep. Give me 1 second. I'm going to do a quick restroom break. I was running late today, so I didn't get a chance to go to the bathroom. Hold on. Give me 2 seconds. Transitional markets like this are a little hard to trade. You're going to start to see that your nice strong bull signal deteriorates. And right out the door, this isn't good. The stock's trying to sell as hard as they are. Not a good setup. But we're going to wait on this one and see. All right. Let's look at DIA really quick. So the Dow Jones isn't looking as bad, at least for, but I mean, it's going to mirror what the S&P is doing. So the S&P is selling off pretty hard. Nasdaq is selling off pretty hard, but mostly the S&P. You're going to see some follow through with DIA. And DIA is still kind of in no man's land. There's not really any strong, there's a little bit of stronger, I would say, case for Dow Jones than the other two, but you can still see we're not in a bull zone yet. We're kind of trading in the middle. This is all shattered. It's like shattered glass. So whenever it looks like that, you know it's not going to be clean and stable. A good monthly map. If you guys want me to run some for you, give me some tickers. I'll run some monthly maps and show you what they are. Show you some good ones. You know, like let's see what some of the big tech is doing while we're waiting. So I'm waiting for my setup on the S&P, just a little bit lower low, and I'm going to get in. Try to take one more stab at it. If you guys want to see any monthly maps, okay, run some. Like Nvidia right now, like Nvidia is looking to stabilize within a week, which is good. See how it's separated, nice and clean. It's looking a little better. Apple, let's take a look at Apple's. Apple's kind of in a similar boat, but about 2 weeks later. Whenever you see the light gray tanking like that, that's short squeezing. So shorts are not going to hold on for much longer inside of here, and bulls are starting to add to their position. So somewhere within the next week or two, Apple's likely to bottom out, which is good. So this kind of selling pressure looks like it's not going to just tank straight out. There's going to be kind of some chop and some bounce on that. So Oracle, let's take a look really quick. See if there's all in a similar boat here. Do we have a liquidity map for this guy? Looks like this one doesn't calculate. There's not enough data on this one for it to calculate, unfortunately. All right, let's take a look. Back to the setup. NASDAQ. So any upside moves today or downside moves. One of the problems is the majority of the upside move was realized in the overnight session, which kind of sucks. So in the daytime, you don't really get a lot of good activity off of it. This is that 59.38. I tweeted about this one. This is kind of like the make or break position to take on the overall of everything. This was kind of a scary little move there. Again, this is what happened last night. The market just kind of sold, and then recovered and went. So today, any setup limits itself about 59.80, which is about 40 points up from here. I don't trade throughout the bands to get them to break. So about 4 points from here. Is right at about 586. Yeah, about 590 right here. There's a gap fill above that. So right about here is where your DD bands are. Like real close to where we opened. And that is one thing as well. There's very little. So normally I like to trade inside of the bands because 88% of days usually stay inside the bands. That was a little advantageous to try to get along just for a scalp. And obviously didn't play out, so I cut it pretty quick. But let me wait on a new setup here. Looking for some. Okay, so just like yesterday, if we reclaim MHP and hedge pressure on QQQ, I'm going to be back in on the long. If we get back in on here, I'll definitely get back in on that long. So I'm going to wait on this, on the reclaim. S&P, let's take a look at S&P. I'll probably proxy trade it on S&P. S&P has the stronger resilience of the two, so S&P is going to have that stronger, longer power, I think. I'm going to wait on this one to see if it reclaims. So not going to chase until there's a reclaim on Qs. And probably what I'll do is I will tap it. All right, let's watch that one. Okay, let's look at NASDAQ here. The reclaim is going to be right above here. That's only if we get it. I'm going to start off small. Conditions are still very poor on the stock side. On the stock front, so there's really not a lot on this one, but the bullish DD ratio is pretty decent to show that this is likely to hold from here. I just touched one On a second tap, I'll add to it. So I took a loss out the door, but I'm going to take a second stab at it. Is Mike quiet? You turn up. Wild day today. So I'm going to step in here. So basically, I took a long, got out of the way. I'm going to try it one more time when we get up through here. This velocity is a little scary. Let's look at VIX really quick while we're waiting. Yeah, Eric, feel free to ask any question you want about the software. VIX is in a downward liquidity map, which is good. So VIX being in some of a decay pattern, not the most terrible sign. But yeah, today's going to be a hard trading day, and I already feel like I'm going to be taking a losing day. Maybe I'll get lucky. We'll see. When unusual things like this happen, the market's going to be hard to trade. So I'm going to trade a little smaller than normal. Thank you, Matt. You changed the game. Oh, appreciate it. No, you did, man. You're changing the game. For yourself. So we're good. I'll step back in if we break through MHP on a second time. I want to see resilience get back to better, but man, this is like very, 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 very sketch market today. I'm not the biggest fan of it. And Nasdaq, boy, that Nasdaq is moving quick. The odds are when the DD ratio is greater than half, about 90% of days will stay above a bull zone. We'll stay above the same zone. And 2 days ago, our odds were defied. We had a bunch of 10% setups happen. So 90% of days stay above there. 90% of days will not break through MHP either. So these are good long entry pivots to take, which I did. And that liquidity just zapped. Oh, there we go. There's the money. Let's fucking go. Like I said, I'm only in one though because I'm being a little bitch, but whatever. I mean, I'll take it. Every single time, yeah. And my Elite Trader funding account, which is my live Elite Trader funding account, so my funded account. I'm in a position in that one as well. So that's what I'm. You always ask me like, Matt, you're looking over the screen. What are you looking at? It's on Rhythmic, so I keep it over there. My Elite Trader funding account. This is my live funded is up $3,500, $3,600 on that account. So that's good. So I trade that one on screen, but unfortunately with ETF, I'm in an agreement with them. I'm not allowed to reveal the balance of the account. It's an NDA. And I'll tell you a secret. You guys want to know a secret? They gave me a lot. That's why. They took a good risk on Papa Bear. Papa Bear is up. Oh God. I was like 400% in the 500% in the account, something like that. They're making money off of me. So I would trade that. I'd love to trade that one live though, but Rhythmic is really stupid. Rhythmic platform is the worst. I hate it. I mean, nothing like, no insult towards Rhythmic, but their platform is just booty. It's a 90-10 profit split with them. And it's a live funded account, so it's real money funded. So I'm no longer doing like eval or sim or anything like that, or sim to funded. So it's pure funded. Oh, okay. So Eric, a couple of things to answer your questions. Great questions. Number one, you buy our data feed, which gives you the real-time candle data. You need that for liquidity maps, resilience. Okay, you got that, right? The $10. That's equities data from the equities market. For futures trading, Go to connections. You connect the futures broker. And it says edge clear, but we need to get rid of that. And I'm gonna tell my guys. Let me click. So any broker that works with CQG, oh shit, let's go. Right up to fill the gap. Let's take it. I'm going to close out and take profit on that. That's good. Close out, take profit on that. I always trade the next resistance, took profit on that. Well, that was good. Pass an eval in one fucking trade. There you go, baby. Let's do it. All right, I just closed out locked in profit. I always take profit at first resistance plus or close to DD band. I'll be ready to call that one today. What do y'all think? All right, I closed out my ETF total. This is my total haul on Elite Trader Funding today. This is $3,800, $3,900 a day. Not going to complain there. I probably broke even on this one in the Apex though. Okay, so back to your question. Any broker that works with CQG will work with us. So you get a CQG login. All of them work, and you're going to need to get data from them. Unfortunately, data that you buy for each platform is entitled to you for that platform. Only the exchange doesn't allow you to buy one data feed and then plug it into different places. That's an exchange limitation. They don't do that, and it sucks. I wish they did it, but every platform, you have to buy your data separate. It's an exchange thing. So with us, let me tell you what to do. If you want to trade, Eric, you choose a broker to trade with, futures broker. I can't legally recommend one for you. I could tell you the ones that we use here. Any futures broker that works with CQG will work with our platform. So these are like Phillip, Dorman, Edge Clear, AMP, Iron Beam, Cunningham. They all work here. So you pick one. The ones that we usually use, AMP is usually at top of the list for the reason of AMP only has $100 account minimum. Okay. They have the lowest minimum balance. It's 100. Everyone else is 500. $100 deposit to get your brokerage account going, and you buy data through them. Data is the same for every FCM that you buy. Data for top of book for futures data. If you get it, it'll allow you to have a DOM, which is here, to populate your futures data. You can trade on your DOM, everything like that. You don't need level 2. Level 2, see how on my DOM, I don't buy level 2. You don't need it. This is just the best bid and ask. Level 2 is something that, like, you know, popularized with retail trading early on, like the 90s and 2000s, but with high frequency trading and market making these days being computational, level 2 is just useless data. Never pay for it. Never got your way to pay for it unless you need it for whatever reason. And all the level 2 does is open up additional tiers of the bid and ask, which you don't need to see. You just need to see the best bid and ask. So every broker will charge you the same. If you're trading futures, top of book is always $1 a month for educational rate, which means you have a brokerage account with that broker. So $1 a month is it for top of book, and never get anything else. Top of book is candles, live candles, and historic data, and the best bid and ask. That's all you need to trade. And then CQG charges a standard $10 a month API fee, no matter which broker you go with. So essentially, AMP, Edge Clear, they're both great. Those are the ones everyone uses. Dorman's probably the most popular futures, much the broker, much the older school traders. But AMP and Edge Clear are two of the newer school brokers that people like. Edge Clear is a $500 minimum, AMP's $100. What's the difference between two of them? Pretty much nothing. They're all similar. So pick whichever broker you like. Tied in here. The only broker that doesn't work with us is going to be Tradevate because Rick wants Tradevate to be like the Apple of trading. So they closed off their API. They're not allowing, they're not working with CQG anymore. Only the legacy CQG, which only connects to TradingView. And TradingView is the only third-party platform that will ever connect to Tradevate until Rick changes his mind. And that's just because TradingView grandfathered in. And we almost grandfathered in, but they changed that right in like 2021. And we built Rocket Scooter in 2022. So we were a year late. We could have grandfathered in where you can use Tradevate in our platform too, which kind of sucks. But hey, you need to open an account. So who do you normally trade with? You have a Tradevate account? Yeah. So the one, and let me tell you the story with Tradevate. Well, we're really close with NinjaTrader, Tradevate. They've been a big supporter of me in the stream for a while. I've chatted. I've had hour-long phone calls with Rick Tomzik before, just about life and trading and, you know, what we're developing over here. They're very good interest in, like, anyone in the futures community. They're very supportive. And so, you know, their technology division, when they merged with NinjaTrader, they kind of changed what it was they were doing. Oh, hold on one. Yeah, so I'm using them for Apex. So this is different. Apex, you get to choose which broker you use. I use them just for the DOM because it's nice and skinny and goes right here. But it doesn't really matter which broker you choose. It's just whatever you want. And so when I talked to them, I was like, you know, can you guys open your API so we can develop it? And they were like, you know, we merged with Ninja, so we're kind of like trying to, you know, do something big in the platform business, and we're not going to, like, you know, connect to competitors' platforms, as you understand and respect. I'm like, yeah, that makes sense. I was like, but can you please, just for us, because you love me? And he's like, Matt, I know you ask me every year, but when we do, you'll be the first to know, I promise. And I was like, you're going to make so much more money with brokerage accounts if we send you thousands of clients. And, you know, their vision's different. My vision is you're going to sell more brokerage accounts and you're going to sell NinjaTrader platforms, you know, but to each their own. I think hopefully they'll see that one day and they'll be like, you know what? These Rocket Scooter guys, these other platforms, we have 10,000 user accounts, you know, it's like, what if everyone was using Tradeovate? You know what I'm saying? But that's CEO talk, you know, just wishing the business strategies were different. So my fingers are crossed. So the minute we can do Tradeovate, I'll be the first to know, and you'll be the second to know, Eric, I promise. So I'm excited. I'm waiting. I've been waiting a long time for them to reopen that API. It used to be open for developers. So now going forward, we have every broker but Tradeovate, but that's by their choice. And so if as soon as we can do it, because honestly, that's who I'd use. AMP is amazing though. The guys over at AMP are really good. Edge Clear, the guys over there are really good. Great customer support in both of those groups. Philip's great, Dorman's great, but those are older. Of the two, between Philip and Dorman, Philip has Plaid, so you can have like better ways to transfer money in and out. But like the nuances between most of these FCMs are very small. The commissions are relatively the same, if not the same. The fees are the same. You're basically just picking a computer in a closet that executes your orders. You're not really in customer service. You're not really getting much else out of it to make you have to make a hard decision. So it's just up to you. A lot of people pick an FCM out of a hat, but what I tell you need to do for when you're picking a futures broker is, number one, you're going to look for the commissions. You want to pay the lowest amount of commission you can for the same speed of execution and no outages. You don't want to have like history of outages or poorer experience or like delays in data and stuff like that. They're all pretty much the same. I don't ever hear horror stories about like the top 10 FCMs. They're all really good. So you'd want to next compare commissions. So pick all the stable ones and compare commissions. Then after that, compare account minimums, how much you want to deposit in. But I mean, for most traders, 100, 500 doesn't matter. So from there, the next thing you want to compare is how to get money in and out. Some of them, this is where they differ. Some of them are old school only. Some of them are like mail us a check kind of thing. Actually, I'm joking, but some of them are actually like wire only. Some of them are like, well, ACH. Some of them are like, we'll use Plaid. So like newer ones are starting to modernize and allow you to like ACH money in and out, which is, you know, avoid a $25 wiring fee. But other than that, they're very much like 95% identical. There you go. So only buy, yeah, level on top of buck. So so if you want to trade through Rocket Scooter, the account I have is with AMP. The only reason I have AMP is because it's a $100 account minimum. No other reason. I also have an Edge Clear account. Actually, I have two Edge Clear accounts because my ETF is also an Edge Clear account. Futures is so complicated, isn't it? But yeah, they're both pretty good. The guys at Edge Clear are super nice. Okay, so DD band is the end of the trade, by the way. So as you guys know, from here, outside of here, remember in the teaching, I don't do no shorting up in here. So that was great. No shorting. Just so you guys know the profit I made. This is pretty solid. This is me today. Let's put this. I'm gonna put this on the screen. Y'all can see it. So I'll do this here. That's how much I made in my my funded account. So my funded account, I intend on taking out 20K on Friday. So that will be 35K in just over a week and a half. And so that's pretty good. And this is a live funded account. So love it. So no shorting up here. You guys know the rule for me. I don't short outside of here. What's the percent of days that close outside of the band? Do you guys know? Remember? On the top side? I draw them on the SPY chart, Miguel. I just do it manually because it's on your futures chart. Roughly about 4% of days, right, will close outside of the band on the top side, which means about 96% of days will close on the inside. So because of that, I'm not eager to take longs up here unless there's a long, strong pivot. There isn't any. Since there's no pivots here, there's no long entries from here. I'm not doing anything. Like if there was MHP and it broke through and bounced, I'd love to take a long. Small trades only and only longs only. Long only because we don't short a bull market, right? Even though 96% of days will tuck in, we don't short a bull market because that's just one of the tricks of being a successful trader. We don't short a bull market and usually don't know how high it can go before it decides to tuck right back in. Futures was a great example of that. I mean, like this is why you don't short, even though eventually you might make a trade off of it. But look at this. NASDAQ went up almost 100 and something points before it tucked back in. You see that? And now the destiny is being fulfilled that the structure doesn't like to break. This is on Thinkorswim. But look at this day today. Lost some money here, made some money back. And the overnight, I longed from here to there and closed out. And then as soon as this happened, I took a long again and got some profit. That's why there's two different trades there. Live on stream, the Apex lost like $2,000 and then made like $2,000. So I basically went flat on that one. So here it's a setup. And so again, I don't bet on structure breaking, but we don't short bull markets because you don't know how high it's going to go and come down. But we always will long bear markets for a bounce to come back in on that same high probability. When you learn trading and you learn to trade very well, you're going to learn that shorting and longing are not equal and opposites. Hold on one second. My monitor's doing that thing again. Yeah, I think I'll see the message screen. So I only do long onlys outside of these bands. And so there's a reason for that because the statistics are good for bull markets. Longing only outside of the band and only on strong pivots, which QQQ we have none. And I don't short. Long only and small position only as well. Only like, you know, one or two minis. Nothing crazy. All right, from here. Yeah, that's it. So unfortunately for me, I don't see any good setups to take. And I don't normally trade outside of this. And I'm actually pretty happy, you know, walking away with, you know, 4,000 bucks I didn't have yesterday. So that's good. I would say be overtrading about anything else. What do you guys think I should do? 4% of days. That's it. Hold on. My monitor's doing the thing again. My monitor loves to pick whenever it does. This OLED is annoying as shit. The monitor doesn't give me an option. It goes through some cleaning cycle or something. Then it is doing something and then turns on and turns off. I'm like, can I have the option just burn out my monitors? Like, I'm rich. I don't care. I'll just buy another one. What the fuck? I'm about to honestly, I'm thinking about taking it back. It doesn't let me turn off the option. I'm trying to figure out a way to do it. Let's see. How do you turn off MSI OLED care? Set it to 16 hours to turn off your monitor. It will run automatically after 4 hours of use. When you turn it off this way. Also, it's like 7 minutes. So turn off my monitor. I'm going to try to find a hack to get out of it. Oh, it does ask me to do it. I just couldn't figure out how to cancel. I pushed the button. I think it said execute. Maybe I pushed the maybe I pushed like the wrong button. All right, we'll let it flicker around for a little bit. Oh, maybe I should have done that. How do you like the ROG 4K? Which size screen do you have, Buzz? I just tried like one of my 6 monitors here. I just got one MSI just to test if I like the OLEDs before I go buy 6 of them. You know, for like, you know, $700 for a monitor, you gotta kind of have to really think about buying 6 of them. My gaming stuff over here, I have an ROG 4K as well. You probably, if you have do you have a 32 or 27? What do you have? I guess 32 since you're 4K. Yep. Wait, you have the ROG? We probably have the same one. I think I just bought it not too long ago. I think we have the same one. Yours is the flat screen, not the curved one? Oh, dude, it is such a nice screen. Dude, what a day today. This is really hard trading, those of you that were struggling with this. Market is just flushing and returning. I think we're good going back into good bull structure, but still. I had a curved, I bought and tested a curved monitor. I actually love it. They just didn't have a good, the ROG one. I didn't get that one instead. I got the flat one, but curved ones are good. The curved monitor I had, I gave to iDoc because she needed a monitor for her office. You waited since August? Yeah. Let me see here. What's it called? Yeah, it's the is this the one? It's the Swift. The Swift 32. The 4K OLED. 240 megahertz. Yeah, that's the one. This one right here. That's the one you got, right? See, I can still use my screen. My graphics card's still pumping out my screen, but my monitor's turned off. I can't see it. So I'm looking at my encoder where I can actually see the screen that I'm trading on. Yeah, this is a very, 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 very nice monitor. It's crisp. It's really nice. The auto dimming feature. They just like do this stuff for monitor care. I'm going to tell you something. I hate that TV. Well, here's the thing. And a lot of it is because it's a, hold on one second. Oh, hold on one second. I'm getting texts from people. I'm so behind on. What are you saying? Oh, hold on. The UCDP, yep, that's the one. Dude, it's such a clean monitor. It's nice. No, but see, here's the thing: is that you know, all OLED monitors are made by one or two companies, right? It's either Samsung or LG that makes the screen itself. So all the features that you see of like auto dimming and all that stuff, that's Samsung is notorious for like forcing auto dimming and power saving features for you. It's always, I have a Samsung TV that just drives me crazy because there's a bug in it. And I thought I bought a nice TV, but apparently I bought one that has a bug in it. And so while you're watching it, it just automatically like dims the screen down with no trigger. Like the room condition doesn't change. It's like an auto dimming feature, and you cannot turn it off without hacking the TV. And I bought a remote that allowed me to do something special to hack into the TV, and I just haven't done it yet. Essentially, you break into of the TV. Hold on. My thing, it did the same fucking thing again. Hold on. I'm gonna have to restart the stream. Don't go anywhere. Don't go anywhere, guys. After 4 hours of use when you turn it off this way. Also, it's like 7 minutes. Doesn't run during standby. It does. So how do I turn the monitor to standby in my Windows settings? Yeah, can't you like, can't they make it to where you can just set a time, like run every night at midnight? Like, you think the best engineers in the world would come up with something actually smart, you know what I'm saying? The best TV engineers in the world. Oh my goodness. So don't forget Apex, by the way, 90% off sale. Elite Trader Funding, 90% off sale. Go load up on your evals. If you guys are ever doing those things, load them up. Use our code, and it gives us credit for that. And if you do that, you know, the proceeds go to develop the platform. So our links, the bots are posting them there. All right. What are we doing today? Okay, let me tell you the rules here. All right, this is the second MHP tap. This was violent and crazy. Seeing this happen twice in a trading session is kind of heartbreaking. This, I took a loss and then I took a win. This, I took a loss and then I took a win. And sometimes trading is just like that. You guys see me on the screen. I didn't flinch once. I took the loss. I took the lick, got out of the way, got back in, took the trade. That's what trading is normally like, especially bear. When I say I hate trading bear markets, because it's shit like this all the time. Bear markets are the worst. Bear markets are for newbies. If you think like everyone's like, oh, I short the market, make money. These are numbskulls. It's like shorting is so hard to do, and it's so quick when it pays out. And if you short at the wrong place, you're going to lose money. So like what happens if you would have shorted right here for whatever reason, chasing a short? NASDAQ, you would have got squeezed up like 400 points or 300 points, you know? So volatility is like the worst in the world to trade. Volatility is horrible. I hate volatility for many reasons, and this is one of them. But see, a lot of times in bear markets, your trading is going to be just like this. You're going to take like a long setup or whatever, and it looks good. Then it's going to break, and you're going to do exactly what I do, is get out of the way and just wait. And then when the long opportunity presents itself again, take the long, make the dough. So taking a loss, you got to shake it off and, okay, back to the trade. I didn't go, oh my God, I lost. What am I going to do? Maybe I should chase short. Market's crashing. I'm just like, no, okay, let me sit out. Structure's still good. Bull market, right? Greater market. We talked about that. The first thing I did was tell you guys about the greater market after that. Said DD is greater than half, which is bullish. SPY was above MHP, which is also bullish. Okay, so I have 2 of the 3 things are bullish. Monthly maps, bearish. Okay, so we're like, okay, when one of the 3 things are bullish of these 3 things, I'm still looking for long trades. It didn't work. Got back to it, took it again, worked like a charm. What's the secret gift to getting paid out with Apex? So, like, what happened with ETF and what happened, have you used Apex for? Tell me about your payout. Tell me, guys, if you have any payout scare stories. I want to know. What I hear with Apex from the people, it's hard to say because the people that complain that I've heard, I wouldn't call them credible either. A lot of people cheat the system and get denied payouts. Gideon, I don't think you do that. So I'd like to hear like what they say your reason is for not getting paid out. Top Step has always been good with payouts. Yeah, that's what I heard. So my 2025 goal is to get on the Top Step leaderboard. I told you guys I'm going to gun for the top 10 this year. Count me in. I'm going to try. I'm going to check it out. My 2025 resolutions are, I said I'm going to take 100K with Apex. I'm going to take 100K with ETF. payout. I'm going to get on the top 10 leaderboard and top 7. So I'm going to have a busy year. I'm going to rotate between the focus and all of them. There was an issue with IP tracing. They didn't pay you out because of IP, because you were trading from different IPs, like trading on a laptop, like somewhere else. Like they said, other people were trading your account. That is ridiculous. They can't make you trade additional days. Oh, I remember you did tell me this story before. Now that I remember, I do remember, Gideon. You did tell me this. It's because you were trading. You were traveling, right? You were trading at home, like trading on a laptop or something. Or mobile. Oh, it was mobile. Okay, that's what it was. Alex is denied a payout from Apex. Almost perfect P&L curve. Reason was gambling. One day was 32% of total balance. This is before 30% hard and fast rule. That is ridiculous, Alex. That's borderline ridiculous. The idea that you can't talk to the risk team and there's like a customer service buffer just to annoy you so that you can't get through to them. So, ladies and gentlemen, as you know, here's a great rule of thumb. Are you glad? Very quickly, do you see this? Everyone see this? I'm flat. I'm not doing anything. Does everyone see this? Tell me that the DD bands aren't worth their weight in fucking gold. Tell me that. I want to hear it. Be thankful that we came up with the risk interval equation and love it like you love your pet. 4% of days close above the upper band. 96% of days close below the lower band. And Matt, sitting out right at the edge there, not chasing the long. I fucking know better. I don't short either because we don't short bull markets. We always long bear markets. We'll find long setups all day long if one of the three things are bullish. Here's the rules. So here's the rules I have, okay? If one of these three things are bullish, all it takes is one of three. I'm still looking for long setups if they exist. Longs definitely still exist. 1 out of 3. So in that environment, I will long outside the upper band. I will long outside the lower band. Let me go back to futures and show you. S&P tap to band. So the real stats of this, I'm just going to put them all here. So this is all back test stuff, by the way. 4% of days on the back test close above, 8% of days close below, and 88% of days stay in the middle. Okay, these are actual stats from Rockseer back test. 90% of days will close on the same side of monthly hedge pressure as well. So you have 90% of days are going to hook right there. 88% of days are going to hook inside of there. And you get the perfect setup for a 90% and 88% back down. Okay. Or actually 96% when you add the two together. 96% of days is this plus this close below there. Do you see how there? I mean, it's like to the penny train, like our shit is that fucking good. Oh my goodness. So I don't short at the top of the DD band unless this ratio is less than half, which it's not. And though you could say, oh, well, it did work. But yeah, I do consistent, though. I don't break the rules ever. And while that's a great setup, I certainly exited my long here. And this is what bad traders are doing. Bad traders see this and they go, oh, okay, let me go ahead and short. Well, I'm the one that tried the long. Bad traders will be like, ooh, okay, you know what? I missed out on it. Let me, like I tried to long, got burned. Ooh, it's finally going. Let me long again. And then they got burned again. Shorting there, longing there is what bad traders do. Good trader, I long there and close. When everyone else is trying to long, I'm out of the way on the sidelines. And that's typically what happens, right? When you're doing well. All right. Bestest. All right, there we go. All right. So ETF. So Joel, I have a question because that is a concern. And let's answer the question. So somebody said they had an issue with IP because they were trading remotely. Are there any things and safeguards that we have that using ETF, we can avoid that? Some of us travel, like I trade and travel. We're trading on a laptop or trading on mobile to make sure that the IP isn't flat. So basically the reason would be like the IP is showing different places. So the suspicion is multiple people are trading the same account. That's what I could assume, right? So what safeguards do we have as traders, Joel, because you're here, to avoid getting, teach me about that, because somebody said they're having trouble with the payout because the IP was bouncing around. Now, from the standpoint of the prop firm, I completely understand that. From the safeguard of the trader, I completely understand the concern. Clearly you don't want account sharing and things like that. But what can we do? VPN is not allowed. That's all. Okay, so VPNs are not allowed. Okay. So essentially, if our IP changes, like if I move and I go remote or I go mobile, it's not going to cause an issue. So Machine is from ETF, by the way. So he's giving us straight from the horse's mouth here. Yeah. You're denied a pay. Yeah, Alex, denied payout from Apex is pretty crazy. I hate the idea that they run you into a wall and don't let you talk to the risk team. Dom got 2 accounts, past a day, 3K profit on both. There you go. There you go. DD Band's monthly maps are great tools. They're my favorite. So here's some of the rules that I do outside of this. Is you guys still paying attention? Outside of here, I do not short ever, even though sometimes it pays out. I do not short outside of DD bands because 70% of months are bullish, 50 to 60% of days are green. So I don't short bull markets. Bull markets love to be bullish. As a matter of fact, bull days tend to really much stay bullish. There's not really a wick on bull days. Bear days love to have wicks. So you can check daily candles. Bear days love to buy up at the end because there's always people long in the market. So also down here, I do not short as well. The interesting thing about shorting, I have very specific conditions to short on, and these are not it. I will short off of the band, but only when this ratio is less than half. That's it. So I will long small positions off of 3 pivots only. MHP, bull zone, bottom, and bear zone top. We call them our strong pivots if they apply. This applies in both places. Long, small, only small trades, like a couple more, because volatility is going to be crazy outside those bands. So the risk is small. And if the blast out keeps going, low probability moves tend to move really quickly because you're squeezing out a lot of people. So the high probability is where a lot of the people are. If the low probability is where fewer people are, and if you're squeezing out, the majority of traders are getting squeezed on both sides, then the squeezes can be pretty massive. So you don't need a big position to make big gains. If you catch a big blowout short and the market's crashing, you're going to make a lot of money just on one contract. So long, small, strong pivots only down here. Inside of here, I exit trades on both sides of the bands, just like today. This is all textbook. I never deviate from my rules. You guys watch me trade, do it all the time. Same thing every day. So the perfect exit target, which our last class was on exit targets. You guys remember? DD band, the perfect exit target. When longing or shorting, MHP is also an exit target. If I was shorting here, I can exit right here. Things like that. So there's no problem if your IP changes a lot, like these days. Maybe that was an older issue. Because a lot of times I'm always traveling, trading from other states and stuff. What's going on with Tesla today? Yeah, going down here, 382. Tesla has if you look over here, bear short up. Tesla has downward gamma on, or negative gamma off of weeklies. Tesla's kind of in a bad spot. Tesla has positive gamma on monthlies. So this is like bad this week, great this month. So there is no particular setup in here that I could find that's worth taking. But to note that this pivot is active and strong and Tesla's pushing hard off of this. The only recovery for Tesla or other stocks is to see an actual break and claim of 390. And a break of 390 is that strong bull setup for the longer haul. BLU, which is on this side of blue, is really good. Down here is a wait. So like days like this, I wait. I don't come in here and say it's bearish because I'm bearish below MHP. I want to be bearish on the bigger bear market, not on a bearish day, right? So this particular thing, the market's chopping around in here. There is upward pressure from here. There is downward pressure from there. You see that? They're both pointing to each other, and it should be no surprise to you that Tesla's kind of floating in the middle. So inside of this, This is like a no man's land. I can scalp from here to there. I can do scalps off of the boundaries only. I wouldn't take a trade from the middle. I don't diddle in the middle, but I'll chase along there and I'll chase a short there. So like the majority of the stock market is hinged on this. Are we bullish or bearish for the next 3 weeks? Things don't look good on the monthly maps. The monthly maps kind of look really garbage. So your mobile will carry. Oh, really? Okay. Second entry, MHBQ. Boy, I'd be gambling if I was to do that. I'm scared. So, again, is the market going to collapse? If we lose this on a lot of the stocks, we got like 2 or 3 weeks of downward trending market. It's just bad across the board. If the market breaks here, then that's the big reversal that everybody wants. So when I look at days like this, I tell myself, let me wait and see. Don't try to be first to either party. If you get the bull trade and you get the bear trade, you're going to make a fortune. But don't execute them. I can't give you investment advice, but this is what I would do. This is a confirmation on the long. I will long on the break with a very tight stop. And on the break and confirmation, I'll take the short with a very tight stop as well. So that's my stop, and that's my stop, right? So either one of these is big for the month scale, right? So in days like this, while scalping the volatility is one thing, understanding that Tesla and other stocks sort of make or break point right here. Any downward bearishness can be really bad for the stocks. I mean, market could fall pretty nasty over the next 2 or 3 weeks. And then, finally stable out and then, get that bull run we want. But this is very possible. And a lot of us at the influencer world are seeing this. A lot of my friends who are really smart at this stuff are seeing this. Monthly maps are not giving you any good love either for some of the stocks. The bull side is sloping up. This is bulls liquidating, and that's what you're seeing. Bear side sloping up or bear strengthening position. That's what you're seeing. So Tesla over the next 2 weeks has a resistance right there. Even any retracement at 460, any upward movement has strong resistance at 460. You're still in bear territory. So we're in bear territory for this week. We're in stronger bear territory for the next week. The more fat you have on that candle between here and the distance where the candle stops, or not the candle, the box, is a stronger market. So here's smaller, here's bigger. So next week is a stronger bear market for Tesla. So unfortunately, we're kind of in this no man's land where the market needs to make a decision. Good thing for you guys, you have Rocket Scooter to see this. You can say, okay, market's at a standstill. Do I want to be the first person to the party? Or do I want to have a chance of getting the house wrong though? Or do I want to make sure I get the right house at the right party? And let me be just a little bit late to the party. Because the sell-off is huge. The rally is huge. So this is how I think about it. Does everyone see that? How long have I been trading overall? I made my first trade in 2010. I got laid off as a chemical engineer. That's what happened. Rip to my job. Had a limelight job at Dow Chemical as a reaction engineer. I ran their monomer reaction units for acrylic acid. We made a precursor to polyacrylic acid, which is the powder that goes inside of Huggies diapers. That's right, ladies. Line up. I used to make diapers. Let's go. Actually, I didn't even make the diapers. I made the powder that goes into the... Actually, I didn't make the powder. I made the liquid that turns into the powder that goes into the diapers. But hey, ladies love the diaper, man. Let's go. And so I did that for a while. Got laid off in the last financial crisis. Started trading in 2010. Yeah, dude, it's sexy, man. People love it. Yeah, I made this liquid that was like it went through stages, but the liquid we made was like this color. It was like this kind of orangey Gatorade color. And then we sent this to another plant across the street that refined it further. And it was like, once they refined it further, it was black. And then they sent it to another plant, and then they dried this up and turned it into a powder. And then they sent it to the Huggies, made it into diapers. That's it, baby. It's powder. It turns to a gel whenever it gets wet. Super absorbent polymer is what they're called. Yeah, that's what I did. So 2010. When did you start, Eric? When was your first trade? I started there 2010. Now I don't consider fiddling around in my 401k, which was years before that, as actual trading. My first actual trading brokerage account was 2010. And then of course, like I didn't go full time until about 2015. So about 5 years of kind of like, you know, figuring out how to do this. 2010, I was laid off. So for a couple of years, I was mostly struggling with full-time trading because I got a severance package and I got laid off, which is great. A lot of money for that. Well, for a, you know, 29-year-old kid, got a lot of money for that. And so at the time, it was good. And, but you know, it took a while to figure out. And I took longer to mature than most people. Here's the thing. In 2010, you didn't have a lot of trading teachers, trading gurus, trading YouTubes, discount brokers. The availability of information wasn't there. In 2010, I'm one of the first YouTube streamers trading futures. Myself and Trades by Matt were the two first futures streamers on YouTube, and Pat Weiland, the three of us. We're the three godfathers of streaming trading on YouTube. We both all started roughly about the same time. And so that's how long I've been doing it. There was nobody to learn from in 2010. Nobody to teach, nobody to follow, nothing. The streaming thing didn't start getting big until 2015, 2016. So the thing is like way back in the day, it's hard to learn. There's nobody to teach. You had to kind of like make your own path, which is kind of what I ended up doing. But from 2010 to 2015, I was bouncing around between like contract jobs to make some money, but still wanted to learn trading. So instead of getting like full-time jobs, I'd work for like 3 or 6 months, get a big payout, and then take 3 to 6 months off, then work again for 3 months and take a month off, then work again for 3 months. So it's kind of like that. Like I'd trade, go back to work, trade, go back to work, make 100K, go back to trading, go back to, and I did that for a while. And relatively like close to like 2015, I started catching my stride. I came up with the risk interval and I started doing a little bit better as far as consistency goes. I started trading futures, oil futures earlier than that. And then I started trading S&P index futures not long after. So that's me. That's my story. So about 2015 is when I went full time. That's been about 10 years. Wow. Hey, it's my 10-year anniversary. Let's go. But like I said, it takes a long time depending on your personality. And that's kind of the hardest thing to coach on. It's how long does it take to become a successful trader? These days, you guys have it easier than ever. I'm going to tell you, you have it easier than ever. You have micro futures. You have trader funding programs. You can go out there and make money risking nothing. Imagine every time in 2013, 2012, I want to trade. I gotta put 20K into a brokerage account, and I can only trade a couple minis. You know, it's like that sucks. And then you bust it out, and then you're, oh man, I lost 20K. What did you guys lose? You know, $69 for your eval when you bust it out. You guys have it so much easier these days. So the ramp up is much faster for traders. But the battle is not the availability of information, the availability of practice avenues, the availability of funding. The battle really is you. And it comes down to like how good you are at managing your emotions while you trade. How good is your ego? Or how good are you fighting your ego, not having to be right, learning how to take a loss and keeping your composure, getting back in. Like today, right? Did you see me flinch? Did you see me lose my cool? You guys all watched today, right? Did you see me? Okay, when I took a loss, right? Did you see me lose my cool? Did you see me go, I don't know what's going on? Did you see anything happen? I just waited. I planned for the next setup and I took it, and that's it. But that's kind of what it takes a long time to get used to doing that. And that's just practicing the emotional state. To me, I'm a robot. I don't sweat anymore as a trader. I used to sweat so much, not sweat physically, but like, oh, I'm nervous. What do I do? I'm never nervous. Like, I always know what's going on in the market. I'm never caught off guard. And when I am, I just sit out. The rare times I'm caught off guard and something doesn't make sense, I just walk away. But I've been doing it long enough to know when that happens. Why do I trade futures over options? Therese, great question. If you're day trading, you should always trade futures over options every single time, if you have the choice. You can leverage futures however you want, all the way down to nano futures where you take as little risk as possible. So you can trade very small denominations. Futures have tax breaks. They're taxed better for short-term capital gains. Options are taxed at your tax rate. Futures are taxed 60% long-term, even if you're day trading. So your effective tax rate in futures is like 20% less than options. So when you start making money, you're going to pay less to Uncle Sam trading futures. Futures has no account minimum, which is great as well. And no PDT rule, which you don't have to maintain a $25,000 balance to day trade. And options, you have to trade a cash account to skirt the PDT rule, which is what you should be doing anyways. Let me tell you guys something, options traders. If you go or day trading options and you are day trading them in a margin account, I'm going to drive over to your house. I'm going to break into your house while you're sleeping, and I'm going to throw hundreds of water balloons at you while you're sleeping because you're kind of a goofball. That's an active threat. I'm going to water balloon you until you change your mind. That's goofy. Margin is the silliest thing you can use as a day trader. Don't do that. Margin is the best way to lose all your money faster. You know, I still trade in cash account, my options account. Yeah, I know where you live, Brian. I've dropped you off before. I'll do it. Like, to me, margin is the worst thing that retail traders can play with. It's borrowing money to trade with. You're not good enough to do that. If you're not making money with your cash account, don't lose it 4 times faster. I mean, it's the silliest thing in the world. Don't lever up. And to this day, I still don't trade margin. To this day, I have an equation that lowers my futures risk where I'm almost like not trading on margin. You don't see me trading 20, 30, 40 E-mini contracts. I trade 2 and 3. I made $4,000 this morning in my Elite Trader Funding account. You know, my max position size on both of these trades was 3. That's it. 3. $4,000. You know, as an engineer, that was like a paycheck for like 2 weeks of work. Well, back in the day. It's 3 minis. You don't need to trade 20, 50, whatever. So options are good. The problem is, other than the things I said that I don't trade options, I mean, I don't day trade options as much. I swing trade options when I trade them. Bigger trades that I'm uncertain about the pivot, like right now when markets are collapsing, and I can identify there's a bottom within a week or two, I'll grab some call options that expire 4 to 6 weeks out, and I'll play the swing. And the only time I trade options is when I'm swinging. And you can see on my YouTube channel, I have a lot of days when I swung. I called the bottom in 2022. I made like 4, 5, 6-figure trades, buying NVIDIA, QQQ, JP Morgan, Apple options. You can go back. There's like videos on my channel, like my 1,300% gain on, JP Morgan. I'm putting like big, massive bets in, and I swing that way. But the thing with options that makes day trading hard is that options, while they do move very fast, futures, you get the same movement. So options like really affords no additional benefit, and it has Greeks, which makes the trade a little bit more complex. Greeks are harder to trade with because if the market goes nowhere, your options call or put that are out of the money still decay and lose value. With futures, you don't lose value because of theta. So the trade is mechanically easier as well. So tax benefits mechanically easier. Day trading futures is what most professional traders end up doing for their bread and butter, because the tax is the main reason, but it's easier, like for like. Does that make sense? So like day trading options is mechanically harder because you have to also trade with Greeks. It's not just, oh, the stock market's going up. Your option doesn't go up equivalently. Your option goes up at the rate of delta, which is affected by the multitude of Greeks you have. If the IV is higher, you're going to have less of a change. Or your IV is higher, you're going to have more of a premium inflate if your IV is lower. If the IV collapses, your premium is going to crash as well. If you don't break expected ranges, your premium is going to crash. There's all kind of weird things, Vega effects, delta effects that really make options trading hard to gauge risk and reward. With futures trading, I'm going to get 40 points NASDAQ on a loss to make 120 points or whatever. It's 3 to 1. With an options contract, you don't know how much you're going to make because you can't do a real-time differential equation to solve to figure out what the value of that option is going to be at the price the underlying is going to be at. Now, you can set your option to exit at any point that you want, but you can't say, I'm going to close my, like, okay, right now, it's the example is S&P is at 59.40. I'm going to close my call if S&P goes to 59.60. You can't physically calculate the value of your call. Did you know you can't do that? Because it's a differential equation. You can't mechanically, or you can't analytically solve those in real time. It's an iterative differential, or iterative solution to solve a differential equation. So you can't even say, oh, when it closes, it's going to be a factor of all those Greeks, right? So you never even know how much your option's going to go up in value unless you have a stop loss at exactly a place in your options trade as well. But when we're trading, we're not watching the option, are we? We're watching the S&P. So like, okay, let me buy some calls here. If the S&P goes right here, I'm going to exit my option. Well, you don't know what your options value is going to be at that point. So it makes it a lot harder to plan. So mechanically a little more sophisticated and complicated. I hope that makes sense to us. But options are fantastic for swing trading, because the benefit I tell people of options is that if the market's like selling off really hard on a longer scale, and I somehow like, let me go ahead and do it right here. Let me get you like, let me do a chart right here. So an example is I'm going to buy SPX. And I know people that make a living day trading options. So I'm not out there like, you know, talking smack about what my friends are doing. They do it, but I'm going to tell you, at the end of the day, I don't do it because I make more money trading futures like for like, because Uncle Sam takes 20% less, or takes half as much on the taxes. So for the most part, I pay for every 100K, I'm putting like 20K back in my pocket. So if an example is if the S&P is like falling, and somehow right in here, I detect, okay, this is likely a bottom. I might buy call options just to retrace this down leg for like 6 weeks out. And usually trades like this on a month scale, I usually make enough to buy a house. And it happens, you know, once every 3 to 5 years. And I'll swing trade options. And the reason why is because I'm not looking for direction. Now, I'm not looking for a blast up. I'm looking for overall direction in the future. It's an A or B decision. Are we retracing or are we not retracing by this point in time? If I get all the signs lined up, I usually give myself 1 to 2 months of lead time to where I just set it, forget it. And if it goes, I've made 10x with very little effort. If it doesn't go, I lost it all. So the idea is an option is low effort swing trading. Set it, forget it. I know I'm going to lose all if I'm wrong. And if I'm very convinced on the trade, I'll set it and forget it. And then I'll just day trade the ups and downs along the way. So the option is for a slower moving ship. And that's when I do options. When I'm okay, this might be the bottom, but you know, bottom of selling is usually very volatile days that are very crazy and very all over the place. Just like today, right? So today is one of those days where the S&P and NASDAQ are all over the place, right? Bottoms. Now, I'm not saying this is the bottom. Don't quote me on this. I don't think this is the bottom yet. We're at a bad spot. But bottoms look like this. Did you guys trade last night? Market's just inching, and then we broke, and then the market just fell really quick, and then jumped right back up, and then rallied for the night. And then here it fell really quick and jumped back up. The day trading is nightmarish. But if I was swing trading this, you know, I'm still kind of going up a little bit. So I give myself enough time to avoid all that volatility, and that's why I choose options when I do. Does that make sense? Hopefully that helps. Helps understand that why I trade options. Very important. Taxes are better. You can Google the 60-40 rule. Taxes are better in futures. Futures has small denominations where you can trade with just a couple bucks. There's no account minimum on futures, with the exception of what your futures broker requires you. It's not $25,000. It's usually $500, sometimes even $100, like with the exception being AMP is a $100 account minimum. There's no PDT rule. The market's open 23/7 as opposed to just U.S. market hours. You can trade index products, commodity products. You can trade treasury products. There's no Greeks to mess with. But the taxes being the main reason day traders up and down trade the volatility with futures. Taxes. Once you start making money, it sucks when you pay your tax bill. And you're just like, oh, where did it all go? So in futures, they have products called micro futures, which is just trading a couple bucks at a time. Look, let me do something. Let me show you what micro futures are like. You ready? MESH5. I'm gonna throw a random trade on here with my account just for you, just to show you. I'm just gonna again. Don't do what nobody do what I'm doing. I'm gonna randomly long one micro future. Look, that's how much money up or down I'm going with just one micro. Look at this, $1. The market's bouncing all around, up and down, $2, $3, $5. Right? You see how I'm not going up and down hundreds or thousands of dollars in this trade. So micro futures is a denomination of playing like with just a couple $100 a day. Nano futures is a denomination with playing with like tens of dollars a day. So like an example with the S&P, again, I'm not a financial advisor. I don't have a license to educate or teach people on which broker to use or what to trade. So like legally, I can't tell you what to do. I'm just teaching you what I do. Every 10 points on the S&P, an E-mini is worth $500 of loss, okay? A micro is $50 of gain or loss for every 10 points, and a nano is 5. So So you see how I'm up 20 bucks? Woohoo, right? So one micro, like I'm up and down 20 bucks. I'm not really risking a lot, right? So you get that. With cool thing with futures is it's just straight trading. There's no decay, there's no anything. And you're betting on the S&P just like you will with options. The commissions are very cheap. And I could trade micro futures, which is just up or down 10 or 20 bucks. Now, again, that was a lucky play. I don't really actually want to be in a trade, so I'm going to close that out. But that's basically what a lot of futures traders do when they get started. And they also use trader funding programs, which we have an affiliation with a couple of them, that you don't even have to trade with real money. You can just trade the evals to try to get funded. So micros are slightly more expensive when you trade on commissions. That is the one downside to micros. Yep. Therese says, like to start day trading before you work, but also don't have the capital to swing trade options. Where would I consider starting? Now, again, I'm not a financial advisor, so I can't like ask your questions like you're asking me what I would do. I can answer them. Like legally, I can't provide you investment information or investment advice, which that kind of qualifies as that. So I explain from my personal experience, please don't go out there and do what I say. Like really do your own due diligence and homework and like call your broker and stuff. A lot of times they don't educate you as much as someone like me could. So this is purely for educational purposes, right? Yeah, if you guys ask me like, what should I do? Should I long here? Should I do this? Like legally, I don't have any licenses. I'm some fucking random schmuck on the internet. Don't take advice from anybody on the internet. I don't care how many cameras they got on them. But, do your own homework and, ask around. But it's good to ask around and learn from other traders. From like my perspective, what I've dealt with as a trader. I love sharing with people because I've been through so much. I kind of have a wealth of experience of dealing with every piece of what can happen. So, where would I start as a trader? If I was trading and I was trying to get started, I would start with the trader funding program. As a matter of fact, some of them, it's a place where you can trade. Hold on, let me write this down. All right, let me explain something to you. All right, let me write this down really quick. So a great place to start as a new trader, which is something that just recently became popular in the last 5 years or less, and kind of mainstream now in the last couple, are trader funding programs, right? And trader funding programs are based in the futures world. And what they are, people call them prop firms, but you should call them trader funding programs, what they are. A prop firm was a firm that would sponsor a trader and give you money to trade with. If you were good enough, they let you trade their money and you keep a portion of the prize. The thing with prop firms is that you should have to qualify. You'd have to know somebody to get you in. You have to do a test and get in and do whatever and earn that spot. But you don't have to trade your own money, which is the good part. Now, retail prop firms, i.e. trader funding programs, became wildly popular since COVID. And so the thing with those is that it's kind of a similar thing. You pay money to trade in what's called an evaluation period. They all call them something different. But evaluation period is your sim trading, your paper trading. And if you pass the test within whatever the parameters are set, usually it's like make this much without losing this much, without draw down this much within this many days or whatever, or trade this many days, and then you pass the test. And if you pass the test, we upgrade your account to being funded. And then you go trade, and then you make money immediately after that. And you only risk the monthly cost it takes to do the program. And so some of these firms, the different accounts cost, 50 to 100 to like $500 a month, depending, to get into that program. But a lot of times they have sales. Like right now, Elite Trader Funding has a sale. Apex has a sale for 90% off. It costs you $20 to get an eval account that if you pass goes funded, and you immediately make money on that funded account if you stay alive. So getting started trading, these are great programs to get started trading. Not because of payout, though I'm different than everyone else. They're not great because you can make money off of little investment. They're great because of the following thing. Trader funding programs are great because there are 3 different ways to trade. You can paper trade, you can real trade, and for the longest time, there was nothing in the middle. The pros and cons between paper trading and real. Okay, paper trading is cost, right? Cost, 0. Real trading, cost, high. You have to put money in. You have to deposit your hard-earned money into that. Risk in paper trading, 0. Okay, not bad. No cost, no risk. Awesome. And the real account, risk is all. You could risk losing everything. Actually, in a futures margin account or any margin account or leveraged account, You can actually lose more than all, which is even crazier. You can owe money after you go below zero. Don't let that happen. So cost, risk, crazy. Reward, right? The next part. Paper trading, also zero. In the real account, reward is possibly infinity. You can make infinity dollars, right? So the problem is the experience that you gain, okay? In a paper trading with no cost, no risk, no reward, you're gaining no real life experience. It's like shooting a paintball gun against a wall, and then the very next day, they go, here's your rifle. Go to war. Good luck. That's not practice. You're not practicing what a real gun feels like. You're not practicing what happens when you're trying to shoot a real gun and someone's shooting at you, your hands shaking like this. They're not getting any real world experience in paper trading. You're going to get to the real trading account, and the first trade that goes against you, you're going to pee your pants because you didn't practice anything. So the experience of paper trading is absolutely worthless. It gives you absolutely nothing other than where are the buttons and how do I push them. The experience and what you gain as a paper trader is absolutely nothing that prepares you for real life trading. I know where the buy button is. I know where the sell button is. And the downside, there's actually downside, not just the worth of the experience, but there's actually downside. There's something that harms you psychologically. There is a psychological damaging factor of paper trading that a lot of these gurus don't talk about. Psychologically, it gives you false confidence. And this is the worst thing that paper trading will do to you. Paper trading will solidify in your brain a sense of confidence that does not transfer to the real world, okay? In real trading, the experience is priceless, okay? But it's expensive experience, okay? And in real trading, the psychology that you get from it, what you learn from that is irreplaceable. It's the best, okay? So the thing is that when you're trading, why are trader funding programs great? Well, let's think about it. This is the best education you get, okay? Experience or education, put right here, okay? You get nothing out of paper trading. Y'all see that? The thing with trader funding programs is it's a new middle ground that's amazing. The cost is low. It costs them nothing. Right now, you can go get an ETF account or Apex account for $20. The risk is $20. It's equal to your cost. Low. Whatever you're paying per month is your risk. You just lose that. That's it. The reward, also infinity. You can make infinity dollars from this. Being good. Now, they're taxed a little bit higher and all kind of other things because it's 1099 payouts, but forget about all of that. There is one thing to take from this. The education experience is actually great. You know why? Because people don't think about this, but you're actually taking real risk to get real reward. So the difference is the psychology is going to give you a real experience, not false confidence. And that's what makes trader funding programs amazing because it's low cost, low risk, potential rewards. So we have real risk, real reward. You're paying for the experience. It's almost like sim trading with an asterisk. This is sim plus is what I'll call it. It's not real trading, but it's real enough because you're really paying for it and you're going to take it seriously. If you're losing a trade in a paper account, you're going to be like, whatever, I'll just reset it. If you're losing a trade in your funded account that you built up for a week and you're finally funded, you're going to be sweating it out because there's real potential to win something. You're getting emotional experience. Does everyone understand that? Trader funding programs are a magical place to start for new traders because of that one thing. Is the first time in the history of markets that a retail trader has a real experience trading and they don't got to risk every dollar they have to do that. You have some skin in the game, as somebody just said, a tiny little bit. It's like paying for practice. But instead of going to a paper account, which is you going out to a baseball field and somebody throwing a wiffle ball at you, you're going over here and you're actually paying for Tim Lincecum to throw 105-mile-an-hour fastballs at your fucking face while you're trying to hit the ball for just paying $20 to do it. You're going to learn real baseball here and not learn it real there. So that's the difference, okay? You don't really want to be in a spot where you're not gaining anything, getting false confidence. Oh man, I'm so good at this. Let me jump to real money. You're not gaining that experience. And I always use the military equation. Once you go out there and real balls are whizzing by your head and hitting that catcher's mitt, sounding like two bricks smashing together, you're going to feel nervous when that ball's coming by you. And that's the practice to really hit a baseball. You're not going to go out there and, I hit tennis balls, hit wiffle balls and jump into baseball. The first pitch that whizzes by your head, you're going to piss yourself. I mean, that's kind of what it's like. So in trader funding programs, you actually get a decent experience for low cost. It's pay for practice, but it's pay for like simulated practice in almost a real environment. And they're really, really good. Like I said, we work with Elite Trader Funding. They're great. We have a code for Apex, It's a great place to get started. It is futures. You are trading simulated futures. So you're getting the real futures experience, at least, of what it's kind of like trading real futures. You guys like that rad analogy? That's kind of what it's like. Having any skin in the game makes you take it seriously. And there's a rule of this. There's a value rule, and I forget what the name of it is. But it's like when you have something that you want to give away, if you I have a book, guys, everyone go download my free ebook. Okay. Most people are going to download it, but the majority of people aren't going to read it. But if you say, hey, can you guys all support me and download my ebook for $1, just $1? It's practically nothing. Just support me. Those of you who do download it, there's a higher percent of the pie that will read it. If something is free, people will get it. It's a perception of value. Majority of people will get it and not read. Okay. I'm sorry. We'll read and not read. Okay. If you charge anything for it, I don't care what it is, charge anything, $1, you will see that pie gets massively bigger just for no difference other than somebody paid for it. When you buy something, you perceive it to have value because you paid for it. Money is valuable to you and you transfer money to get something. Therefore, it has equal value. $1, $10, $100 doesn't matter. More people will engage with your content if you charge for it. If it's free, people will take and discard. You know why? Because free is perceived as worthless, as valueless. It costs you anything, so you're not going to take. How many times you get free shit? Somebody says, "Hey, come into my bakery for a free donut." You're not going to drive across town for the bakery, right? So the idea is, maybe you would, even $1. There's no difference in the demand. They're both practically free, but the difference is more people will engage and participate. If they bought something, they're like, "Oh, I paid for this. I got to kind of use it." So the idea is that when you're paying for something, you're going to find it more valuable just psychologically. It's the perception of value. So the reason our courses aren't free, they're $1 a day, is that same philosophy. If I made my courses free, which I wanted to do, 90% of you fucking knuckleheads would go through a course, then go out there and trade, and then say Rocket Scooter sucks and make bad reviews. The idea that I charge $20 for the courses, $1 a day, is why we have 5-star reviews. You guys take it, the people that buy it take it seriously, and then they get something out of it. I'm a chess player, guys. I think like 20 steps ahead all the time. I want it to be free, but if I made it free, you guys wouldn't take it seriously. Y'all are a bunch of degenerate knuckleheads, fucking gamblers. Y'all are going to go in there and screw up and then blame me for it. I don't want that. If I make $20, you're going to go through every class. Pay attention. You're going to take it seriously. All right, so you're not making any money off of that. All right, so let's talk about, you guys are asking me what I'm saying. I had some of your comments there. Third time today, close your position minute, jump for like 5 points. Somebody's asking, are we on the West Coast? I'm in Central Time, whoever's asking. One of the classes, Jerry Westbrook's 3:30. We're doing a Zoom call. 3:30 every day for the Zoom call. Great analogy. Market opens, losing money. How are you feeling about long here? No. Typically, and this is how I normally trade, typically when you hit your DD band, we usually say day is over. Once you get a trade to DD band, the day is over. That trade actually took place overnight. So once the market has pressed to the best, when we talk about our exit target classes, when you're inside of these bands, the bands are the best exit targets you have. We had that class. Did you guys like that one, by the way? So I don't usually trade. I usually have this rule. I say lightning doesn't strike twice in the same place. So the idea is to trade from here to there. I don't take that trade again because it already took place twice. So today, any setup will be a DD float trade probably from there to there if I get it. So I'm not taking long trades for this. As a matter of fact, my belief today is that we are closing down in here, if not lower. So now I've abandoned the idea of a bull run, but I will likely take a bull dip off the DD band at the bottom. iDoc said he never felt like that. Isn't it true though, right? When you buy something, if somebody gives you a free taco, it's never going to taste as good as the taco you paid for whatever reason. Your brain just loves something is more valuable to you if you paid anything for it. There's a whole psychology. I remember reading a book that was talking about that a long time ago. So R1, not trading here. Been loving your content lately. Very informative, precise. Precision. My little engineering hairs on my arm just tingle. And you say the word precision. That's exactly what it's about. Precision is repeatability. Engineers, we don't like to, waste their time and effort. We're kind of like, mildly on the spectrum mechanical robots that love precision. So you're correct. Jack says he isn't wrong. LOL. Yep. So I'm not going to check the SPY MHP. No, I'm not. Hold on. Wait. You don't want SPY, right? Oh, SPY. Let me go there really quick. Oh, well, let me think. Okay, let's look at the data here. I thought you meant MHP on futures. Okay, so 90% of days are likely to close on the same side of here. Am I going too long from here to next resistance? When resilience is less than 0, that's resistance there. So the R&R on this trade is roughly 25 points with a 10-point stop. Is that trade worth taking? It's not worth taking. In the environment that we've been seeing some flushing. What I'm going to actually do today is I'm going to miss out on this trade. I'm going to let it fall. I'm going to let it recover, and then I'm going to take a long on the recovery. In volatile environments, I like to do that. Yes, it's a decent long from here, but I'll exit there every time because the RAS is less than 0. The white resilience is a tiebreaker. It's a gap fill predictor if you've never seen it. The S&P opened here and closed here, okay? We gapped up. At the half gap, which is this white line right here, this white indicator, dashed line, is telling me that the S&P is destined to be down in here. So any long press I get exits right there if I did take the trade. Now, with this amount of weird, choppy behavior and the fact that VIX has broken MHP, as you see right here, this is an irrational signal. Already, any trade I'm taking, I'm going to trade with a much smaller piece of, a much smaller leverage. Much smaller position because VIX is now irrational. So in this particular setup, when VIX is broken through, and anytime you know that the VIX, and we talked about this in our exit target classes too the other day, anytime the VIX gives me a caution, I always step down on my trade. So whatever size trade I am trading right here, I'm going to trade it even smaller because of the VIX problem. So QQQ has a hedge break. S&P has hedge break. I mean, IWM has hedge breaks. We're in an irrational market right now. So what I like to see in irrational markets, I'd like to see this collapse out of here and then recover, and then I'll take the long. We'll let it overshoot, right? We're trading above triple B, so overshoots are pretty common, right? So, New Year's Eve. Oh, shit. The New Year's Eve giveaway. Yes, I completely forgot to do that. I completely forgot to give you guys credit. All right, giveaway. I'm going to message you guys. I'm not. Okay, look. I'm not going to lie, guys. I'm always honest with y'all. I'm not going to lie. I got it here. I forgot. I love you. So the winners were Embassy 5, Future, and Felios. I got to send you guys messages with the codes. I forgot because it was New Year's Eve. Then I went out and I got fucked up. Woke up at 4 o'clock the next day. I'm embarrassed. I'm ashamed. I forgot. I'll do it after the stream, though. At a house full of people, we all passed out in various places in the house. I totally forgot. Yo, oh, by the way, yeah. So I think you. I'm not 30 anymore, dude. I'm not gonna lie. At 4, it was like 4:30 in the morning, and I was like, The girls wanted to stay out and party, and I was like, I think I'm gonna go home. And they were like, "What? It's only 4:30." And I'm like, I don't know. I'm not 30 anymore. I know. Let me show you guys some New Year's stuff. What I did. It was really fun. Went to CL. Hell yeah, CL's the bomb. Hold up. Hold on, let me make this where it's not like super loud here. Oh, hold on. Oh, that is like super loud. Hold on, how do I turn this down? I'm about to blow out your eardrums. How do I turn? Oh, let me turn the volume down on this. Yeah, let me show you guys our New Year's. It's this Logic Club in Houston called CL. Amazing. It's such a fun experience. Dinner table. We took iDoc's parents out and one of our friends. Who's more like family, but like one of our really close friends. So the 5 of us went out. Her parents are in town from Vietnam. So like we always like showing her mom a really good time. Her mom's such a fun person to hang out with. Dad's a fun person to hang out with. So this is CL. Oh wait, actually my things are all out of order here. Hold on. So iDoc, hold on, let me do really quick. iDoc talks mom, her dad, she came out. They came out, we had a good time. Her mom is like a famous singer in Vietnam. So she's like a Vietnamese Celine Dion. So she's like, you know, super bougie and people recognize her even in Houston. We walk around town, they come up and shake her hand and stuff. But she's always down for a good time. There's a big Poseidon statue in the middle and you got like, you know, belly dancers and fire breathers and stuff. It's pretty nice. So let me play you. This is when we had, pretty fun. There's me. So we had a good time. So if y'all notice any Vietnamese people here, you might notice us throwing the South Vietnam flag and then Ham Choi. It's like basically like means like to get lit, like to get fucked up. So that's how cool iDoc's mom is. Really fun. So we had a good time. You know, they drop streamers, there's balls, we had a good time. It was really fun. There's a saxophone player, violinist walking around. This is one of the after hours clubs we went to. It was kind of fun. And these are just some extra little things here. Yeah, there we go. This is a great photo. That's all of us. Yeah. So so they had like dinner and it was really fun. And then they do fun little things when they bring you your food. It wasn't really too bad. It's super inexpensive. Dinner was like $150 a person, which is in this day and age pretty much like a normal dinner, right? With inflation and all. And there's us dancing, having a good time. Y'all went on Bourbon Street? Wait, y'all went out on Bourbon? So anyways, that was us. We had a fun time. It was really cool. Our parents had a blast. And then afterwards we went to this, our buddies own this other club. I tweeted about it. So we went to this after hours club. It's brand new. It's just now opening. It used to be called Clay, but now it's called Encore. And they have, our friends are the owners of it. So we got hooked up when we went there. We got a table right by the DJ booth. It was cool, man. I was starting to get tired though. It was so packed. Like as people started piling in, like we got there early, like at 2 something, and then like by the time 4 o'clock ran around, it was just so packed you couldn't even get in, you couldn't even get out. So we were like up against the wall behind the DJ booth, and I'm like stuck there like this, just standing there. My buddy next to me was like the head of the table, and he's all like standing there. He's looking at me, and I'm looking at him. I'm like, man, I can't even breathe. He's like, this is crazy. We need to get out of here. So I kept like leaving to go get fresh air because it was just so packed full of people. But it was actually kind of fun. So, I had a good time. But 4 o'clock rolls around. I came home and passed out. It was too. We had a good time. Went to IDOC in my first dates last year was Christmas time. So New Year's is kind of like a fun time for us. Every day's a master class. Oh, thanks, man. Appreciate it. You got a sweet birthday present. Yeah, I'll send you a message with your code right after the stream. I'm sure Bourbon Street was crazy. We go to New Orleans a lot too, so I love it out there. I can only take so much bourbon though. And I know it might sound crazy, but I like to go to Bourbon Street in the daytime, and I like to go to like Frenchman Street at nighttime. That's more my scene. The nighttime like club scene and bourbon's not my jam anymore. I like to go listen to live music, and so in the daytime, bourbon's chill. Like I like going to hit up all the bars in the daytime. Party like the Diddy's hilarious. Okay, so the question is, would I take an MHP long right here? This market, I'm going to tell you the behavior of how this market's been buying and selling. It does not feel good. This kind of market with this kind of tankage does not feel good. It does not feel like a strong bull market. With resilience being negative, we're not getting any love from the stocks. DD ratio is still greater than half, so it's not a terrible idea. But even scalping to here, I still feel is risky. I might put like one small contract on it. And while I've been thinking about it, I'm just not convinced because everything is just, with VIX being the way that it is, I'm a little nervous. And QQQ is broken monthly hedge, which is not a good sign. So I'm actually kind of avoiding the setup. So I don't know. There's a good trade. If there weren't so many things wrong in the market, I'd take a small stab at it, but I'm kind of convincing myself to stay away. But it's already made $4,000, so I'm like, I mean, that's a good day, right? VIX is broken MHP, Ian, so you be the judge of that, right? It's not the best sign in the world. MHP breaks are highly irrational. VVIX goes through the roof, which is kind of why the market's like doing this kind of stuff. Not fun to trade when you can get flushed out so quickly. So NASDAQ MHP break, VIX MHP break. It's just too rich for my blood. You know what I'm saying? Plus I already have, I already made 4K, right? So like, I'm like, do I really care to make any more? I'm trying to secure like $20,000 payout on Friday. So I'd rather not risk it too much. Is there MHP float like in DD? There's not. We don't have a float rule for that. The DD float rule is really enhanced by the DD ratio. So there could be MHP float because of the resilience, the yellow one, but we never really explored it. So I don't know the stats on it. Great question, though. What do you guys think? What do y'all think? Market up, market down? Are we losing structure? Is market dead today? Honestly, this is one of the weirdest. This is the weirdest last 2 trading days, especially if you guys are just now tuning into the stream. This is probably the weirdest market I've seen since summer of last year. We had the Fitch downgrade. Markets just turned around. It's got to be the weirdest market. The look and feel is not that good. I'm not going to lie to you guys and give you guys false hope. I'm actually kind of worried about the market. That's why I tweeted what I did was that I'm kind of done with the bull market. If you guys didn't know, the precision I had on that was on point. This is like the history of my. Let me go to blank chart here. The reason I tweeted what I did was that very reason. I'm definitely kind of done with the bull market, and I made that tweet. Like, remember, I was bullish all through here, October. This is also, I'll show you guys. You guys remember, I famously called the bottom on October 17th. And I said, we bottomed for the year. We're done. And, here, and I said, we're rallying through the summer. And then we rallied through the summer. Fitch downgrade happens. We kept rallying. I've been a bull since here. This is 3 years in the S&P almost. Or 2.5 years, I guess. 2.25 years. Bull, 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 bull. And for the first time in 2 years, I made the tweet. For the first time in 2 years, I'm finally bearish. And I said that right there. That's it. That's it. Market died right there. And I made that tweet, and that tweet went pretty big. A bunch of big influencers were like, when Matt talks, you should listen. Because they know I don't say this very often. I don't say markets bear, markets bull. I don't make the big point the fence Babe Ruth calls that often. It's every year or two, and I do it. It's big. I do my research. And right here, let me do my tweet that I showed you guys. This is December 19th. Oops. The reason I did, I'll tell you guys my reasoning for this. So from October 17th, 2022, that was a typo, not 24, until 12/19, I was a bull. Called the bottom back then. And again, I had like mush brain from the flu. I even drew the wrong chart. I had to correct it twice. From here, when I called the bottom and I showed the tweet I did to there, I was bullish. And I said, I was a bull, called the bottom back then, and now feeling this is the top for the year for now. And today, for the first time in over 2 years, all of Rocket Scooter signals for the greater market are bearish. I'm only a bear when they are bearish. And when all three of them are bearish, and it could be for a day or for a month or for a year, I take bearish just one day at a time. Today is day one of being a bear, and I'm going to only be a day late to the next bull run. Good luck, my friends. And I made this tweet on December 19th. So all the years, y'all about precision, boys, listen. All the years, you never heard me say, I'm bearish, I'm bearish, I'm bearish, I'm bearish, I'm bearish, until right here. That's the day. Precision is everything in my world. And it got pretty big. You got some people coming in here. Jada, and when Matt speaks, listen. Like we do it's not just picking shit out of a hat. It's very seriously. You know, a bunch of people there. Pay for gains, you know, like friends that I know, they're like, when I made that tweet, my phone was blowing up. People were texting me, Matt, are you sure? I'm like, yeah, like basically my influencer friends, people that run trade rooms, people that run big communities. They're like, yeah, I was getting some weird bull signals, but you know, Rocket Scooter stuff is very sophisticated. And if it's saying bearish too, you know, they're like, are you sure? And I'm like, yeah, that's it. So it's kind of the sad part. I hate bear markets, are the worst. Is all this taught in courses? Yeah. Yes, sir. You can actually, they're all in recorded courses. So when you sign up, the courses are all there. You can watch them at your spare time. At whatever your leisure, yeah. This is more true than anyone who realizes, Matt. So like it takes a lot to convince me to flip my mind. Every bear month or two, I'm kind of holding my breath. I'm like, yeah, it's like, you know, it's just a bear month. This is a bear market and we're entering one. And I was only a day late to the bear market. That's the best part. The bears are like, herp, herp, herp. I told you so. I was right. I'm like, yeah, but I'm a day late. See, the thing with bears and bulls, the interesting thing is that a bear is going to be wrong for a very long time. And then they're finally right. And they're still upside down. But then they're like, I told you so right here. Look at that. I told you so. And I'm like, yeah, whatever. I'm bull, 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 bull. Finally take a big loss. I'm like, okay, I'm bear right here. I'm a day late to the bear party, not a year early to the bear party. That's stupid and that's losing money. So yeah, I have to be convinced to flip my whole brain around. And then I'm using what's called our greater market, which is our tool set to identify what the greater market is. Let me explain this to you really quick. Greater market is 3 indicators that show like breadth and all kind of stuff all wrapped up in one. The first thing is the market cap of stocks. 65% of market cap, we call it the DD, which is the bull bear bias. If it's greater than half, it means 50% or more of the market cap in a stock is in a bull zone. That's actually bullish for stocks. It means stocks are correcting in a greater bull market. So not all the stocks are bearish, just 40% of them are bearish. So the idea that if the sum of the stocks are market cap or in a bull zone, they're going to get positive or long bull delta hedging, which means there's a slight little bit of bull pressure on them. You know what delta hedging is, right? If you sell a call and that stock and the underlying goes up a little bit, you got to long that stock too at a rate of the delta. Because somebody exercised against you, you owe them that stock. If they're like, I bought the call, give me the stock, you have to have it. Or you got to go fish it from the market. So what call sellers do is they long the market according to the delta. And so as the market goes up, they're forced to long a little bit. That's what this DD ratio is showing you. There's a little bit of forced longing due to delta hedging on the underlying stock. So it means the stocks have like a little bit of wind blowing them up. Even though it's falling, it's still kind of catching a slight bid from the hedging. And as you see, the stock market's not completely collapsing. If you're trading futures, S&P futures, or SPY, you kind of need to know what the stocks are doing because it's the underlying assets inside of that basket for that vehicle you're trading, right? So the stocks are really good still. 50% or greater is great for the stocks. The stocks don't look so crazy. The other thing is called monthly hedge pressure. This is the maximum gamma of options sold to dealers. The options, the sold options, maximum gamma exposure of the dealers who sold those. So this is their own delta hedging and dealer to dealer trades. It's a whole different thing, and it's gamma max, which means it's maximum order flow due to hedging. Anytime you get close to MHP, there's a volume spike, as you see right there. It's predictable. We can predict high volume due to market maker hedging. This is the engineer and me come up with some really solid, sophisticated stuff, okay? This is high volume, and MHP has a stat where 90% of days will close on the same side. It is a ridiculous amount of volume it takes to break this and capitulate. If that happens, you will see the market flip shit and fall apart. Let me show you how much volume you get just on futures alone or SPY alone. Do you all see that right at hedge pressure, there's a massive amount of volume floating it up? That's the resistance volume. Imagine what you see if this breaks and keeps going down. You will see volume spike, volume spike, volume spike all over the place as markets are falling because you're seeing people capitulate and flip. That is a break point of the market. And when the break point happens, volume just goes crazy, okay? So MHP breaks are no joke, and it's part of the greater market. As you see with VIX, I'm not going to lie, VIX open here. And in this environment, we broke through MHP. Don't let me be the first to tell you that irrational behavior can be predicted. Do you see those crazy fucking volume spikes everywhere? That's because of VIX getting squeezed. People are like forced into a trade. So this right here is why breaking monthly hedge pressure is a big deal. Do we all agree? Can you guys all see this? Typically, volume has a nice clean profile. Big volume at the start of the day that kind of like dies down, and then big volume at the end of the day, right? It's nice and clean, usually like a profile like this. However, when the market structure falls apart, it's erratic. Can you see how the volume is like all over the place? And while it is decaying, the moment you break through, there's like this weird spike and this weird spike and this weird spike while volume is trying to decay. Do you see this? You are now finding market maker capitulation or margin calls on the other side of the trade. The actual underlying traders have margin calls. Thank you, IDOC. So irrational volume causes irrational choppy behavior. Look at the VIX is all over the place and no longer trending. So we even give you a red alert that that's happening to know that you have irrational, non-clean trading markets. So MHP is such a big part, monthly hedge pressure, because it's the monthly options. Monthly options typically held by institutional position holders. So, institutional long and short position holders. So essentially like your 401ks, IRAs, things like that, are longing stocks for long periods of time and buying monthly options so they can stay in the trade for months and quarters so they can collect dividends, right? So when SPY itself, we just look at SPY, it's the most important one, is above its own MHP, and it's getting delta and gamma hedging on its own monthly options, which is the main structure of the S&P market. One of the biggest things you can do is ask yourself, is SPY above or below its own monthly hedge pressure? And right now it's above. As a matter of fact, 90% of days, SPY will stay on the same side it opened at because it takes a ridiculous amount of volume to break through it. As you see, there was a volume spike even when you got close to it. Crazy, right? And if SPY were to break this, you start to see like crazy volume spikes all over the place out of nowhere. This is the market getting surprised and flipping out of their positions. So far today, 2 of the 3 greater market signs are good. The last one is monthly maps. I'm teaching a whole class on monthly maps, and that forecasts the future. It shows you the options risk distribution over the next X amount of time. With the index products, we go out 6 months. So SPY, let me tell you what 6 months looks like. Okay. Ignore the lines on the chart. What you care about are these boxes. And let me get the guide for you. Monthly maps is a future looking thing. It looks into the future and draws it out for you. I think my platform just crashed actually. Hold up. it's not looking at price action. It's just looking at options, showing you how the risk is distributed. So you do 4 things with this. Yeah, it did crash out. Let me reset this. Open that up one more time. All right. So monthly maps is showing you how the positional layout is in the market. Okay, so I'm going to show you this really quick. I can turn off all my drawings, I think. Ooh, very nice. Oh, but it takes those off too. Hold on. Oh, perfect. Okay. All right. I love that feature. Okay, so let me pull this up here, and you guys can see kind of what that little guide is. What you want to see, and this is plotting all the way out until March, okay? So December, so that actually is 3 months. So here, we care about the distribution. So you have light gray and dark gray boxes, and they're corresponding with the actual bull and bear structure. And this is the easiest way to read it, is you're going to kind of like draw a line at the bottom of these dark grays, okay? And as you see, the dark grays are sloping down. Right now, we're kind of trading in between. Actually, let me make this a little bigger so you can see it. Let me do this again. Oops. So right now, the question is, where are we right now? We're kind of in a bull, then bear, then bull, then bull, then nothing, then bull, and then it gets bull for a while. Okay, when this line is bull for a long stretch of time, which is basically the second week of January, then this price is actually bullish in a week. If we stay here for a week, it's going to recover if we don't continue to fall. So this could support out, which is good. Monthly maps have 4 criteria, 1 through 4. And number 1 is, where are we? Right now, we're kind of like not bullish for a week. So we're kind of like transitional. And then 1 week, it actually goes bullish again, which isn't bad. Maybe a bull run. Number 2, it's how the bull-bear boundary is changing over time. Liquidity is in between where bulls and bears are, is where liquidity is. And so where is that liquidity moving to? The bull side is doing this, and over time it's going like this. When the bull side is sloping down, you actually have longs accumulating. People are going to be buying the dip all between now and January, February. So at some point, this market is going to hook up and have some good bull runs in it. So there's actually bulls waiting to buy as early as next week. So after today, I think tomorrow or the next day, we could turn around and rally and things clean up. So bulls are waiting to buy even here. Okay, there's support here 3 days from now, 4 days from now, 6 days from now, whatever, you know, all. And then out here, it's bull support for a long time. The bear side sloping up 1, 2, 3, 4, 5 days, or 5 trading days through the first week of January as well. That's the scary part. There's resistance to upward movement because you have a bear pressure above where you're trading for the next 2 weeks. So the problem is any upside movement has bear pressure, and you're seeing that. You're not seeing a nice clean rally. As a matter of fact, today's upside movement had bear pressure 2 different times. Multi-map is telling you to expect that. That's why I'm getting in and getting out. I'm not saying this is the rally. I clearly have evidence that the market is structured very bearish. As a matter of fact, that doesn't go away until the 15th of January. That's January's expiration. So unfortunately, bear resistance is a ceiling on the market. Do we all see this? So there's a ceiling in the market at the top of these bear zones right here. So the S&P is not breaking out anytime soon, at least for a month. And that's how I do this. And what is the bull side doing? Is it sloping up or sloping down? Well, if it's sloping up as it is in the next 2 weeks, bears are shorting more. Your bear resistance comes with increased shorting pressure, okay? For shorts, because these puts are in the money. As they become closer to expiration, they're going to be shorted on even harder against that rapidly changing theta, right? So you know how that works. It's just the maps. And the last thing is the volatility. The space between bottom of bull zone and top of bear zone. And as you see, when they're inverted, when a bear zone is on top of bull zone, it's a very volatile environment. So bottom of bull zone is here. Top of bear zone is here. The volatility is the expected range, okay? The market can get really nasty with big weeks and days spanning 600 all the way down to 570. There's 300 points of possible volatility in the SPY over the next week and a half. So number 4 is volatile, okay? When you add all of this up, it's maybe bullish in a week, but still volatile and choppy right now. So monthly maps on the greater market, I'm going to come to the conclusion that it's not bullish for breakout just yet. So we all learned something today? Monthly maps is such a strong tool because it's not doing anything but looking at the positional risk and the options. The market making options are balancing their exposure to us as traders. If I long big and there's no seller, market makers going to trade with me. And this is their options spread. Our algorithm can find their options in the mix of all of it. That's what this is teaching you. So right now, monthly maps show a very bleak outlook that doesn't get strong until at least the 15th of January. So if I were timing options, like trying to swing trade this up, I'm not expecting the market to bottom out till at least a week or two from now. So I'm going to wait before I try to buy my calls. Maybe somewhere in here, I might get a big long to get up in. If the market structure is still good at that point. Do I think 2025 finishes negative? No, I don't. The outlook of the bear market is only for like 2 weeks. And then right here, does everyone see this? So far, so good. Second week of January, it looks like it's coming back to Trump's bull market. Do y'all see that? Bull side sloping down, bear side sloping down is bullish for the market, showing that at least a month from now, 560 is support. So if I'm aiming for a month out, 560 is a nice support to buy for the bigger rally. Okay. So the market might correct a little bit from 600 to 560. That's what I'm expecting at maximum. And then we bottom out. You'll see that? That's how I see it. So I'm in no hurry to try to bottom fish here. Matter of fact, you guys saw me. I was the first in the world to call the bottom. First bull, the last bear market in 2022. I called a bear market here, and it looks like it's bearish for about another month at worst. Okay. Graduation is trading in a live funded prop account, being successful for 90, 180 days and trade your own cash. That Matt's coming in with some really strong advice there. Yeah, when you graduate from a prop firm to a funded account, you do profits with them, save up all the money you can from that, and then go trade your own account without the profit split. And then you graduate to being a real funded trader that's self-funded. In a bear market, what would I personally buy to go defensive? It depends on the length of the bear market. Usually, as a day trader, as a trader, you will learn that Matt Cowart likes to sit out in bear markets. I like to go to cash. I don't like to, when markets are tumultuous, they're harder to predict. And so going into like a counter trade, like moving from, like equities and like fixed income or something, I don't do a lot of stuff like that. Even though it's a very smart thing to do, I still don't do it. I tend to like to be on the sidelines so I can have maneuverability to buy dips. Bear markets don't just crash out and fall. Like if you look at 2008, I'll give you a case study. You guys want me to blow your mind really quick? And again, we talk about this in the classes, but this is really fun. Take a guess. And if you know the answer, don't tell me the answer. But during this market crash in 2008, 2009, 2010, do you know how many days? Well, let me not show you the answer. What percent of days do you think were green? And the worst loss of asset value we've had in the history of this country. Stock market crash in 29 was the biggest crash we had. The S&P lost 90% of its value over 3 years. That's the biggest crash we ever had. But the biggest loss of value of assets when the housing market crashed was 2008. This was the worst recession this country's ever experienced, believe it or not. It wasn't as bad as the Great Depression, but as far as loss of value of assets, if the banks didn't get bailed out, we would have been in a Great Depression for another 10 or 20 years. It would have been that bad. So what percent of candles do you think were green? You guys take a guess? Can I do MSTR? We don't have a monthly map on MSTR. For some reason, it's not showing up on the list. And I need to make sure that we allow us to expand into bringing on more tickers. I think it's just the list is fixed and it's not bringing in any more extra tickers since that's a popular stock now. Just put it on there. Yeah, it's at least 50%. It's a lot more. Yeah, you guys know the answer for sure. It's at least 50%. Oh, Jerry, how to get into the class? Yeah, let me give you the information. Hold on. So we have a huge community here. This is how you get the platform, and it's half price for the first month. You can try it out. That's the platform and the classes. Very great to do. If you just want the classes only and no platform, it's here. So the first link is platform and classes. This is just the classes. Hold on one second. So the monthly maps work on any stock that has options. What we do is we get the raw options data feed. You put in anything in here like Tesla, right? We get the raw data feed, and what we look for is the following. Like an example is if, like right here, this option expires on Friday, okay? All the options expire Friday. What this does is there's a mathematical distribution of where the bulls and bears primarily are based on market maker options. These are bulls and these are bears. You can see the split. And right now, Tesla is trading in bear territory for 2 weeks, and then it turns bullish. So Tesla has 2 more nasty weeks ahead of it. Okay. The bulls are in control up here. The bears are in control down here. And what monthly maps are doing is looking for this particular trade. If I was a trader, that's me as a T. And I were to long a large amount of stock, Tesla in this example, like 1 million shares, right? I'm going to buy 100,000 shares, I'm long. Well, there's not really an easy to find seller for an order that big. So the seller is usually a market maker. You can learn about those by Googling it. Market makers are banks that are paid to trade, provide liquidity. So they're the seller if there isn't one. So they're the ones that are shorting to me, right? The thing is that we monitor these like large trades like this. We also look for corresponding options trades to go with it. A market maker doesn't want any risk on the table. They get paid to trade. They want to balance their risk out. So when they short Tesla itself, then they buy a call in Tesla that's weighted appropriately. The right balance of this, it's a neutral trade. Okay. Calls go up when the market goes up. Shorts go down when the market goes up. So market makers will engage in neutral trades. So we have an algorithm that looks for neutral trades. Then we extract these calls from it. We get the options data feed. We pull that data out. And that corresponds with a certain positional size of a long in Tesla. And so there's a bear or bull in Tesla because we found the market maker call. And these are the market maker calls. And this is where all the bulls are and want to be based on the options that are out there. Bear's the other side of the coin. People short in the market without a buyer. And the market maker is the buyer, and they bought the puts to hedge it. So in this example, right now, Tesla is trading really strongly in bear territory. That's what monthly map's telling you. It's like pulling the curtain back, and any stock has a monthly map on it. What's the truth? Is Amazon rallying? Oh, you bet your britches it is. Amazon clean today, right? Amazon's monthly map of all the stocks out there. Amazon is the one where the bull side is getting stronger and the bear side is getting weaker. When they're both sloping down, is actually very bullish. As a matter of fact, this bull pennant is likely to break to the upside because of this. Does that make sense? So that's kind of what you're doing. That's what monthly map is. Ever hold futures positions overnight? I always close when the equities market closes. I mean, the futures market closes, and I trade separately overnight. It's a whole new day. I don't usually hold futures for multiple days. And to show you the reason why I like to be cash, even when markets are crashing, or bear market, don't mistake a bear market for a crash. Let me explain to you the difference. 2008 crash. People say about it, but the crash was here in October. Okay. This isn't a crash. This is a bear market that turned into a crash. Crash is when you have 3 or more consecutive days that are red with lower lows. That was a crash. You know, COVID was a crash, right? But bear markets tend to just look like this. They go up and down and up and down. And the majority of the financial crisis in 2008, at that time, the majority of the market was just a standard bear market. There's nothing scary about it until, you know, Lehman and Bear went belly up. Then people freaked out. But you can count from here to here the number of candles. You can roughly see if you count them, it's 50% candles are green. You could, I've done this exercise many times, but go count from here and go count from here. It's almost roughly 50-50 exactly. So even when markets are bearish, I'm always cash because I'm always grabbing legs up. Even when markets are selling, there's always legs up. There's always good eats to bull market. So even in bear markets, there's some good bull trades. I mean, you guys see me. You haven't seen me short the market just yet, and I made $4,000 today. I turned yesterday's loss into a win at the end of the day, or Tuesday's loss. I mean, this whole way down, you guys, I've long all 4 of these days. You didn't see me shorting at all, did you? Did you? No, you didn't. So when markets are selling off, I'm just cash and waiting for my opportunity to day trade long. I'm waiting for it, right? I know we're in an environment where markets are trending down, so I'm not betting on big reversals. I'm taking bull scalps if I can get them because I know the market's going against me, right? And why don't you short? Well, the market just doesn't really go down that much. And even when it goes down, it comes up half the time as it's going down. It's only the rare cases, once a decade, where the market is crashing for some reason, a global pandemic, for that to happen. It took the housing market to crash for this to happen, and banks and investment banks to go belly up. Right? Other than that, the market's just bearish, and bear markets are very tolerable and not so horrible to trade. They're not as fun as bull markets, but bear markets aren't necessarily crashing all the time. The dot-com bubble crashed right here and crashed again right there, but the rest of it was nice, clean bear markets. And I say clean, relatively speaking, where it's like 50-50 candles, green days, red days, green days, red days, and it's nice bull longs. It's like, look at this, 2 months of longing the market, even in a bear market. Now, again, there's a crash. We have good crash detector indicators, but look, 4 months where there's more green candles than red. So even when markets are bearish, I've still got cash I can long the market, right? Blues trader, you're a reversal trader. Yeah, and it's like you don't want to long when this is happening, but we have really good indicators that tell you when crashes are happening. Catalyst, DD band breaks, VIX for scannable breaks, all these keep me out of the way of crash markets all the time. During COVID, I sat out for like 3 straight weeks. Like I woke up and I was like, nope, no thanks. This is not the day. This is not the day. I didn't start trading COVID until like right there. And that's kind of what you want to do as a trader, is just be armed. Reversal trader. I'm a reversal trader too. I'm always picking the reversal. I'm always finding a dip to buy. I'm not really chasing trades ever. In a day trader, I'm always finding pivots. So while we are bearish, it doesn't mean the market's going to crash. Like I expect the market to do this and this, and maybe trend down a little bit, and then, find some kind of base somewhere in here. 560 was that low that I saw that we could possibly have. So any downward pressure, somewhere in here is likely to support out, and we're good. I honestly feel like this is what it is. 1 to 2 bear months is what we're going to get. Monthly maps show me that. So somewhere between now and middle of January, I'm going to find a night. The market's going to be back to being clean, I feel. But as we get closer to that date, right, I reanalyze the market and come with like, where'd my platform go? So inside of the nastiness, there are some stocks that are pretty good. Like Amazon's really good. What's Nvidia looking like? Is Nvidia looking good? Nvidia not looking bad. Nvidia has a little bit of bull liquidation and bear strengthening, but then Nvidia again looks like Amazon. Nvidia and the other tech are going to, hang in there and not fall really hard. So Amazon, Nvidia, a lot of these stocks have really strong staying power. Let's look at GME, just because everyone's been asking about GME. And GME is still looking good for the mother of all shorts. I've been talking about GME squeeze for since way back here. I said that the GameStop is getting short squeeze, and it's still following it. GME's not collapsing out, and something weird is going on with the stock, and I can't explain it. But the monthly maps are painting the picture, and the apes fucking love me because I'm giving them good news, and I'm not trying to give them good news. I'm trying to give any news. But GME is still looking sexy for the big run up. Interestingly enough. So of all the things out there, GameStop might actually get another run of all things. So GME of all things still holding in there. Isn't that crazy, right? On the other side of the coin, let's piss off the other half of the apes because AMC is looking like absolute garbage. There's no hope for AMC. That shit's dead as a doornail. Goodbye. You're done. No bull zone anywhere. Bull zone's not getting better. Nobody's buying this shit. AMC is dead. You see the difference? AMC is absolute dead. There's no movie theater business is dead. We all said that. But for some reason, GameStop looking good. So I don't know what's going on in the Roaring Kitty world or whatever. But those of you that took the long and QQQ off of bull zone and hedge pressure, good job. You guys are killing it today. Market is weird, man. It's weird. This market is weird. I don't understand it. Pretty much a versatile trader. Glad you found a channel, Blues. Thank you, man. Appreciate it, dude. We're a little different than the market, the rest of the traders out there that trade the market. Like, our thing is about precision, stats, all my trades, all the stuff we created here, all these tools I made, all statistically designed with statistics in mind to produce like not only precision, like repeatable behaviors for me, but statistical edge for me, where there's a stat. There's a physical stat. As I said, 90% of days will close above this orange line. I already made it some good trades today, so I scared myself out of taking it. But all kind of people, they ask me if I'm longing off of MHP to fill the gap. And that was a great setup, whoever did take it. Because 90% of days will bounce and hold MHP. So you need to see that. I have to link your account to see futures on your platform. Yeah, you do. And it has to be compatible with CQG. So call your broker, whoever they are, and ask them for the CQG login. Who's your broker, Miguel? I'll tell you if they're compatible. Rocket Scooter. You guys are welcome to try the Rocket Scooter platform. It's only half price. It also includes all the classes and stuff. Definitely worth trying out for a month. The bot is spamming the link out there. I wish I have hindsight. I wish I would have taken this trade. Webull is not compatible with our you need just a straight FCM, a futures broker, to get futures data here. But yeah, so you need to go get futures data from an FCM like EdgeClear or AMP, or like the two. Interactive brokers also not compatible yet. They're not compatible with CQG. Let me give you the... Let me see CQG brokers. I wish they would list which brokers they have. Here we go. So this is the list of partner FCMs that CQG has right here. These are all the compatible brokers with Rocket Scooter right now. And a lot like futures brokers, you can come in here. Like for exchanges that you're going to trade, if you're going to trade like the CME group, these are all the ones. AMP. You may not have heard a lot of these because they're futures brokers, but Citi, Deutsche Bank, Dorman Trading, Phillip, JP Morgan, Iron Beam, Edge Clear is in here. They don't have Robbins on here, but we're compatible with Robbins as well. But yeah, so these are the compatible futures brokers. And Edge Clear is not listed on here as well. Maybe I'll just take this off. Maybe they're listed on this. They need to update their thing. Hold on one second. I can't recommend a broker to you, so I can't give you investment advice, but I personally use AMP. As I described earlier, I use AMP because they have less minimum deposits, $100 minimum deposit. Jonathan, do I work for op accounts? Yeah. We have a discount with ETF and we have a discount with Apex. So you can have, if you use our link and either one, the bot's posting both of them. You can use our link and all the proceeds that we get from that stuff just goes back to developing the platform to support the company. What's the regular price after 50%? It's $199 a month. We sometimes have deals, and what most people tend to do is, and again, what $199 is actually, it's not like some people pay like $500 for Discord, which I think is ridiculous. But $199 is actually the platform. It's fully unlocked. So you get actually the trading platform. You can live trade futures in this thing. You get the tools that come with it, like all the Rocket Scooter base tools that come with it, liquidity maps, monthly maps, all of that. It also comes with your options data that feeds the platform. For additional $9.99, you get your equities candle data to go with that data. And it also comes with like the Discord access, which is really big. We have a huge community. And all the courses, which is really what the value is to learn this stuff. And a lot of people, after like 2 or 3 months, usually go to the lifetime, which is essentially like a one-time fee for the platform. And then you get everything that we ever create for the platform for free. So essentially like NinjaTrader is the same way. You can buy the platform and then you always have NinjaTrader. And so we have like an outright purchase of the platform and then you get forever access to like Discord and courses and all that stuff to go with it. What is the liquidity map? Yeah, sure. Liquidity map is predictable flow and volume based on options. And in the futures world, that's what I want to care about. See, what I do if I'm trading NASDAQ futures, I have futures pivots and indicators, but I also, in liquidity map, I can look at QQQ to get some extra clues, okay? I can predict high volume pivots across the board. So I'm going to tell you right now, just to show you on my chart, only where I'm circling are only the prices that matter today that I'm going to trade at. Only these exact levels are the only places that matter. Each one of these places I circled is high volume. Everything else, I'm going to avoid everything in the middle. I'm only going to trade where there's high volume because I can tell you where volume is going to be every single time. Liquidity map, predictable high volume. We're actually predicting volume hotspots with the map. It's showing you based on the options where traders are going to be. And as a day trader, it's extremely important to me to know. So what the lines are, they're different indicators. So let me remove some of them so you can see them all easily. There's 2 things that are shown on here. The redistribution is done. Let me read this. So liquidity map is composed of 4 pieces: a bull zone, a bear zone, a blue and yellow line. The blue line is where weekly options basically creates the blue line and monthly options create the orange line. So a bull and bear zone are just where bulls primarily are trading this thing. Bulls are here. Right now, NASDAQ futures and QQQ are trading in a bull zone. This is where bears are, actual bears. People short the market are here, and people long the market are here. As you see, QQQ is still strong in the bull zone. It's still good, right? Will the lifetime cost ever increase? Yeah, it goes up. Lifetime used to be $1,500. Then it went to $2,000. Then it went to $25,000, and now it's $4,000. But there's a $1,500 discount going on for the new year. So right now it's $25,000 again for a week. Yeah, but lifetime always goes up. And at some point it'll be $5,000, $6,000. It goes up because there's more and more features that comes with it. So there are some people that got in Rocket Scooter at $1,250 4 years ago before we had a platform. We had a pre-sale. So like as time goes by, it gets slightly more expensive. But whatever you do, it locks it in. So like the membership at $199 will likely go up to like $299, $399. But if you lock it in, it stays there forever. So that's kind of the neat thing about that. So it does go up over time. But our company gets bigger. Like we have 20 people working for us now. So, and we have more tools, more development, more overhead. So it kind of is that thing. Okay, so bulls basically and bears are split here. But a bull zone, what you care about is where price opens. So NASDAQ opens here. Under normal circumstances, 90% of days you close in the same zone you opened in. We open in a bull zone, 90% of days we're likely to close in a bull zone. That's a great stat, which means while it's trying to sell off, there's some kind of mysterious force holding it up. And we talked about this today. 60% of the market cap of stocks in the S&P are bullish. So clearly the futures aren't going to crash out. So I'm not super bearish, even though I'm slightly bearish. So what we mean by that is I explained it earlier. If a trader, an example is QQQ. I'm a trader, that's me. I longed 1 million shares of QQQ and a fat finger to market order. Okay, I longed 1 million QQQ. Okay, long. There's no seller on the other side of that. They're not going to have somebody on the other side of that. There's a natural trader trying to sell that much to me at that moment in time. So a market maker of QQQ is short 1 million. We got it so far? And they want to be neutral. So I want to take risks to make money. They want to be neutral because they don't want to take any risk. Market makers want to be neutral. So they're short 1 million QQQ. And then they bought calls. And let's pretend that delta hedging isn't a thing. Every 100 shares is one option, right? So they bought literally 10,000 calls for the 1 million shares. 10,000 calls is worth 1 million shares. So they're fully hedged in this position against me. They're long and short the market at the same time and see that it's neutral. Does that make sense so far? So in this example, when we identify where the market maker calls are, which is what we do, we look for this tandem trade. There's 3 trades going on here, 2 trades going on here. A buyer, a seller, and then an options hedge. So this example, just this example, is just showing a basic example of hedging. So the idea is if we can identify the call. So what we do with liquidity maps, we have the Opera raw feed coming in. We have a whole like army of server computers chopping up that data, and every option trade that exists we look at. And we pluck out those market maker calls that are part of this kind of tandem trade. And what we do is from the calls is we can isolate, there was a bull of 1 million shares. There's a lot more complexity to that, but underlying this is kind of the game that we're playing here. So essentially, you have a trader against a market maker who is neutral. This person has risk, okay? This is where there are more bulls than bears in this condition. We've identified there are more bulls than bears up in here in that particular trade. Down here, there's more bears than bulls. That's it. That's just where the side is winning. So we have a mathematical split that shows exactly where the bulls are beating the bears and when the bears are beating the bulls. So far, so good. And it's about 90% of the time, the market stays the course, which is even better. It just shows you that the large amount of institutional risk out there doesn't flip-flop on a daily basis. They kind of stay the course 90% of the time. They buy and hold, which is great. We're exploiting that fact. So right now, we're bullish here. So there's bull support at 512 on QQQ. And as you see, the selling is somehow fighting off very hard at the bull support. It's even aided further by the fact that the 60% of the market cap in the S&P is also in a bull zone where bulls are beating bears. And I showed you some stocks earlier. Amazon, Nvidia, big amounts of market cap are keeping this market from crashing. Can y'all see that? That makes up a huge portion of this market at 60%. A lot of that's Nvidia and Amazon, right? So they're strong enough to keep this market from crashing out. So QQQ's own hedging is going to keep it higher. And the fact that it's also tracking the stocks underneath it is also keeping it higher times 2. There's good confluence there. So far so good on liquidity maps. Just show me where the bulls are beating the bears. And in the middle, nobody's winning. Neither. Everybody's losing. Here the bulls are winning. Here the bears are winning. So, and very, very, very key to say if you're opening in a bull zone, 90% of days you'll close in the bull zone. So bull zone is support when you open in bull zone. Bear zone is resistance when you open in bear zone. Just like that. So it applies pressure to the market. There just seems to be, no matter what's happening, just like this wind of air that's kind of blowing the market away from that bull zone bottom. You see that? It's there's like a little fan, like it's right here, kind of like blowing some air, just kind of pushing it up. Like people are selling, but it's like selling into like something that's kind of like guiding it upward a little bit. And that's just structure. This is real market structure based on options. And I trade futures off this information. So hedge pressure is the last piece of liquidity map. So basically what this is forced hand trading for people that are neutralizing positions. Now, I skipped the part on delta hedging, but the amount of calls and the amount of shares they're engaged in are going to be balanced, and they're going to change over time based on their hedging, their delta hedging. So the delta hedging is what presses the market higher. That's that gust of air that's pushing it higher. Because dealers are forced to short in this particular example. So there's a trader against a market maker in that one example. You're trying to make money against the market. This person bought calls, if you recall, because you long the market and they shorted. Well, somebody had to sell the calls, and that's market maker of the option itself. This is market maker of the stock. So this person actually sold the calls of this person. And as those calls go in the money, they're going to have to buy to delta hedge. If those calls go out of the money, they're going to have to sell the delta hedge. So they're buying and selling QQQ when you were buying QQQ. So if they're selling QQQ and you're buying QQQ, the market maker has found a trader for the other side of your trade through the process of them buying insurance. So like the example is you bought the underlying, they're on the other side of the trade with insurance in case they're wrong, that balances their risk. And this is your insurance salesman right here who has to buy and sell the underlying to balance their risk. They're also neutral. So their risk against the market and identifying where traders are, which is equal to, or their risk of half of the trade, or your risk as a trader is bull and bear here. Hedge pressure is the maximum gamma exposure. If you guys heard of gamma exposure, of these guys who are forced to buy and sell the underlying based on their options they sold going in or out of the money. If you sold a call and it goes in the money, you probably are about to owe that person 100 shares. If you don't you don't have them, you need to go buy them. We can calculate how much they need to buy. So hedge pressure is another thing. Weekly options have an 80% same side close rate and 90% on monthly, which means if we open here in QQQ, not only is 90% of days going to hold a bull zone based on this guy, 80% of days are going to hold hedge pressure based on that guy, and monthly's at the same spot. 90% of days are going to hold monthly hedge pressure based on that guy. So 90, 80, and 90 based on 3 separate mechanisms: weekly options, monthly options, and where the bulls are beating the bears. So if you knew all of this going into today, would you be shorting right there at the bottom? Or betting that 80, 90, 90, those are 3 really strong high probability plays? Well, there's no confusion to me why we're not crashing. Does that make sense? So you're saying, how are we feeling for long, or how am I feeling for long? I already made my money today. While it is holding the area I want it to hold, I have some other cautions of how many trades smaller. In the courses, I tell you why I'm sitting out. There's a reason I'm sitting out today. The majority of I have position sizing metrics that tell me like how big to bet. Right now, every time, essentially every time before I make a trade, decide how big I'm going to trade. So I start off with like a normal, and if I get scared out of it, it depends on what trade I'm doing. These are pretty sizable trades. I have what I call a normal position, a medium position, a small, and a sit out. So right now, because we have irrational signals in the market, I'll show you what these things are. These little alerts over here. Anytime there's irrational signals, I always trade even smaller. My normal trade here is a medium because VIX has broken hedge pressure. It's now a small. Right? So even if I were trading, it'd be small trades only. But QQQ also broke monthly hedge pressure, which had me sitting out down here. So like I've qualified my trading amount to be 0. So while there are good pivots here, I have enough cautions in the market to sit out. So R1, if that makes any sense. I already made $4,000 in my funded account, so I'm kind of like, all right, I'm good. I got that leg. So I'm like, should I long here? If I were to long, it's very, very, very small. It's like 5 micros. I can buy a dip here, buy a dip here with micros, and I don't hate that idea. But it just doesn't feel like a strong trading day today on top of everything else. So I feel like I'd be over trading. I've already made some really good trades. Plus, I usually end the trade at these DD bands, and we've tapped them 2 times already. And so I'm kind of like, is lightning strike like 3 times in the same spot? Say I'm out. I haven't been really putting a lot of effort in the top step yet. I did that very, very first day. But now I'm going to do it because they had the ETF sale and the Apex sale. I was trying to give ETF some spotlight during this time. So I'm not trying to like muddle it up by talking about too many prop firms at once. Once the sales are over. Hey, Oren, that other day that you were here a couple days ago, I turned that into a winning day, by the way. So that day, right? That day, 2 streams ago, when I lost like 2 trades in a row, by the end of the day, I made $12,000. I don't know if you guys knew that. In the classes, I showed everybody the trade. So I had a $12,000 day that day. Remember the day was crashing and I longed and it failed and longed and it failed and got off the stream. I made 4 long scalps at the bottom, made 12K. So today in my funded account, I'm up 4K or 3,900. So that's today. So yeah. About to take a 20K payout from ETF. So I took a 15K payout last week. I'm gonna take a 20K payout this week. So that's 35,000 in 2 weeks with ETF. So that's for my live ETF account we're in. So I'm a funded trader with Elite. So what, 4,000 today, and just in one account. This account and my Apex is up at $1,200. I took a loss here and then got a big win there. So I made about $1,200 net on that account. Just one. I didn't trade 20 accounts. I just trade literally just one. Days like this, I just take them light. So small win day, 4K. Okay, so what liquidity map does to end this is balancing all these pressures together. Do you have a membership? Yeah, we do. We actually do. And so King's worry, don't let options confuse you. This is futures trading. But when you're trading futures, I only trade futures. I don't trade options. So don't hear the word option think I trade options. I rarely trade options, if ever. Only on swings. I trade NQ futures and ES futures. When I'm looking at NASDAQ futures, it's tracking the NASDAQ 100, okay? All right? Is an index, which is tracking 100 stocks, okay? There's also an ETF called QQQ. This is one of the most traded ETFs on the planet, one of the most traded instruments on the planet that is tracking NDX as well. So if I'm trading futures, I'm looking at clues everywhere, but QQQ has options that give me a lot of information about the NDX. I'm looking at what the stocks are doing, which give me a lot of information about the index as well. And I'm trading futures off of the sum of all that information. I'm not just using indicators on NASDAQ. Does that make sense? You don't have to know anything about options to use our stuff at all. Zero. Options are just the trick to trading futures. That's the secret under the hood. So options are going to tell me that there is a flow pressure from here, and there's a flow pressure from here. That's all I care about, what these arrows are on the side of the screen. So if the QQQ is pivoting up, NASDAQ's going to pivot up in the same place, right? Futures are going to pivot up in the same place. The charts are identical. NASDAQ futures is identical to QQQ's chart. They're exactly the same. Exactly the same. So when QQQ pivots, so will futures. So I'm looking for all evidence of QQQ pivoting. NASDAQ futures pivoting. I have futures indicators. I have equities indicators, but I put them side by side to just read the market. So it's just me trying to read as much evidence as I can in the market. So here's how liquidity map works. It puts all those pieces together and shows you where automated trading is going to be taking. Dealers are going to hedge the exact same way. So this is consistent approach. Here's the consistency. Where you open on the S&P, 90% of days you close in the same zone. Bull zone will close bull, which means today, very strong bull support. If this ratio is greater than half, check, it's 0.6, okay? So it's 90% of days we're going to close above here, which means if the market crashes out, I'm going to bet that we close above there 9 out of 10 times. Okay, so there's pressure that pushes up this way. Hedge pressure has a net repulsive force because of the way gamma works. So below blue, it's pushing down. Above blue, it's pushing up. It's like a magnet that's like steering price depending on what side you're on. Here, it's pushing this way. Down here, it's pushing this way. Clearly, we're in between the two, and it's no surprise to you that the two pressures are pushing us in the middle. So from here, King's Rawway, tell me, you don't know anything about executor yet. What would you do right here? It looks like you have two pressures pushing it to the middle. Does it look like there's any predictable momentum from here? This is a quiz. The 90-10 split for my payout pays for ETF payout. That's right. Is it? So like right here, is there any predictable momentum? You have two forces kind of pressing price towards each other, right? It's kind of stuck. Yeah, it's like stuck in the middle. So what's neat to see is that opportunistically, it's kind of stuck in the middle. Liquidity map sums up all the pressures and kind of tells you like an optimal flow path, what to expect. Orange to blue is a really strong pivot. And you see orange to blue is kind of a strong pivot, but it's finding that blue resistance pushing it down, right? So from the middle, somebody said, would I make a trade here? Well, no, it's kind of in a balanced spot. I probably missed the opportunity. But on the same token, about 90% of days will close on the same side of monthly hedge pressure as well. So this is a very strong pivot, by the way. Blue hedge pressure, according to our last back test, is 80% of days will stay on the same side. So you have 20% of days will go above, 10% of days will go below here, 10% of days will close below here. You have some really strong pivots here to long, and here pushing away. Now, I don't short off of blue. There's no red arrow here, but there is resistance here. I exit a long trade at blue every time. So the way the arrows work is I enter at the tail and I exit at the tip, the way I do it. So the idea is that when you piece it all together, there's a natural flow path. You have bull pushing higher, right, all the way through. You have monthly hedge pressure pushing higher all the way through. So the general flow path of this mechanism of the market makers of SPY, for this example, and this mechanism of the options sellers of SPY, both types of market makers are longing the market. That's why these arrows are green. So it's like the market's going to randomly flutter based on people buying and selling randomly. But the idea is underneath all that hood, you can calculate how much the market makers need to buy based on the options. We had the sophistication to do that. That's what we built. And, that's why, you put an engineer in front of a bunch of numbers. I'm going to come up with some better stuff. Our team is fantastic. Our team of literal geniuses that work for this company have come up with such sophisticated tools and ways to solve these problems. I can calculate how much flow is needed to a degree that each one of these pivots I showed you that are 90% are predictable high volume. And I love playing this game. If you guys never did it before, I say throw me 10 random tickers and I will show you anytime you touch hedge pressure, monthly hedge pressure, or either of the zone boundaries, you will see a high volume spike every single time without fail every single time you touch one of those things, because it's predicting where market makers are going to be doing their maximum activity. Gamma maximum or gamma exposure means maximum delta hedging. Maximum delta hedging means predictable volume. As you approach here, volume starts to spike. As you approach here, volume starts to spike. As you approach here, volume starts to spike. So what it tells me is traders are here and here, and anything else in the middle is irrelevant. So I've isolated my trading day to just spots that matter. And that's like what we train traders is that you overtrade way too much. I'm going to pivot only where I think there's going to be traders at, right? How do index futures play into this triangle? There's other ways to hedge. People that are engaged in the underlying trade may not buy options. They may go buy futures. But since the market is all tethered to itself, everything's tracking the index. It doesn't matter where they hedge. Everything's going to circle back onto tracking the index no matter what. So if they hedge here, hedge there, hedge there. It's the same kind of process. Whether they're longing the shares of SPY to hedge their short position to neutralize, or they're longing futures. Either way, if they're pushing the SPY up, futures are going to track. If they're pushing the futures up, SPY is going to track. So any long hedging anywhere, everything's going to go up because they're all tethered together. So the neat thing about hedging is it doesn't matter where hedging's taking place. The hedging is just long on an index product somewhere. And if one of the index products goes up, they're all going to go up because of arbitrage. There are bots out there designed to price everything if one of them is going up. If SPX options are going up, SPY is going to go up in value. If Amazon goes up, S&P futures are going to go up because the market makers are pricing based on all the available information anyways. So, okay. So give me a stock and I'll just show you guys some random liquidity maps. The idea is, can we predict the highest volume other than open and close. So hedge pressure and monthly hedge pressure are predictable high volume. So therefore, I only really care to trade here or here and make my decisions there. Everything else in the middle is noise. Imagine me trying to long here and sitting with risk on the table for 3 hours. That sounds boring, right? So I'm just like sitting out. Yeah, so give me like 10 random tickers and I'll show you how we predict volume. So the Rocket Scooters' claim to fame is we predict volume. That's what we do. Look, here's Tesla. It's not technical analysis. Tesla, there's resistance volume off of blue, and you can see there is resistance volume off of blue. That's what you have. When you touch blue, there's always volume spiking up. There it is. You can see right there. Any questions? All right, so Palantir. Yeah, let's go. Palantir. Anytime you touch monthly hedge pressure, you're going to start to see volume come out of the woodwork right near it. So here it is. There's the big volume spike on the first monthly hedge touch. The second one didn't have as much volume, just a little bit extra. It's buried in the kind of the decay here. But as you're approaching here, volume spikes up. When you get here and here, volume starts to spike up again. And of course, 90% of days close on the same side of there. Pretty cool, right? Palantir, great long opportunity from here if one were to take it, but I didn't take it. I'm not trading anymore today. Right? Zoom. I haven't looked at Zoom in a long time. Zoom, there's your monthly hedge pressure. There's your big volume spike. EKTX. So the obvious part is like when you're planning like risk and reward, and some things don't have enough data for us to calculate a really good monthly map or liquidity map. So some of them don't have enough data to really give us a good read, so we don't do it. So the idea is that can you use options to predict volume? Yes, you can. And so as a trader, not every price is important, but I know that market makers are going to be forced to trade here and here and here at a high amount. So let me bet where they're betting, right? Before your very eyes, welcome to SPY volume spike again as you hit the monthly balance right here, right? So the idea is that nothing matters except for where volume's gonna be. If I'm buying something, I want it to move, I need to know where the trader's at. And this big volume spike is a high probability of buyers are gonna be there. So I'm not ever like chasing longs. If I'm at a long, this is the place to long from if I'm a bull today. This is the ideal place to long from and nowhere else really. There's a scalp from here to here that I like to take every time as well. I've already made enough trades, so I'm gonna sit out. But you can see the idea of that, right? Like this was a good setup, this was a good setup. And I take a really tight stop near it. So for me, identifying where volume is such a key, it's such a key part of understanding markets. Mara, I mean, you have volume and volume there. Look at this big volume spike here, right? Big volume spike here. You can't make this stuff up. Here, volume's increasing as you're breaking it. So Mara looks like it opened below, and 90% of days usually stay on the same side. So Mara is going to have a hard time breaching this and staying there. See how it gained momentum and immediately sold off? There's pressure to get the market back to there, right? And you can see that the liquidity map is showing me that pressure is there. So liquidity map is showing me in this particular thing, it's like pushing this way. In the middle, it's kind of doing that. And you can see how it's kind of floating in the middle right now. So these print out at 9:30 in the morning. Like, how do fibs relate to levels? They don't. I wouldn't say the fibs have anything to do with volume prediction. So no fibs. Yeah, no relation. So all of this is based on options. So you can see what's pretty neat though, right? It's pretty neat to see that I see Mara like right in here. I'm not like, oh, this is a buy opportunity. I go, well, ugh. It's kind of like pressure pushing it to the middle. And so there is no momentum from here breaking out either way. It's like, it's kind of oscillating. See how it's kind of like wedging to the middle? The monthly map is helping me see that structure. And the idea is you want a visual of the structure, it's going to print it for you. They're pretty neat, right? I mean, it's matching what you see. And these are given to you like the minute the market opens, which is really nice. So you're just seeing the option structure so that you can make a more informed analysis of the market. You're trading futures and you didn't know you need to understand what the stocks are doing. Well, we give you all that indicator, make it easy to see. Stocks are still very bullish today. So the indicator for the S&P is not likely to just fall in its own face and collapse, right? It's going to kind of find a bid and you're seeing it's kind of choppy, right? Do I use weekly or daily hedging pressure? Yeah, so it's all daily. It's all done. Let me start over. So weekly options. So every single 0-day option or non-monthly option is in the blue. Every third Friday is in the blue. So every other option, I mean the orange, every other option, weeklies are in the blue. So daily hedging is caught up in the blue. Weekly hedging is caught up in the blue. Monthly hedging is caught up in the orange. We separate the two because of the mechanism of monthly hedging. Monthly hedging is long-term institutional holders. The only person that's going to hold the stock and buy a monthly option or greater is somebody in that stock for at least a month to a quarter for dividends. So this is like your investment banks, ETFs, things like that have funds that want to collect dividends. You're going to be ones buying monthly options. These are typically day-to-day market makers and short-term hedging done by anybody, speculative trading. So separating the two out, monthly gives you a very strong picture of the institutional side of the market. Are they holding stocks or are they dumping stocks? And monthly hedge pressure has a very strong hook when you separate. That's why you separate the monthlies out. Yeah. Tesla, yeah, let's go for it. I've done Tesla like 10 times today. Where you been? Where you been today? Tesla is seesawing between the two hedge pressures right now. You have pressure pushing this way, pressure pushing that way, and 390 to 365. I mean, it's like right here in the middle. It's kind of where it's like balancing. So in trades like this, there's no actionability. I don't have a high volume pivot anywhere in here to touch it. So because of that, I wouldn't touch Tesla. A lot of stocks are in this bow right now, so I'm not really looking for opportunities, right? I would trade off of pivots if I see them, or off a pivot if I see them. And that's it. So Tesla has a great short from here to here, or a great long from here to here, but in the middle, no diddle in the middle, right? So the other indicator that you saw on the chart is the redistribution zone. This has to do with if the stock gapped up or down. So Tesla closed here yesterday and opened here today. So Tesla gap down. There's an open gap. This is a gap. Okay. And this is the middle of the gap. We call it a half gap. Okay, half gap, very important. Gaps, open and close, and half gap are also high volume pivots. So that's what the white lines are. So it's two different, liquidity map and redistribution zone is both printed on the chart. How do you find your high volume pivot? Rewind 20 minutes. And I tell you how the secret of liquidity maps. This is a whole technique we created. It cost me tens of thousands of dollars a month to do that calculation and all the data we had to buy for it and all the servers it takes to run it. We get it from options data. We can calculate it. So today, gross little market, not loving it. The question is, do I want to take bear zone to bull zone? I usually take this trade every single time. And I might take a stab at it. That is the question. Let me see if I qualify for a trade. Man, all the things are just garbage today. I think I'm going to sit out. I'm going to be honest here. It's too dangerous with VIX hedge pressure breaks. This is not good. VIX being all over the place like this. That's not what we're doing. I'm going to take the day off. SPY at MHP. Strong bounce point there. I don't know. Yeah, I made 4K. Just let it go. MHP dance stay. The answer is no. Yeah, I know. We'll kind of keep it on the sidelines. Market's too crazy with VIX hedge break. So with multiple setups, my normal medium to small trade, every single time when I have a bull setup that loses confluence, I trade it even smaller. So medium became a small became a sit out. I don't think I'm gonna touch it today. I hate options. I hate options too, man. They're so crazy and complex and just they hurt my brain sometimes. But I love the options math. That's good. That's good for calculating pivots. So I normally take this trade every single time, and I'm like, should I take it? But man, market's just gross today. So I'm glad I'm on the sidelines. I'll take my 4,000 profit in ETF. I'll take my 1,200 profit in Apex and just call it a day. Man, the stream has gotten so big lately. I really appreciate you guys coming and being here every day. Crushing it. Checking out what we do at Rocket Scooter. It's so different. You guys may like it. Y'all might see a considerable difference between myself and anyone else maybe you used to watch. Oh, I'm actually the worst salesman known on the planet. I'm terrible at selling, or else we'd be making a whole lot of money. I don't even have ads selling Rocket Scooter. I mean, I should have ads, right? For a trading plan. I even built a trading marketplace. I have an e-commerce marketplace with hundreds of vendors, trading vendors on. I don't have ads for that either. I probably should be better at that though. I am a really good trader. That is definitely true. As far as like live trading on YouTube, I'm the best. I'm there by far. It's not being anywhere close to being on YouTube. Oh god, I'm 10 times better than the second best person by a long shot. I win trading contests. I just won a global trading championship, first place. I made it to the top 5 in the Robin. It's hard to do. I bounced off the leaderboard, but I'm probably in the top 20. Yeah. No, but not gonna lie. I know everybody out there. They're all good, but I'm better. They're all good. I'm just a lot better. How many contracts does it take to move Nasdaq 100 points? There's no correlation between the number of contracts to move Nasdaq. Nasdaq can move 100 points on like less than 1,000 contracts sometimes. Now it depends on how thick the market is. I mean, the bid and ask on the Nasdaq is always so thin. It's a couple contracts on either side. One contract can move in 100 points. There's no correlation. On average volume, overnight, you'll see maybe 200 or 300 contracts can move it, 40, 50 points all the time. Well, let's take a look. Yeah, that's a silly question to ask though, because the question doesn't make sense. It's not really worth even having an answer to that, because the market dynamic is so different every single day. You wouldn't want to correlate how much it takes to move the market. It's almost like silly to try to think about like that. Like an example, here's Nasdaq moving, what is it, 140 to 240. On average, it's like 100 contracts every minute, give or take, for 1830, 1850. So 30 minutes, times, what is it, the average about right here? 30 minutes times 150 is 4,500 contracts to move in 100 points. But then again, another day could be like 300. Another day could be 10,000. I wouldn't think like that. If there's no buyers, if you buy one contract and there's nobody there, everybody's joking when they say at least one. They're kind of just memeing, because you can't measure it. There's no correlation. Yeah, as Fixed Moon had said, the exact answer is that there's no sell. It's all liquidity based. Is there a catalyst active today? Let's double check. Good question. You guys are so smart. I should be checking that for you guys. What's the risk interval on S&P? It's 41 and some change now. Yeah, catalyst is now active. Let me tell you in the Discord really quick. Yep. Smart. Okay, let's do it. Risk interval. All right, go to Rocket Scooter. Open up your tab. Go to RI. Go to ES right here. 41.75. Let's calculate it. Yep, CAT is active. Y'all are fucking smart. All right, CAT is active. 41.75. Let's see the anchor point. Y'all pay attention to the classes. I love you guys. All right. Let's do it. Where is that? No, not there. Here she goes. Here's your anchor point. All right, let's do 41.75 box. And booty market today, right? I could just tell by looking at it. Here and there. Yes, sirree. There it is. Oh, they're so smart. Y'all ready to see another catalyst? Ugh. I'm glad I'm on the sidelines, man. I took my money. I'm good. Cat active. But I had enough signals to scare me out of the trade anyways. I mean, I told you guys. Hey, we had two irrational checks, and that kicks me out of my medium-sized long. Catalyst is active. There it is. Let me put the level in the Discord for you guys. Man, y'all are so smart. See, I love when I teach something, and then I love when you guys tell me what to do. All right, that's the level. So catalyst active is automatic sit out and don't do anything below 59.13 at all. So that is the active catalyst line in S&P. You guys are so smart. I love it. I love when you guys are on top of it. Was it 59? What was it again? 59.14. I'm gonna draw on my chart. No trading whatsoever in either direction for me when cat is active. Was I using like a pink line or something? There you go. Yep, nothing. Nothing. Out of the way. Options are so complicated. Yeah, they're horrible. The actual win rate percentage for losers. Well, I don't keep people's data. That's between them and their broker. But like I show my stats. When I did, this was the competition I just won. So I did a futures trading competition with Elite Trader Funding. So this was my stats during the contest I did. So this was a month. This is October's month of trading. I did a contest. It was like a 10K start. And this is my trading. And that was 80% win rate for the month. And it's pretty commonly, my percent win rate is like 70 to 80. But like my stats don't imply your stats. And I show people so you know that I really trade. So I won a trading contest with it. I got first place. There's my name, first place. With 80% win rate. But I like to be fair. To let you guys know I'm really fucking good at this. I'm one of the best traders you're ever gonna watch. On YouTube, I'm the best trader you're ever gonna watch. But doesn't mean this you'll be the best trader by buying my stuff. I'm like, actually, that's why I'm the worst salesman. I can tell you guys all this all day long. I make all this money. I'm the best trader. Buy my shit. You're gonna be great. You know what I tell you guys? All of y'all are probably gonna fail at trading. No offense. A lot of you might do well. I'm a very good teacher, but statistically, most people fail at trading. So I'm honest. Like, clearly, I could be parading my victories and telling you I'm the best out there by my shit, but I'm like, I'm the best out there, but I'm a fucking genius. That's the difference between you and me. And it's hard to replicate what other people that are really good at something does. I just say it the way that it is. No offense. You're probably a genius too. But I'm very honest that there's the probability is very low that you can replicate what I can do. So my 80% win rate doesn't mean your 80% win rate. So I'm at least I'm honest about it, right? See, I'm the worst fucking salesman there is. If there's no correlation between price movement and volume, then what's the point of using it? It's called relative volume, Sam. Because it's relative. It's the amount of volume. It doesn't matter if there are 3 calls and 1 put at the same level versus 3 million calls and 1 million puts. The liquidity difference is still the same 3 to 1. The pressure is still the same. The amount of volume doesn't matter. It's the relative volume between bears and bulls that push the market. An example, if you and I are trading an illiquid asset, name something like a collector's item, right? Very illiquid. The price discrepancy between where you want to buy and I want to sell is massive. And there's a big, massive pusher pull on a high ticket item, but there's not a lot of people wanting to buy it. So the amount of people that want to buy it doesn't matter. If I just get two people that want to buy that baseball card from me, I can enter into a bidding war and really get a good value out of it. But that's only two people. But if I'm trading something very liquid, I may need 3 million people or 5 million people to get a bidding war of a difference. The amount of volume doesn't matter. It's the difference between bulls and bears and liquidity. How do I know it simply isn't from manipulation? Oh, hold on one second. Oh my God. Pickle broke out of his enclosure and he was eating my eggs. Pickle. Pickle was eating my eggs. How do I know it isn't simply manipulation? That word doesn't mean it make any sense. There's nobody controls the market, and people bid on the market fairly, even market makers. To say that there's manipulation, there's no magic hand moving the market. Let's start over with that. The bid and ask is set by a sum of people doing stuff independently. So there is no, so to say there's manipulation is, let me just educate you on that. There's no secret man. There's no disagreeing with anybody. It's not an opinion, it's a fact. Nobody controls the price. When futures, the Globex controls the price. That's one thing. The Globex sets the bid and ask in futures. In stock market, nobody controls the price. It's not even a thing. It's not even possible. The bid and ask is set by market makers. And there's dozens of market makers for each stock. So the difference is. Here, this is from October. This is, I tweet this. I tweeted that. I think last week I tweeted a payout. I'm about to get another payout. I actually show my bank deposit. That's even different. There's verified payments. Like, you can go on my YouTube channel. I went like a 75-day win streak, dude. I show everything. Hold on, let me go back to the party pictures. Like, I even come in here. Look, I'm funded with the live elite because I kick out so much money from these guys. They gave me money to trade with. Profit, P&L. Every day I post my tweets, and you can watch me live stream them. They're all real. I post, like, when I took my payout, I put like a picture of the bank deposit in here somewhere. I tweet a lot though. Here's a transaction to my bank from Rise. This was after 3 weeks of trading. So, and I'm about to take another $20,000 payout on Friday. Listen to this guy. Sam, there's a reason 10,000 people in Rocket Scooter. There's a reason 4,000 or 5,000 people watch my streams live. And not you. Because you don't know anything. Pickle knows more than you. There's manipulation with institutional traders. Yeah, but the thing is that you guys have to understand manipulation. There's no manipulation. They're just applying pressure just like you and me. This is why you guys don't understand. If you're saying there's manipulation, they're trading against other traders. They're not able to control anything. If they buy the market with a lot of pressure, that's just like you buying the market with a lot of pressure. There's nothing special about buying a lot. You're manipulating the market if you buy a lot. You're not manipulating. You're just buying against the ask. If there's a willing seller, it's going to go nowhere. If there's no willing seller, price is going to go up. There's nobody controlling the market. So I can actually prove that in many different ways. Oh, my verified track record. That's different. They have resources to move markets, Timmy. Let's start over. They have resources to move markets, but they're not manipulating anything. They're moving the market. And that's why I was correcting you guys on to say it correctly. I'm the world's most expert on market making to teach you guys how it works. Anybody can move markets with money. You have a pressure pushing against you from selling if you're buying, and you can move markets with enough money you can buy. But if there's a willing seller, markets will go nowhere. If there's a willing seller for everything you're willing to buy. So you can't, manipulating means you have the power to sway or change. You don't know if you have the power to sway or change. If I put $1 million to buy S&P right now, I can't tell you how much it'll move the market. Nobody can, because I don't know the willing sellers out there on the other side of that trade. You don't know. Nobody can. So I can apply buying pressure, but I can't predict right now. If I buy 1 million shares, how high will SPY go up? You can't calculate that, right? So. Nobody manipulates the market, Sam. You eat paint chips. You're dumb. You're literally dumb. I'm gonna hide. What I'm gonna do, Sam, I'm gonna hide you on the channel. So what I'm gonna do right now, and I'm doing this for your favor, so I think you have some time. I just timed you out for 6 million minutes. And when your timeout is over, what you do is like stand in the corner of your room. So there's a corner right here, right? You go stand in the corner. I want you to put your nose in the corner, right? I want you to think about what you did for 6 million minutes, because I'm manipulating your experience, because I can do that. Bye-bye. But nobody manipulates the market. But think about what you did. If you apologize, I'll get your ass out of timeout. But I'm manipulating you, motherfucker. So enjoy your stay in purgatory. So anyways, what I'm saying is that you guys watch me trade every day. You guys see my payouts. I post my performance reports on Twitter. I post my bank deposits on Twitter. You guys want me to post my fucking tax return? Jesus Christ. These are just people that are mad nobody follows them. Anyways, back to what y'all are talking about. Manipulation is a buzzword, as OD says. I agree that people use when they're frustrated with losses. That's it. There's no magic force manipulating, but you guys said it right. Timmy said it right. You can move the market, but you're not manipulating. Manipulating means you can control. If your spouse is like, you're manipulating me, it means you're trying to gaslight or control their behavior. But no one entity can control the market because it's the sum of everyone's activity. No one's in charge of the market. With the exception of futures, there's a math equation that's in charge of the market. If you guys didn't know, futures is different. The Globex has a pricing algorithm that sets the bid and ask. It is a neutral equation that sets it based on liquidity, and market makers must line up on either side. Futures is different. The stocks, however, are bid by market makers. No, I banned the guy because he said scammer. That's just not productive commentary. I'm the only trader that actually shows everything I do live. I literally show. You can see everything I do. Go add up every stream and watch. So, but you're not manipulating because you have equal control. If I long the market, somebody can also say, let me sell to every long he has. So I didn't manipulate the market. I had no power. If I long 1 billion shares, that order goes to Citadel. Citadel finds a market maker and immediately wants to sell to me. Okay, they sold 1 billion. In that example, the market moved to 0. So I didn't manipulate anything. I didn't know if Citadel was going to find another seller to me. If I bought 1 billion shares and Citadel can't find anybody and a bunch of market makers had to jump into different places and the market moved up 1%, then I changed the market. You have the ability to change. You have the ability to move, but you have no ability to manipulate because you cannot see on the other side of that veil the pressure pushing against you. If I'm going to manipulate a box, manipulate means to change. Then I could push a box up a hill. I know exactly with the force I apply how much it's going to go up. But I have no idea how much force I apply will the stock market go up. So you don't have any form of control that you can predict. You can move the market if nobody's on the other side, but you can't control the market. I want to move the market 10 points. That's control. So manipulate means to control or to change to a predictable amount. Okay. Manipulate means to control in a skillful manner. I want S&P to be priced at 59.20 right now. How much do I need to buy to get there? If you can tell me how many shares it takes to get there, then you can control. The fact that you can is the reason you don't. And so it's a real question to ask. Yeah. I post my monthly progress reports. So if you guys are anywhere, I post what I do. You can see every single month how much I make. I tweet my P&L every single day. Every single trading day I tweet it. So the difference is, Timmy, you're right, but the verbiage is wrong. So like controlling to a level is like, how much money do I need to put in the market to move at 10 points? You don't know, because the function is the demand versus the supply. What's the supply of sellers? If there's no supply, it won't take me any money at all. If somebody wants to fight me off and infinitely sell against me, then I have no control. They're preventing me from moving the market. So the idea that I can't see the other side of that means I have no visibility of what I can control. If I own the full supply of, I don't know, let me name something like fucking Celine Dion's last concert, and I own every last ticket for that concert. I own the entire supply. I can manipulate a market if I own the entire supply. I could set the price for that ticket for any buyer out there, and they got to buy it. That's the difference. Whoever owns the entire supply can set the market and manipulate it, but not any one party owns the entire supply. It's a amalgamation of a bunch of competitors. And so independently acting, there is no one single force controlling the supply. So mathematically, you can't control because you don't own the full supply. And that's a standard understanding of the supply and demand macroeconomics of what actually makes markets move to begin with. So it's an economics principle, but you can push price and you can move price, but to control the market, you must control the inventory of the market. If I owned every share of something, I can set the price, can't I? If I owned every last Beanie Baby in the world and you wanted to buy one, I could charge $1 million for it and you got no other choice. Therefore, I can manipulate. Do we understand the difference? Manipulation's a buzzword that like GameStop traders and shit use, like they're manipulating me to go. Now, there's nobody manipulating you. It's the natural supply and demand of the market. That's it. We agree, and it's all semantics. Timmy, we're on the same page. It's more like semantics. The buzzword is dangerous because it leads people to believe there's a magic entity out there trying to squeeze them out of their trades instead of them just facing the cold hard fact that they're just not good at trading. Have I ever seen the order flow right before a T1 news release? Let's say CPI. That's what we are. We're order flow prediction. That's what we can do here. You don't know how much volume there is in a news release. It's different every single day. Hey, Samir, I'm going to question you on your market dynamics. Do you know what happens when a news release happens and the market moves a certain distance? I'm going to answer this. This is a technical question. And before we continue the conversation, I'm going to ask you a quick question about what you understand about markets. It's a futures question. Nobody answer it. Say that the CPI comes out and then futures moves like this. And then you don't see any change in price or order flow until here. And it looks like in the middle of the sell-off, there's a gap in the price. You know what this thing is called? You know what happens here? No trades. It just jumps. There's a thing here. I'm going to see how much you know about order flow on events. Do you know what that's called? What triggers this? Samir, go ahead and answer the question because you're coming in here as an expert. You must know everything about the Globex. There should be a name of it. There's a name. There's something that happens here. And since you know, you're trying to teach me, since you know, clearly you know the name. All right? The same guy comes in on a second account, keeps trolling. He doesn't know the name. So I hate when like would-be experts come in here and try to teach us something. They don't know. They don't know there's something here. Did you know there's an algorithm that controls this mechanism right here? There's actually, do you know the name of this? It's a trick question. There's actually two things that took place. Do you know, Mr. Expert? Do you know? You're here to teach me, so teach me. Do you know the two things that happen on the Globex that cause price to gap down intraday while trading's happening during an event? You must know. I'm here to learn from you, Mr. Expert. You got everything in the world to say. You don't know the name of this? These kids. These kids spend like 3 fucking weeks trading Apex. They come here and think they understand futures market against the king. Bro, he's a fucking kid. I'll mute him too. All right, listen. Here's what you got to do. He doesn't know the answer. All right, so what this is called velocity logic. It's a protocol on the Globex itself. CME Group gives you a video on how they actually manipulate.
Welcome. This video explains how velocity logic monitors potential significant price movements in extremely small time increments on the CME Globex trading platform.
So velocity logic triggers a protocol in the CME Group's Globex, which actually manipulates price, but it's based on an equation, so it's fair manipulation. And velocity logic triggers, what happens is the market ceases trading, all market orders stop right here and hit the Globex, rejects all orders, and then what happens is the second protocol called the IOP, indicative opening price, goes here, and this guy gaps the price down to here, and there's 2 algorithms that set this to happen. So since you don't know that, I don't even think we're in the same league to have a conversation about liquidity and what happens during events. But I advise you to go down here and read up on how the market making world actually works instead of what you learn on fucking Wall Street Bets, kid. And so there's a free education for you, and the rest of the stream is free. So like I said, I love when these experts come in here don't know anything about the fucking market. So the CME Group actually, if the price moves too far too fast, will cease all trading for a split second and then run a calculation called the IOP, which calculates the new price to open the market at. And this will all happen in a split second. It'll be so fast, you can't even see it happen unless you open up on a tick chart. But I love when these experts don't know anything and they come over here to try to teach me something. But yeah, I'm the world's expert on CME Group, so I'll teach you guys everything you want to know. This is protocol.
Welcome. This video provides an overview of indicative opening price.
This is the calculation they use to gap the market. Did you know when futures open and close is a calculation that the CME Group has, and they even give you videos on how it works. So I advise everybody to go read this and watch these videos. Yeah. Today, I've kind of talked myself out of doing trades today. A catalyst is active. So when a catalyst is active, we don't particularly, I usually sit out of the market when it's active. So to ask questions that are silly, like what's the volume before an event? Like these are like amateur questions. These things aren't anything you guys should be concerned with. The market, the futures market is controlled by the CME Group's Globex protocols like IOP and velocity logic are actually things that set the price. There are equations that set the price. Every single night when the futures market opens this opening price is calculated by the CME Group. The futures market is calculated to open there, and it opens exactly there every time. You didn't know there's an equation that gaps this, then that's what the IOP video is. Go watch it. So velocity logic allows for a reset of price to a more liquid spot if the price were to move too far too fast on a large order. So the entire question about futures, if I were to buy 1 billion shares and there was no liquidity on the other side, trading would stop at a certain level and price would gap to the point where liquidity would be with no volume in between. And on a tick chart, you'll see candles like this, and then you'll see candles right there with a gap in between them. So they don't even let me control price to a certain point. Even if I could manipulate it, there's a protocol that keeps single large orders from pushing the market around the commodities world. I can go in there and sell 1 billion contracts of oil and change oil prices globally $20. It'll move a certain distance and I'll get fucked on the rest of my trade. There's a protocol that the Globex has to even prevent that from happening. So when people are trying to talk to me about how market structure works, I probably taught you guys 2 things today. There's an equation controlling futures price. It's tracking the underlying. And I mean, the weirdo that got banned said I'm full of shit. And we'll go argue with the CME group. Here's the equation, you numbskull. Here's the math that goes into it. And here's how they calculate the price with the largest matchable quantity to open the market at. And here's the entire computer logic chain on exactly how they calculate the pre-open gap price. There you go. So there are equations and things in place that kind of keep people, stop chewing on my desk, buddy, from manipulating the market. Yeah. Today there's no trade when there's a catalyst effect. I've already made $4,000 today. In my ETF, I've already made 1,200 in Apex. I'm cool. I'm cool with $5,400. You haven't learned this much from all the other streamers combined. There's a difference, like, you know, I spent a significant amount of time studying for the Series 3, but I never took the test. I have a long history in the futures industry. I created a trading platform. I have exchange agreements with all the major exchanges, New York Stock Exchange, NASDAQ. I have connection in all these places. So I know a lot about the industry just from building a trading platform. It's like, I'm not just a streamer. I built a whole trading platform with 10,000 user accounts. So the idea is that I'm not going to just be like a person that doesn't know a little bit about how some of this stuff works. Hey. I'm like a comedian on stream though. I heckle. If somebody heckles me, I heckle them back, and I'm usually funnier. Everyone knows I'm just goofing. I built the Rocket Scooter, this trading platform you see on the screen. And I run the company. There's 20 people that work here. How long until I can withdraw the 4K on the account I'm trading with? I can do, usually, I'm usually funny. I can do, with ETF, I can do daily withdrawals. So when a catalyst is active, I don't normally take trades. So right now, I don't take any trades. And a cat is active on the S&P at exactly right at the top of the candle, 1132. So right here, I'm usually out. Right there. As much as it's fun to take the high road, I'm very calculated in my approach. When you heckle and have fun, people love it. Look, let me explain something to you. As much as it sounds like it's fun to take the professional high-level road, there is some math when it comes to successive heckling over the last 15 minutes. I think there's probably like 30 more people watching the stream. So look, I wouldn't be a math genius if I didn't calculate every single moment of existence of my time to make the most money possible. So, I mean, I know everything I'm doing makes a lot of sense, but heckling is fun and you guys enjoy it. For the one person that hates it, 99 people love it, and then 30 more people show up to listen to it. So when you say a catalyst, actually, what do you mean? People love the drama. Yeah, I've taken a page out of the Patty Weiland playbook. He learned how to draw a crowd. I think it's fun, but I don't go out of my way to pick on people. I just make the hecklers feel really bad because they can't out heckle the heckler. And I'm not being insecure or weird about it. I'm trying to be funny for views. So the first time watching you, what do you mean the catalyst is active? So catalyst is active, there's a trick. We teach a class on this. I invite all you guys to come to the class. The classes are $20 for 20 classes. So there's a link being posted by the bot. You can see it. A whole class on catalyst was taught a couple classes ago. We have 20 different classes. They're all on different things. This particular number, the S&P, is 4175. When the market moves on a tick chart, that distance in a straight run with no retracement, I show you how to find this. You measure 4175. And below here, at exactly this level, 4175 from here is a predictable high volume spike every time. And there it is. You see, I see that? This is a catalyst is active. We can predict from any moment in time how much the S&P futures or NASDAQ futures move to where it triggers in a catalyst. Things that you'll notice when there's a catalyst is active. Number one, no trading whatsoever. Okay, that's rule number one. Number two, VIX, VVIX goes up. Okay, this is just a thing. The volatility of the VIX goes way up. Number 3, the market curves, meaning that you start to see curvature. There's curvature at how fast it starts moving. It's not just moving straight down. You can start to see even here, there's a little bit of curvature. The market is moving and speeding up as it falls. So number 3, acceleration. Volatility is up. The market's accelerating to the downside, and it's just very dangerous. Number 4 is predictable high volume spike at exactly this balance point. There's something weird going on there that has to do with hedging. It has to do with all these CME protocols. So what I did was, now I teach you guys, there's like these videos and algorithms on the CME. I've read every single patent the CME group's ever put out. I watch every video. I've read everything. I know people that are market makers for the major banks themselves. I know a lot about the industry. So using systematic things like IOP, velocity logic, you can extract information from that. The protocols are there, and they're repeatably there, and they're always there. The risk interval has to do with margin requirements. There's an exploit on margin requirements that state after a certain distance, there's a high probability of margin calls. And on number 4, I said velocity VIX goes up, there's acceleration. Number 4 is sporadic volume, okay? The normal volume distribution is high volume at the open and high volume at the close. This is a day's worth of volume. But as you see, sporadic volume happens when a catalyst is active. It's not a nice little clean distribution. Matter of fact, the market volume is looking like this. It's not a clean UJ-shaped curve anymore. So it's predictable when you move this far out. Margin call probability is high. Margin call. It has to do with the people getting squeezed. There's a lot to this. We teach a whole class in it. But the idea is that it's predictable high volume every single time at exactly 41.75 from this candle, and you can't argue with that, and it's repeatable every single time. So here, the market starts to move very crazy. S&P's up and down 30, 40 points in minutes of time, and it's dangerous trading. So when a catalyst is active, we have 2 actual sit-out rules. This is one of them. What was the catalyst? I really wasn't sure. I wasn't paying attention. Was Powell talking? Somebody said something about Powell talking, but it doesn't matter. It's a lie for whatever's happening. So I'm not interested in touching the market. I'll only trade if this is reclaimed. Makes sense. There's somebody asking about my track record. Pickle. Daddy's about to request $100,000+ payout from Apex. Oh. And I just started with ETF a month ago, and I'm about to take 20K, which is 35,000 in the last 6 weeks. Actually, and I'll post my bank statement. So is a bank statement good enough that people don't call Photoshop? Daddy won a trading contest in October, beat 1,000 people. Or 500 people. How many people were there? Oh, yeah, that's cool. Pickle says, look, are going to 570s? Probably. So find me a trader out there that posts their bank deposits. That's like next level. I'll show you in Rhythmic if they had it. So I use R Trader for my ETF account. Rhythmic doesn't have a statement that the broker platform can show. The Rhythmic platform doesn't have not a statement, but like a performance report. They don't show you a performance curve. If they did, I could show you, but Rhythmic is stupid. I've only been trading my ETF live account since the end of November, and I'm up 400%. 400%. This guy's mad that nobody wants to buy his garbage algorithmic trading system or whatever it is he's probably selling. I think this person comes in here every 2 or 3 days and has a hissy fit. It's the same language every time. It's the I'm better than you. I'll tell you something. Let me teach you something. I know this. You're bad. It's just like always one. It's always one person. And when you ban them, they make 4 or 5 fake accounts. It's always the same person. It's always the same guy. It makes me think that they sell something, but yet nobody wants to see them. Maybe they don't understand about manipulation. Maybe the industry is manipulated to not give them any visibility. And they're just mad. And maybe they talk about manipulation a lot. Maybe they feel like the world is against them. Well, let me tell you a fun fact of the world. You get everything you want in life. People like you. And that is a fact to take to the grave. That's all that matters in this world, is that people like you. If you sound like an asshat, nobody's going to give you a light of day. I don't care what you do or give. But what's neat is to know that they come and watch me. And I appreciate people come and watch me. The stream has doubled in size in the last week, which is crazy. It's so crazy to see such a big turnout over here. So the problem is there's no more trade down in here now that CAT is active. So today I will take a long reclaim on monthly hedge pressure if we get it. So that's the only trade I'm waiting for today, is a long break to there, and I will take it. But unless we get it, it's sit out for me. I'll take my 40, 30, 50. I'll take my $5,100 and call it a day. Just kind of down on that. I'm okay with. Yeah, so like honestly, I only trade at a high volume pivot. I never chase. I'm only gonna trade at my pivots. I'm gonna follow my position sizing guidelines to a T. I never deviate. It would be rare that I'm going all in on this. I just follow it to, there's really nothing to say other than I have a plan and I follow it. There's the mechanism of, I don't feel trading anymore. There's a lot of people that feel something, like feel nervous, feel scared, feel happy. I don't feel happy when I make money. I don't feel sad when I lose money. I don't feel the market anymore. I'm like numb to it. And so it's easy to follow a plan when it's all numbers at that point. And it just years of like doing this to whittle it down. And you guys can check it out. Like I said, I'm not a salesman by any means. I built a trading platform, and clearly I got to sell the platform. But you guys can go here. But I just show my live trading, like it or hate it. You can't argue with what you see. What up, Joe? How you doing, man? Go here. The charting platform itself is $99 a month for the first, or $99 for first month, and then it's $199 each month after. So it's access to a trading platform, and I just use the platform on the stream. The triad diagram, the options market makers need to. So that triad diagram is a simplified explanation. There's a lot more what we look at, but that's the easiest way to understand it, even though it's kind of complicated. But in that particular example, do options market makers need to buy stock to hedge against the calls? They don't need to. They can buy anything, such as futures. But the idea is that for the most part, something like SPY itself, SPY options will likely be hedged in SPY shares because the options are exercised for shares. So in that example, the largest amounts of hedging will be of SPY shares themselves, because options and equities, or American style options, can be exercised on any point in time that they're in the money. Futures are different. Futures are European style. Even like NASDAQ and S&P futures options are European style. They can only be exercised when they expire. So there's no real risk of them being exercised on at any moment in time. They usually hedge these things with cash. Sometimes cash hedge, or they can go out there and buy something in an equity derivatives market to hedge as well. But in equities, the highest probability is that options will be hedged with shares, because they can be exercised on any point. You only caught with your pants down and not have the shares to be assigned, or else you're forced to buy the shares on the open market at that moment in time when you're exercised on. Can you use rocket security with prop firms? We all do. I'm doing it right now. This is Apex on my screen. So you can't trade The prop firm inside of here, Tradevate doesn't let you. You got to stay within like Tradevate confine or whatever. And Rhythmic isn't compatible with our service. But I keep my Tradevate Dom here, my Rocket Scooter here on the side. What's up, Future? You're agreeing on every single account? There you go, baby. Let's go. Like I said, you guys can go read the reviews if you care what other people say. I don't, like I said, I don't sell. I'm not here trying to, I haven't been telling you guys to buy something this whole time. I brag. I tell you guys I'm an amazing trader, but I'm not here selling anything. But if you guys care, let other people sell it. This is what all the customers have said. These are customers when they said it, what they bought, lifetime member, what they said. These people can change their reviews. They can leave other reviews. This is what everybody has said. Actual customers. I don't entice people and pay people nothing. These people come leave. Somebody left a review 7 days ago. Let's read what Embassy 5 said. Have you ever tried to drive without looking outside your car through the windshield? How much influence that the options have on the market futures? So I started to spend $20 on this training. I had 2 objectives, spending a nominal $20. Determine if this YouTube channel software training was non-useful, as so many I've seen before. And 2, if the individual offering training will later offer some training for $5,000 that would guarantee profitability. I'm pleased to advise that neither, I haven't even read this yet. This is funny. Neither turned out to be true. So I didn't rug pull and say, joke's on you. Here's $5,000 cost. It's $20. It really is. What are you doing does not result in the outcome you desire. You need to radically change the process. We need to drastically change the retail speculation model. Matt is helping affect this change. Spend $20, see for yourself. The only way to know. It's very cool, Embassy. I really appreciate it. Looks like they bought the 20 days. Has something nice to say. So ABEX isn't a problem. ABEX is having a lot of problems right now, so I'm hearing. Like I said, I'm hearing through the grapevine. Now, I can't testify to that because I hadn't experienced it yet. If they deny my 6-figure payout, I'm going to be fucking pissed. But at the end of the day, if they deny my payout, their business will die within a month. If I put that shit on blast, and then all my influencer friends put that on blast, if an influencer gets denied a payout, the prop firm will die overnight. It's such a cancel culture in trading. Like if Pat Weiland would have got denied, they're not going to let the influence of millions of traders. And if so, you know there's a problem. If you're an influencer and they deny you, they're dying. The company's dying. They'll be dead within a month or two. Not only from the social fallout, but for the fact is that that's a big deal on their books. They don't have the money to pay out. And if influencer is saying these guys don't pay out, people will jump ship overnight. So it looks similar to TradingView. Yes, full port. So we white labeled TradingView just for their charts. So the part that is similar is the TradingView charts. So we have a special license with TradingView to build on their platform. So right here is where we started, and we built our stuff around it, our liquidity maps inside of it. So we basically are like a TradingView version on crack. It's our own version of it. I'm not, well, okay, on YouTube, I'm not bigger than TraderMap, but in futures communities, I am. As far as like futures subscribed paying members, like people that buy stuff, we're probably the biggest as far as that goes. Our YouTube presence is not as big as Matt's. Matt's the biggest YouTuber out there. And Matt's a very close friend of mine, by the way. But Matt doesn't run a trade room business either. So Matt's customers are mostly free viewers. Ours are actual, like the amount of people that pay for prop firms under the Rocketsuit umbrella is probably bigger than any other community. Just because these are people that buy stuff. And so we're big in the community space as far as like a business goes. So as far as the influencer space, no, like Matt's fucking huge. Matt's awesome and really big. But as far as like paying customers goes, we have a big paying customer base. Yeah. So like I said, like Rocket Scooter has over 10,000 user accounts, and that's paying people that bought the platform or subscribed to the platform, and they're all futures traders. So as far as like that goes, I'm not saying like I'd go out there and try to bring Apex down or anything. That's not what I meant by that. I meant to say that if I were to say, these are my stats, this is the trading, and they deny me and there's some shenanigans, it would have a very big fallout, not just with me because of my saying so, But because other people would affect, like if I said they deny my payout, it'd be echoed by everybody, right? There would be like, Matt would talk about, these people would actually say something about it, and then everyone would hear about it. Like it's such a small trading world that like if Pat got denied his payout, Apex would have had a loss of credibility very quickly because it's such a large amount. Matt wasn't trying to request 600K. That's the difference. I'm trying to request 6 figures when I do mine. So the difference would be that in this day and age, it's a lot more sensitive than when Matt got denied. But Matt got denied for a real reason, though. And he ended up doing okay after that. He didn't get denied for like a shady shenanigan. Like the company's losing money. I think he like, Matt DCA'd. That's why, if I remember correctly. Matt Miller. Here's a Matt. And Matt's a really good trader. I love Matt to death. He DCA'd. That's when they had the DCA rule, and that's why I get denied. But they just make you trade longer when that happens. Oh, Jake, you like my office, bro? Nice. Do you have any videos on the features of Rocket Scooter? I think in the old training videos we do. Just search to the Discord on like the features of how the platform works. There's some in there. If you ask me if I think someone else is a good trader, I usually don't like to comment on that. I don't like to play favorites among my friends. I think everybody that streams is decent in general. Like, I don't have anything bad to say about any of the streamers. And plus, everybody out there is at different stages of their career. Like, some people have been trading 20 years, some people have been trading 2 years. You know, there's a difference. Not everybody's on equal playing fields of experience. So it's kind of hard to like apples for apples say somebody's good or bad. Relative to his experience, Matt's good. Matt's newer to the game than most people. Relative to like the influencer space. Matt's like less than 10 years in the game. But for relative to how long he's been trading, he does very well. For his experience level. So it's like you have to really take into account a lot of effects. Like there's a lot of things that go into somebody's, you say quote unquote good or bad, whatever your standards are. My standards are at a certain, after 5 or 10 or 20 years, you should have a certain amount of wisdom that you have from that experience you put in. And at Matt's level, he's certainly, if not on par, even better than what I'd expect for someone with his experience. So that's a thumbs up for Matt. Now, while I'd say Matt is a newer trader than most other, big name traders out there, like less than 10, he's been trading about close to 10 years now, a little bit under. For what it's worth, people at his level aren't as good as him. If that makes any sense. I know a lot of people that have been trading 5 or 10 years that are absolute garbage traders with no style, no system, no consistency, no payouts, nothing. Matt gets payouts all the time. He does very well for himself. Yeah, no problem. I love being on stream with you guys. And I try to be honest, and I love people that are honest about what they do. They don't pull the rug. Believe it or not, Matt is honest. Matt and Pat are both honest. They both tell you how it is. Pat though, that's just trading after he did his payout. He was like, guys, I was a shit trader for so many years. He was literally saying that. He's like, I was dog shit. I was terrible, dogging himself. He's like, it's a really long struggle, and I finally did well, and now I'm going to do well going forward. I mean, it's like, it's a true trading journey watching that guy. I mean, it's not just like I'm the best and I can't prove it. It's like literally, you guys watched me and I was bad for a while. Now I'm good. It's like you got to respect somebody's journey because we've all been through that, and there's something valuable about that honesty. That's what I like. iDoc, look who broke out of his kennel, and look who ate half of my eggs. I heard some commotion out there, and I walked down. Pickle was eating my eggs. What's up, buddy? Can you believe it? He ate all my eggs. Mark, yeah, Callus is active. I'm not going to do any trades from here. I would say the majority of YouTubers that actually show their trades are worth watching. People that can watch trade on stream. Rips trades on stream. I've never really seen his show, but he posts his P&L, I think, every single trading show he does. Matt, you can see what he's doing. Pat, you can see what he's doing. Like a lot of the bigger YouTubers are very transparent about what they're doing, which is nice. That's really what you want. So you say on the stream how much you make for trading. My average day is plus or minus 10,000. This is the average day. Today, like I said, my actual ETF account, again, let me show you the picture. My actual ETF account is here. This is my funded ETF account. So ETF today. So remember, I started with the ETF in November. The account is up a lot. I'm not really taking money out of it. Just a little bit, because like we just bought a house and we just spent like, God, how much did we spend on shit? We just bought $50,000 worth of stuff. Couches, tables, chairs, paint, customizations, this and that. Probably like 40, 50 grand. We just bought a couch and a table for like 20 grand plus. So I'm only taking out money to pay for stuff for the house. That's it. So the ETF, typically up or down, 0 to 10,000 a day. That account is up roughly. Hold on. Use the math here. I said 400%. It's more like 350%, give or take. And I'm only taking out little bits of money just to pay for stuff. I have more than enough money. I don't trade to make money. I make money. It's not like I'm spending money. It's all extra. So normally, like I said, a normal day is minus 10,000 to plus 10,000 range that I trade. So that's the amount of money I have that I'm trading with. That's per day. Some months I do very well. Some months I don't. Some weeks I do very well. Some weeks I don't. Couches are too expensive. Oh, that's right. Yeah. We get the table too. Oh, you want to make some more? Okay, cool. I don't trade after hours, Andy. Not often. Sometimes I do. I don't aim to do it. If there's a really solid MHP pivot overnight, I'll take it, but that's it. Do I know who iMan Trading is? Sounds familiar, but I don't think so. What is this? It sounds familiar, but I don't know. No idea. So I don't think I know them. Obviously, I bought a 20K couch. So I tweeted this the other day. I'm going to be very, 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 very honest with you about the biggest fact you'll ever learn in life. So let me tell you, there's two types of people in this world. There are people that don't have wealth and want it. And there are people that have wealth and don't want you to know about it. And there's a small fraction of people in the middle who are people that just acquired wealth and they finally feel great about it and they want everybody to know about it. Small camp of people, they're like, here's my Lambo, check out how great I am. I'm at the level where I don't want people to know how much I have. And if you ever go to the country club, you're never going to see grown men sit there showing their bank accounts. There's a level at which you don't want people to know what you have. And so like, I don't have money. I don't want you to know about it. So like where I am in life, wealth is secretive. You ask a celebrity, how much did you make on this movie? They're going to be like, yeah, I don't want to tell you. So when people are like, how much did you make? It's clearly, and I live in $1 million house. It's clearly enough, but I don't sit there and say, this is how much money I make because it entices you to buy my service. I don't want people to, number one, I don't want people to be enticed by how well I do to think that that's going to be them. I tell you, it's not. But also, I don't go on public blast with how much money I actually have because there's advantages to not sharing your wealth with people. Many reasons for that is the same reason you don't tell people you won the lottery. A, people want money from you. Either friends or relatives are going to want to borrow it or want to use it or take it. Number two, people that you don't know are going to want to take it. People are going to want to sue you. People are going to want to attack you, steal it from you. That's why you don't walk around a mall with a sign on your back that says, I've got $1 million in my pocket. This is the stupidest thing in the world. So when people are like, how much money have you made? And a trader's like, well, this is how much I made. It's like I answer the question because you ask. I like to keep it like this is how much I made today. So you can see I'm really trading. That's the only level I want to reach. You can see I'm really trading and there's real money. People are like, how do I know it's real? And I'm like, well, here's my bank deposit where I deposited the money from the brokerage account. Okay. And then here's the performance report. And people ask, in TradeAvate, I can share the performance report and things like that. I'm going to do my Apex payout. I'll show you guys the performance of those accounts too. But at the end of the day, when I'm like, I made this much money in all my business endeavors, there's obvious advantages that the wealthy have to not share what they have with anyone. So I kind of don't like to put on brag physical dollars other than to the minimal limit of proving you that I'm really trading. Did we pay for our house in cash? The down payment. I still do a mortgage like a normal person. How do I feel about precious metal or oil futures? Do I ever trade those? I used to trade oil when I started. The reason I don't, and by the way, let me just tell you guys really quick over here. Cat active, no trading. Cat, no trade. You will realize that people that don't have wealth want it, and when they finally acquire it, they want everybody to know that they have it. People that have wealth try to hide it for many obvious reasons. Many obvious reasons. It's kind of a standard for people to not let you know what they have. So I used to trade oil futures and commodity futures. I don't really trade a lot anymore because they have a lot more single acting catalysts. Oil, natural gas, these things move very quickly based on different events and catalysts, right? The S&P is a little more broad since it's an index. It's got a lot of stocks built into the index. It's a little bit more robust, and the catalysts that move the S&P are very easily seen. Something like oil can move because some random country bombs another random country in the middle of the night while you're sleeping. So commodities tend to have a lot more single acting catalysts that are like sparking larger moves, and they definitely don't trend as easily. And as I traded oil, I found out as soon as I moved to the S&P, it was a lot easier. He said somebody exposes scammers. He has a list right now on his Patreon on potential people to expose. Well, there's nothing to expose. You can go to my Twitter history and see contest wins, bank statements. I mean, I'm pretty public with everything I do. So what's he going to say? That I didn't win a trading contest? I'm not a life funded trader. That's all true. I invite people to give me some exposure. I'd love to see it. I'd absolutely love to see it. I mean, this is an actual contest. I actually won. This is like 2 months ago. You can't It's all history's all there. It's not made up. Hmm. Oh, what's up, Jake? Welcome to the sub with the green title. It just depends on what particular day we have. My normal trade, my length of trade time is usually 0 to an hour. Some of my trades might last for a couple hours, but that's it. I usually trade, I'm in and out of a trade in less than an hour. My win percentage varies from month to month, but lately it's been roughly 70 to 80% on some of my best months. In the ETF contest was the last big push I did for like high probability trading, like waiting patiently, trying to win something, like trying my hardest. In that contest was here. It was a month of trading and it was roughly 78%. So the win rate was there and the equity curve is here. So that's it. That was in October. It was the bottom level for ES. It's hard to tell right now. ES is very bearish right now. The catalyst is active. I'm not doing any trades below here. I trade live every single day. Every single day. Yeah, I invite anybody to give me a spotlight. I'd love to double my stream size in a single day. That'd be great. Some dude did it the other day. We came in here to like 400 people watching. It was crazy. And they go, oh, wait, this guy's really trading. What the heck? What the hell? So this year, my goals are to take, and I'm going to do this on stream. My goals this year for 2025, this is my resolution this year. Okay. Our resolution is as follows. This is what I want to do. We're going to post it. Okay. This is what I want to do this year. I'm going to take 100K payouts with Elite Trader Funding. Total. So currently, I've only been doing this since November, since late November. So I'm already at 15K towards that goal. 15K. This is what I want to be. 15K here. I want to do 100K with Apex. I want to get in the top 20 on the top step leaderboard. So I'm going to do A, B, and C. Boom, boom, and boom. And then of course I want to do some social growth. But I will do all of this on the stream or fail all of it on the stream, one or the other. But you guys can watch the whole thing. Do you have tools supporting Sierra Chart? All of our tools are inside of Rocket Scooter, unfortunately. We don't support other platforms with our tools. You have to use our platform for it. It's the only place it exists. Thanos didn't stick around. I miss him already. Giveaway today. Why is Stream Element saying giveaway today? There is no giveaway today. What the heck? What the heck? Stream Elements, why you fail me? Oh, oops, my bad. Let me turn that off. Giveaways on Friday. I trade mainly ES and NASDAQ. So today, so I'm a live funded trader with ETF, which means I'm trading real money with them. This was today. I traded both ES and both NASDAQ. This is in my Rhythmic Trader platform because they use Rhythmic, which I hate because Rhythmic doesn't have the ability to post a performance report. And I would if I could. At least show the percent. So our trader is absolute. If you ever use our trader here, you can back me up on this. I'd love to brag on hundreds of percent gain in an account. Fortunately, two things is the account balance. I can't reveal because I'm an NDA with them how much money they gave me. But number two, it's part of the contract I have. But number two is even if I could redact that and just show the stats. Our trader has no ability to show the stats. My stats here are very high though. I'm doing very well in this account, and I'm sure it's doing very well. But yeah, so this is my real account. So funded with them. I'm PA accounts with Apex. And so I'm doing both of those right now. And I always traded my real account too. That's usually always what I ever did until prop firms became like big and popular. So we kind of jumped on the bandwagon there. What the heck is going on with my necklace here? I get tangled up. Yes, sir. You guys stick around, you can see all of it live. I've had some pretty bad days, some pretty good days. Everything's transparent, so. I don't think there's anybody out there that's more transparent. But I invite anybody to open up an investigation and look into it. People come here, you can watch everything I do. Come on, get in here. What's going on there? But like people ask, why do you do prop firm stuff? Number one, ETF has funded me, so I don't even have to lose my own money to trade a real money account, which is good. Number two is it's just popular. If I didn't do prop firms, you guys wouldn't come to the stream. So I have to, as a person of influence in the industry, I also have to kind of do what's popular. If it was my choice, I wish it would just be me trading my real account and everybody wanted to see it. But unfortunately, it doesn't draw a crowd as much as prop firm stuff does. So. ETF is similar to Apex, yes. They're very similar. So unfortunately today there are no setups on the S&P. All long, if we break above here, I'll get back in on the long to finish up the day. But only if we break anything on here is a sit out across the board. It's a sit out when Catalyst is active. We know the rule here. No, there's just people. No. Nobody. There's no scam talk at all. There's nobody. They just said there's people out there whose job is to try to do exposés on traders, but that's just what they do. And somebody said there's a list with names on it. They're probably just people to investigate. But you come over here, you'll see that everything I do is transparent. So I invite anybody to open up a investigation or check out what we do. You think if there was since what we've been doing this since 2016, you'd think there'd be like one bad review about Rocket Scooter, and there's literally zero. Like Rocket Scooter reviews, there's zero bad reviews anywhere. So I think if there was one person out there out of the 10,000 people that have gone through the platform that thought the wolves pulled over their eyes, he probably would have said something about it, but ETF is more likely to pay out. I have no anecdotal experience personally to claim one way or the other. From what other people have said, Apex is denying payouts, but I don't know the reason. So I can't claim that there's a shenanigan or anything because I haven't experienced anything with either party yet that was bad. If you were to poll people, I feel like people would say that Apex from opinion, but again, it's an opinion. Take it with a grain of salt. The buzz right now is that Apex is struggling, and I can't back that up. That's just what people are saying. I haven't experienced anything yet. So I can't say that one's more likely or less likely to pay out. In my opinion, they're both likely to pay out. Do you want eggs or lunch? No, I'll just eat the eggs that Pickle didn't eat. Why is my ETF link not showing up on the bot here? Hold up. My bot is going haywire today. Don't forget to sub to the channel, you guys. We're here every day. Oh. Somehow that got turned off. And I was like, it's only talking about Apex. That's weird. 8% off. Sorry about that. Somehow my ETF timer got turned off. So we have a link for ETF. We have a 90% off sale going here, and you can just use our link if you want to do it. I don't want it. You don't have to make anything. It's okay. Pickle left me half of the bowl of eggs. Well, we'll drive the market up, Cal. It's just buying pressure. So like right now, there's nothing to do until here. He's sleeping on my lap. Yeah, if you want to come get him, come get him. Jake, we should play date with your hey buddy. We should our pets together and have a play date. You better come get Pickle quick, eye doc, for Jake comes and steals him. If you guys stick around, come on Friday. I'm going to do a 20K payout. It's tomorrow Friday, right? As long as I don't fuck up the trade. I'm going to do another 20K payout or another payout with ETF. 20K, so that'll be 35K towards my goal of reaching 100, which should be great. 100 total with ETF from the live account. So that was one of my New Year's resolution, 100. So if I do 35 will be a third of the way there, literally in the first week of the new year. I'm there, which is good. My goal is to see if the prop firms actually pay out. That's what I told people. I'm going to do it. I'm going to trade it for a while, see if they pay out. And that's kind of wanted to see if they do. So I show the payout on stream. I tweet the bank deposit. Not only that, I tweet the deposit to my bank account. And the payout and everything and the rise. Let me get here. Look, I show you everything. I not only show it, I tweet it, and the history is there, which is like more than what most people do. Well, Pat and Matt tweet theirs as well. They're both very transparent as well. But yeah, I definitely tweeted. Hold on. Come get it. Hold on. Come get him. Boy came and ate all my. You see that? He ate my eggs. Ow. Ooh.
Yeah. You want me to bring the eggs in?
Yeah. I heard like something clanking around, and it was like him. It was the fork hitting the bowl. Look at this.
He ate half of it.
Look at this. The dog ate half my eggs because I forgot to eat them fast enough.
Every time you hear me put it down.
Oh my God. I should have gone and got it immediately when you did that. Yeah, everybody guys follow me on Twitter. Yep. That's me. Cheers Paradise. Might as well give him the rest. Don't you egg him on? Hold on. Let me find my payout stuff. I thought I tweeted it, but I didn't favorite it. So let me favorite it so I can find it really easily. Hold up. Okay. Oops. Let me bookmark that. Where did I do? Where was this? Let me go all the way. I tweet way too much. Yeah, like on my Twitter, like I tweet my P&L like all the time. So I'm doing top step, but I'm pausing on that for now, while the ETF sale is going on. I'm trying to get on the top step leaderboard. So I have 5 accounts with them. These are from my ETF live funded account, and they'll back me up any minute you ask them. This is one day I had. This was like a $8,300 day on December 26th. I tweet every day. Like, this is my result. And then you can see me on the stream. That's what I do. Let me bookmark it. Here we go. It isn't real until it hits your bank account. My first live elite payout eventually hit my bank account. I started in late November, so I was not going to take out money until I got to 100K. But we also bought a house, and we were just gonna like, well, let's just take a chunk out. I also, again, the timing of it, I didn't want to take it out until 2025 tax year, but we bought some stuff, and we didn't want to like max out our credit cards. So here's the bank account transaction to my bank account of there. So I got paid $15,000, but the first $10,000 is free. Everything else after that, they take 10%. So, or the first $12,500 is free. So the second $2,500, they took 10%, which is why there's $250 missing. So I got my $12,500, which is mine, and then the next, everything after that's a 10% split. So there's the payment from Rise and my bank. So I'm posting my bank deposits there. There's the Rise from Elite Trader Funding. There's that. Let me actually favorite this because we were asked. Each day posting profits for every single day. This is my trade. These are the trades. I post my NASDAQ. I post my S&P so you can see. This is from my ETF account. So, yeah. That's it. You guys can see everything we do. Excuse me. Eggs in the morning and beef liver at night keeps him healthy. She's been making him like chicken and rice. So you guys, yeah, follow me on Twitter. That was with Elite Trader Funding, yeah. So like Elite Trader Fund, like to be funded with the prop firm with real money is different than the sim to funded. Okay, so sim to funded is a where you're still trading sim but getting payouts. So with Elite Trader Funding, Live Elite is the next level above that. You have eval, which is the sim straight up. Then you have sim to funded, which is you get paid in the sim to funded. I'm in the very rare category of live account. So like essentially when you're really good, they promote you here, give you real money to trade with on a K1. So it's a real trading account at this point. Live account, right? Embodying excellence, demonstrating the pinnacle of skills and maintaining consistency. Blah, blah, blah. Prestigious live elite set. So like I'm in the category with elite that I get daily payouts. No drawdown, nothing. I have a daily loss limit if I fall below the static level, the starting balance of the account. So I have no rules in this account. Starting balance is here. As long as I'm above the starting balance, I have no rules other than position size limits. And as I do well and keep doing well, they allow me to get bigger position size increases if I want. And I just got a message from them today, just for transparency's sake. You guys see, the better you do, the more they're going to let you trade. And let me hold up. And even today, let me redact the name. But you guys don't. But even today, I got a notice. You're doing so good. When would you like me to allow you to trade more? So That's the message from Elite Trader Funding, asking me if I'd like to trade more. And I don't know if I want to up my position limit size because I don't like taking a lot of risk if I need to. So as long as I'm above the starting balance, I have no daily, I don't have no drawdown limits, no drawdown, no daily loss limit, nothing. There's a daily loss limit below the starting balance of a certain amount each day, and then you're frozen for the day and you keep trading until you get to zero. So I'm so far above the starting balance, and I took a little bitty payout, but I'm so far away from like blowing up the account or even losing money below the starting point, so I have no rules up way up here. I don't have any rules. So the idea was I was just going to trade it and then, you know, pay out 100K, call it a day. So the daily loss limit below the starting balance changes based on how well you do. Mine is roughly $2,250, I think. So the starting balance, unfortunately, can't tell you how much they gave me. It's part of the rules. So I have to keep that mum, but I wish I could, because it's a lot, but whatever. They said, please don't tell anybody. I think they're taking a liking to me, and I think they don't want to make any of the other influencers mad because I got a lot. Meaning, I'm like ranked number 1 in their books. If you're below the starting balance, you basically only have a drawdown limit for the day, or a total loss limit. So below the starting point, let's do an example. If the starting balance was 100K, as an example, and above it, you liquidate at the starting point, and then you stop for the day. And then if you lose again, and I'm making an example, if $2,000 is your daily loss limit on 100K, 2%, then if you lose 2,000, it locks you out for the day. And the next day, you can lose 2,000 again, and you're locked out for the day. And the next day, you can lose 2,000 again, and you're locked out, et cetera, all the way to zero. And when you get to zero, you're done. Or whatever the minimum is to liquidate you. Maybe it's a couple $100, I don't know. But when you're above here, you can lose everything. So if you have your 100K and you've made 200K in the account, or you're up 200K, you can lose $100,000 before it liquidates you. So it's a static account, basically, at that example. It's a static account. So the idea is that you trade it like a static. So anytime you're above your starting point there, you can lose what you've made, basically. Do they have as many rules as Apex? Yes, they do. ETF and Apex are very similar as far as their rules go. Apex is a little easier, just to be transparent. Apex doesn't have a DCA rule anymore. ETF does. That's big for some traders. But they're both relatively comparable for everything else. But ETF is really good. Like I said, when I asked for a payout, I got the payout that day. I've had zero hassle with them. And as a trader, that's what's important to you guys, is making sure you do the work, you get paid. And I've never once felt any shenanigan from them. So again, that's just personal anecdotal experience. I'm not trying to sell you on the idea. I got into the whole prop funding thing because I wanted people to see the truth is. I'm like, I'm a good trader. Let me see if I can win this and make money. I started doing a couple of them. I started doing ETF. They had a contest, like we're having a trading competition. I'm like, oh, cool, let me enter it. I entered it and I won. And I was like, oh, that's cool. And then, like after a little bit of time, they rolled all my profits into a live lead account. And then I started doing that. And then I'm just like, okay. They have, let's see, hold on. Oh, these are the elite roles. Hold on. Live. I want the live elite roles. Elite trader funding consistency rules for sim funded. No, hold on. Rules. Elite payouts. Nope, that's not it. That's the account I'm in. The account you're asking for, consistency rule. There's no consistency rules in the live elite role account, but in the elite account, that's it right here. Okay, so here's the one you guys are asking about. So these are the rules they have right now for the middle tier, for the funded elite. They call it the elite account. So there's eval, then there's elite, and then there's live elite. So live elite's a different set of rules, but elite are here. So what you guys are probably experiencing would be in here. It depends on what you're doing. The 40% rule is that no active trading day can exceed 40% of your account. So it's a consistency rule at 40%. And I think didn't they get rid of this though? Not applicable to accounts purchased after August 1st. Yeah, so they no longer, that's right, they don't have this anymore. There's no more consistency rule with them. Full port, so consistency rule is no longer there for that particular style. They have a different one, which is, what is it? It's like the, it's what counts as a trading day. It's this one right here. So this is their new consistency rule, which is different. It's that when you have a big day, any day you place a trade results in a minimum of $200 in realized profit, or realized profit that equals at least 23% account. So example is if you make a huge account, if you make $1,000 in a single transaction, a single trade, then the very next day, your minimum for the day to actually count is $230 instead of $200. So your biggest trading day, if you have a big win day, like $20,000, each subsequent day, you need to make $4,600 for it to even count as a day. So when you have big blowout inconsistent wins, the subsequent days become harder to even count as a day. So you have to hit the minimum for it to account, to accrue the total number of days to get your payout. So this is like a self-regulating thing that makes it to where if you allow yourself to make a really big profit in one day, it's going to be harder for your next days. So you have to kind of like cut a win early for the day. So that's the thing. Yeah. How about me painting that door behind me black? I've had black painted doors before. It's pretty cool. But in this room, I want everything to be like light colored because it's really chill. Apex lets you scalp under 10 seconds. ETF does not. Oh, I didn't know that. That makes you feel like it's easier than Apex. It could be. So in both cases, if you're making $2,000 a day and you fix your loss there, $1,000 a day, and you fix your gain there, each additional day is only going to make you have to make $230 for it to count. So it's not that big of a deal. That kind of roll, I think, is easier than a 40% consistency roll. Because a 40% consistency roll forces you to trade more days total and make them win. But that 23% consistency roll to make it count as a day also makes you trade more days to make it count. But your wins have to be bigger, which kind of makes you have to trade bigger. If you won big, you need to keep hitting big home runs. So the trick in both of them is to aim for base hits. I call it robbing Peter to pay Paul. Both of them make you trade extra days if you bust a consistency roll. So you should just try to aim to be consistent. If you're trading 2 or 3 contracts, try to win $1,000 to $2,000 a day and let it be it. It's really a way to do it. Do I get slippage on a liquid market? Not really. Not these days. Slippage is when your order is bigger than the ask or bid and you fill multiple tiers in a single order and your fill price is bigger. In stock trading, you might see it a little bit. In futures trading, you experience no slippage at all. Because you're going to be filled at the ask or bid pretty much instantly. The liquidity is there in futures. How much did I make today? In my ETF live elite account, I made whatever these two added up are. 3,900 bucks. Or actually 4,000. So this is pretty much 4,000 on the dot. In the Apex, I netted 1,200 bucks. That's it. That's my rhythmic trader for my live elite account. Hey, is anybody from Elite Trader Funding here? Anybody from ETF here? Listening? Does manual repricing of contracts exist? ETF has a DCA rule, yeah. Not in the eval account, just in the real account. No, is anybody that works at ETF in the stream right now? Sometimes they're here. I have a couple questions. I don't stream on a delay. YouTube has a normal delay that's like 5 to 10 seconds. When I do my Zoom call, so I'm not doing a Zoom call concurrently today. When I do a Zoom call, the YouTube has a 1 minute delay on the stream. And that's so that people can't copy my trades. But if you're in my Zoom call, it's real time. So we do a Zoom call at the same time as YouTube. And that's real time. Does manual repricing of contracts exist? Like, can there be more sellers than buyers, yet price still rallies? So futures is different. Futures is priced based on an equation. So it's not just the supply and demand that gives the futures contract a value. Nobody has to buy anything for futures price to go up. That's the best part. Futures contract has two mechanisms. Number one, the futures, I'm going to put ES right here. ES is tracking SPX, okay? Which is equal to the sum of the stocks. Okay. So if nobody were to buy any ES, but the stocks are rallying and the SPX would rally, you'd see the ask move up and the bid move up even on no volume. So there's an algorithm that's tracking the stocks already. So it's really hard to answer your question, Kings, because the contract is tracking an underlying index. So it will move with no buyers or sellers because it's tracking something. So can it move based on repricing? Well, it is repricing to match the thing it's tracking, right? So to answer your question, hopefully that helps. I had a Zoom call on Wednesday. That's correct. So your last failed ETF, you did DCA by mistake with the same number of contract you had on open position and got approved. They're sometimes lenient on their DCA, which is what I like about them. They're not very strict on it sometimes. If you mess up one time and accidentally buy while it's red, they'll let it slide a couple times. And you're an example of that. And they told me that straight up. They're like, we take it on a case-by-case basis. Like if you drew down 90% of your account and then you quadrupled down and managed to crawl back to even, they'll probably deny your payout for doing that. But if you like bought and you're down a couple $100 and you bought again, you're within a couple points. I hear a ton of positive stories that they'll still approve. They tell you no DCA because they don't want you to do it. But if you're just accidental or it's one time, you're barely over, they've let it slide a bunch, I've heard. The price of futures markets are delivered algorithmically. So the price, so let me give you some semantics here. So there's no such thing really as the price of something. There's an ask and there's a bid, right? So there's no price. The ask and bid are always different. And then there's a trade that takes place at one or the other. So there are trade value. There's a bid and ask. So the price of the ask and the price of the bid, to answer your question for semantics, are set algorithmically in futures. So the best bid and the best ask are set by an algorithm, yes. And then market makers have to line up behind it, and it's all computerized. So if the Globex moves the bid and ask minimum and maximum there, the market makers will pile in behind the line. It's like a pace car in car racing. So the pace is set by an algorithm, yes. You close your Apex accounts, they put you on probation, Kulu? No way. For 2 years because of an old account you opened and never used? Oh, that's weird. That's weird. Yeah, Neil said close your positions, then double it. Yeah. I've been streaming for a while. Do I get tired of answering the same question? Not really. Treat as someone acting on Broadway. It's kind of it. It's like, I like teaching. I like talking. So when I was in school, I taught at the University of Houston. I love teaching, and I taught many years, and I repeat myself there. It's like new people have new questions, and I love answering the same questions. It doesn't bother me at all. That's kind of why I like to do it. Yeah, if you like ETF, check it out. If you scroll up, there's a link in a code that can use our link if you're going to get ETF stuff. And we do like drawings for people that buy ETF accounts, and we're going to do one at the end of January to give out some pretty good prizes. So if you guys are buying ETF, use our account. If you're buying Apex, use our account, or our link to get your accounts, and give us credit for that. And those proceeds just go into platform development and overhead. I love when you guys ask me questions. It's fun. Dude, trading sucks when you're just trading by yourself. It gets kind of boring. So it's cool to have people to trade with and chill with. So the Zoom call, if you remember, we do Zoom calls every day at 3:30. For members or users of the platform, we'll do a Zoom call every day. The one exception is today. I'm going to have to break your hearts because today, IDOC and I have been celebrating our anniversary. We kind of delayed it because we're both sick, but we have a anniversary date day today. So we got to go out and do stuff. Did I fix my monitor? No, but I think I know I can cancel the OLED pixel cleanup thing. P&L on the day. So I made $1,200 in the Apex. And my Live Elite, which is my live funded account, my real money account with ETF, made $4,000 today. The two trades I took. So the trades I took today were as follows. Last night, it was pretty bad. I longed right here, and I stopped. I took a loss. And then when we reclaimed right here, I longed again, and then I closed out. Here. So took a loss, made a win. And then today on stream, I longed from here to there on stream. So those two trades was like $4,000. Or those three trades. But it would have been more. But the first trade lost like $3,000. I was so pissed. This was such a great. This is what happens. Like again, if I had that trade, I would have been up 7. But I digress. You can't win them all. But this one was crazy because normally I long off a monthly hedge for sure every time. I longed here, and then it was doing this, and then it fell like super fast, and I just got out of the way, and it just goes kind of crazy. Right about here, I cut out of it, and I hit it pretty hard. So I lost roughly maybe 15. It moved so fast, I lost maybe like 15 points, 15 to 20 points on 3. So it's pretty big. I think, wait, hold on. I lost almost 20 points on 3, which is about $3,000. And then right when we get up to here, I got back in on the long. And so it's pretty good. Yep. I've been trading since 2010. Can you have 20 ETF fast track eval? You can have 20 evals. I don't know if there's any limit to the fast tracks though. Does it say that you can only have so many? It will tell you if you can. Let's see what they have. I think they had a limit on how many fast tracks you can do though. I think they said that at some point, but I don't see it listed there anymore. I guess you can have as many of those as you want. I thought at some point there was a limit. It doesn't look like there are. It doesn't say, so I don't assume they do. You can have 50, you can have 20 accounts with them total. I just didn't know if Fast Track specifically like limited how many you can do. Do I use stop losses every single time? I just don't put them in my platform. I stop manually every single time. I know where to stop and I close out. I push the button manually. I only use a stop loss in the platform if I have to step away from the computer or trade for extended period of time, like a swing or something. You can only use 3 Fast Track funded. Oh, there you go. Lucas has the answer. I thought I remembered saying that, but in the eval, you can have up to 20. So I didn't read the funded rules, but in the eval you can have 20. So you can only fund 3 of them at a time. That's good knowledge to have. How do I mitigate buying a falling knife? Because I only trade at high volume pivots. That's it. It's not a falling knife if there's traders going to be at that spot. So an example is monthly hedge pressure. It's rare to just fall through a huge volume buffer without stopping, okay? It fights multiple times before it goes. You see how this works? So it's not a falling knife where I enter. I don't enter in a falling knife. Everywhere I ever trade is a high volume pivot. Ever. So there's no falling knife. At least there's a bounce everywhere I enter a position. Always. I never enter in a place where there's no volume. That's a great question, though. So an example, like today's trade, I longed from like down in here up to there, which is good. Actually, on my Apex, I took a loss and then took a win. So on the Apex, I remember I did trade here and then take a loss and then take a win on that one to get 1,200 net. So this guy right here, I did... So an example is there are limits where I don't trade. This had to fight all day to break this. Normally, you don't just fall through monthly gamma without some kind of volume holding it up. So normally, when I do trade at a high volume pivot, I will stop on the S&P 10 points below it, on NASDAQ 40 points. I stop even if the knife is falling that much distance from my entry point. I always get out of the way. This was no example. Here, I longed right here. And as it fell, like here, I give myself 10 points of overshoot. I think I held on to this one a little longer than I should. But I pulled the plug like right in here, somewhere in there. And I don't even think I got exactly on the dot. I think I actually longed right here at the top of the screen candle. So I was down like closer to 20 points rather than 10. But MHP is a really strong pivot. And I believed it was going to rally from there. And I normally pull the plug about 10 points lower. But this guy moved and it bounced there. I was like, oh, that's great. All of a sudden it goes boom, boom, boom. And then this candle came out of nowhere, and did this. And I just yanked the plug out on it. But it's, I don't hold any more than like my target was. So how do I mark my pivot? Rocket Scooter automatically does it all. I don't really do anything. So the algorithm prints them on the page for me. And for the futures, there's a bot in the Discord that spits out those numbers. So we haven't automated it yet. The book is extremely thin. Does that factor in whether or not it will more likely pull back above MHP? No, because the book in ES doesn't matter. ES is tracking the stocks and the underlying. It doesn't matter if the ES is thick or thin. While it does have its own supply and demand, it is very rare that the ES would deviate from the stocks it's tracking. The real thing you need to see is if the book is thin for the stocks themselves, because that's what ES is really caring about. The ES bid and ask and the numbers are set algorithmically for the most part to try to track the underlying index. So the values are insignificant. But that's a great question, Papa George, because you're right. Normally that would matter, but there's independent supply and demand of ES on its own. It's very rare that the ES is going to deviate far from the stocks themselves. Like the thickness of the stocks themselves is really what you want to see to ask for the underlying volatility and see if the market's going to move faster, as an example. I don't trust the bid and ask quotes on the S&P futures and Nasdaq futures, any futures, because they're set algorithmically. It's not like there's like the liquidity is mobilized. You're not going to come in there and like push futures 5% or 10% away from the stock market. You know, it's just not going to happen. The algorithm will quote it appropriately. So it was a great question though. So the answer is, if the bid on the S&P was 1,000 or 100,000 on futures, would it affect the ability for the futures market to move? It wouldn't, because if the stock started tanking, you'd see that $100,000 bid just disappear. Like, it would just go away. So the quotes are designed to bet on what they believe the underlying futures price would be. And if the stock market's changing around, those quotes are going to move around. So I love that question though, Pop George. It's a good question. Any rules with ETF and how long you can hold a trade? Can you scalp for ticks? That I don't know, but I don't think you can't. I don't know I didn't ever read about a limit, but their rules are on their page. I'd go read it and see what it says. You've been watching for a week. You need to learn trading like us. So far, you make more sense than anything you've come across on YouTube in 3 years. Well, appreciate that. You can thank my insatiable hunger for knowledge for that. My background's in engineering, so I'm all about facts and data and numbers. I read so much. I don't take things at face value. It takes a long time to convince me of something. So I've read every CME patent that's been put out there. I've read every single publication on CME Span version 2. I read all of the stuff on how the machine actually works, because I'm a fucking math nerd. So Ivan was up 60K today and then blew your evals. No. You don't. Oh, Jake says you don't have to hold them for a minimum amount of time, but there's a limit to how hours you can trade. Yep. Elite is showing 50% discount at 50K eval, not 90 with Rocket Scooter. Oh yeah. No. Sorry. Don't use our link and use their code. That bot is starting to piss me off. Use our link, but use their code. Hold on. Whatever their code is. Let me see what it is. It is called Xmas90. Use this one. Sorry. Yeah. I have to manually update that bot every single time. Boo. Go here really quick. Chatbot timers. Okay, so it is. Sorry, yeah, I gotta change the code. It is called Xmas90. But you have to use our link and give us credit for that. And they're trailing down on Elite on their some of their accounts. Yes, on some of their accounts. So they have like 5 different kinds of accounts. Or is it 6? F5. Trailing drawdown on the 1 step. Trailing drawdown on the fast track. A trailing drawdown marked once a day at the end of the day drawdown. So it's not trailing intraday. It's trailing from the previous day's mark. Static has no trailing drawdown. Diamond hands is end of the day drawdown. So 2 of them are drawdown off of your peak unrealized P&L. 2 of them are drawdown over your max end of day P&L, which is marked not on your unrealized gains, but at the close of the previous day. And static has no trailing drawdown. So they have, the cool thing about ETF is the variety. This is what I tell people. ETF has the most variety of trading accounts. This is what I like about them. They are one of the cheapest as far as how much to play. And they have the most variety. So you got 5 different flavors. It's really nice. Fast track is like a race. Can you get there in so many days? Your 1 step is your normal top step Apex kind of account. Diamond hands allows you to swing trade, so you can trade over nights and weekends, which is kind of cool if you're less active day trader, you can do the diamond hands, which is neat. A static is a set balance that as soon as you get off the starting point, you're fixed as far as your loss goes. And the end of the day drawdown, which is what I like is cool, is that it doesn't penalize you for, like if you guys trade Apex or Top Step or something, or like, sorry, Apex, and you make money and then you lose some of it, and even though you're green for the day, you still blow up the account because the drawdown trails off the high. The end of the day eliminates that by only making your trailing drawdown below your end of the day balance. So your trailing drawdown will be here. A little more expensive for those, but it's worth it if you want to get rid of that pesky trailing drawdown intraday on the trades you haven't closed out yet. Yeah, it happens. ETF has an account just like that one, but it's called the fast track. I mean, sorry, the one steps. But end of day, slightly more expensive, but you can basically pay a little bit more to buy that rule off your plate. Worth every penny if you're trying to, as far as like the fewer times they're going to blow up, to pay the premium. It's like with ETF, it's like you pay to get rid of rules. And that's kind of what I think is neat about it. You stack them all up, the more expensive ones have fewer rules. So it's like the more you pay, you can eliminate the rules that you hate, which I kind of like. If you put them side by side, you can see that. So an ETF, for example, let's like on a basis of 100K, right? So 205, 75 for the fast track. This is cheaper, but you have to beat it in a certain amount of days, right? It also has unrealized trailing drawdown. The cheaper ones have the harder rules. You have a certain amount of days you have to finish, and you intraday your trailing drawdown. Fast track, intraday, unrealized drawdown as well, but no race. So, well, here it's cheaper because of the sale. 100K on end of the day, 430 versus 205. Twice as expensive, but end of the day drawdown only. This is such a blessing to pay for, especially now, wink, wink, because 43 bucks is not a lot, and trailing drawdown sucks when you make a whole lot and you lose a little bit and you still bust the account. Fast track is marked off of the high of unrealized gain. End of the day is marked off of the starting balance for the day. So the difference in drawdown is here versus here, or twice the price. And when you're buying 20 of these things at 90% off, boys and girls, buy twice the price. Best suited for beginners, the end of the day drawdown account at 90% off is the best for beginners. Only at 90% off because the premium is so much worth it. This is hard for beginners because that's very expensive. But this rule is the worst rule on the planet when it comes to prop firms. As Vapor says, intraday sucks. Bad. Okay, I gotta get out of here in a little bit. But when there's a sale, this one is great. This is the best one to get. It's the easiest one to pass. I repeat, the easiest one to pass. When there is no sale, this is one of the hardest ones to pass, the static, but it's also one of the cheapest ones. It's hard because you have a max drawdown of only 625 on 100K. With two minis, you can hit that in no time on the S&P. In NASDAQ, that's just a couple of breaths. So static is the most rewarding as you do better because your drawdown stays fixed, but your static out the door has such a tight limit that you can easily bust. So statics, you're going to blow up a lot and then finally do well, and hopefully your trading account is outside of the noise range. With statics, you'll churn them faster because of the tighter drawdown in general, but it's a fixed drawdown. So if you make $3,000 and your drawdown is $3,625 for you bust, it doesn't trail. It's cheaper, but it's tighter at the start. So with static, you got to be pickier for your first trade as your best trade. It has to be a good one, or you're going to keep burning through these. But again, at 13 bucks, you can't complain about the price. Diamond hands is only for swing trading. So my recommendation for a new trader is to do the easiest one when they're the cheapest. That's my thought. I don't know if there's issue of Canada. I don't know the rules of all of that stuff. Like I say, I don't work for ETF either. I'm just answering questions you guys are asking. But check with them on any questions you have. You don't like the fact that you keep on paying monthly fees after you pay the activation unless you pay large amounts to waive it forever. That's common with a lot of the prop firms, though. A lot of them do that. Do the end-of-day rules follow you into the paid accounts? Some of them do, yeah. And ETF, the rules are slightly different. Evals are usually easier because you can DCA and all that stuff. And the live accounts, they have rules on them, like consistency rules. ETF doesn't have consistency rules or DCA rules on their evals. You can go YOLO those in a single day. You can draw down, you can DCA, you can martingale, all you want the eval. But the rules are slightly harder when you get funded. And the live account is a static account. So what platform to use in day trading? It's all up to you. It's personal preference. Rocket Scooter, you can day trade futures with. Trade-of-8, you can day trade futures with. TradingView, you can day trade with. What's the funded activation fee on ETF? Oh God, I can't remember. $75? It's been a while. $80. $80, yeah. Jake, yeah, $80. Yep, no more trades while Catalyst is active, guys. I'm still waiting, but you know me. Anything back above here, I'm going to take the long. Anything down here, I'm going to sit out. I'm going to take my... $5,200 and go home. Made $4,000 in ETF and I made $1,200 in Apex. I'm done. I'm getting out here. Go hang out with the iDoc. Have some fun. Thank you guys for tuning in every single day live. Don't forget, education. Come here. We love to teach. If you like to use the Rocket trading platform, half price. For the first month, you can check it out. Come to our Zoom calls and classes. Everything's recorded. The 20 days masterclass is one of the best things that we have. I highly recommend you guys try it. And we do a 3-day full refund. Check out the links in the chat if you want to check it out. 3 days. Sign up for the training. Learn everything you want. And in 3 days, it's not for you, we'll full refund. 100%, no questions asked. And you guys can check out what it is we do. Roxy is a platform that's built for quantitative risk management. We have whole different styles of techniques that are different than technicals, different than fundamentals, no patterns, no chart patterns, nothing. We look at high volume pivots only. We have an algorithm that finds them. And I teach people how to do risk management, position management at the core of what we teach. It's betting tricks. And that's really what you might be missing in your diet. Looking at charts and trying to pick a high or low and try to guess the direction of the market is kind of a fool's errand. But what you can control is how much you bet. And that's what we kind of are experts in teaching. Bet big when your confidence is high, bet small when your confidence is low. And we teach you confidence reading metrics, statistical probabilities of things, and other stuff. So feel free to check it out. Come on over. We love you having our community. We have a massive community. Our Discord community alone has 6,000 paid members in it. So it's big. It's mostly all futures traders, and we're one of the biggest futures communities out there. Come on over. Check it out. Kula, before I get out here, the difference between Rocket Scooter hedge pressure, monthly hedge pressure, and regular GEX, Euro DTE, and monthly GEX. So gamma exposure, the main takeaway is gamma exposure uses all available open interest that exists for options. Every option that exists, Kulu. We don't. We filter the options out for options that don't belong to one of those examples I showed earlier. We only look for options that we're confident belong to zero risk trades, which means if you go out there and you go full port, S&P 700 calls that expire on Friday, you will skew GEX towards your calls because you have a significant amount of them. But you're a speculative trader. There's nobody hedging against a position of that ridiculousness because 700 SPX by tomorrow is not going to happen. The risk is practically zero, right? To anybody trading against you. So there's no hedging, and you're not out there hedging your position as a speculative trader. We would throw your options out of our equation. So we are gamma exposure filtering only zero risk trades that belong to market makers per what our algorithm's designed to look for. Therefore, every option we consider is an option that'll be acted upon with hedging, which means high volume will come place from hedging. Nobody's hedging against your 700 SPY calls because the chance of them expiring in the money is zero. Does that make sense, Kulu? So we wouldn't use your options versus ours because we wouldn't have detected that your options belong to a zero risk trade. So if it belongs to a zero risk trade, then you can calculate with the Greeks, if the S&P goes up 3 points, the option will be hedged by this many stock shares because the delta will change this much. So then we can calculate, which is what allows us to find high volume to begin with at hedge pressure. So hedge pressure and weekly hedge pressure are gamma exposure. They're the maximum gamma exposure of zero risk trades. That's what our algorithm is designed to do. It's GEX, but it's actionable and better. Because if an option is not hedged against, it doesn't make any sense to even consider it, does it? Your 700 calls apply no pressure to the market. Nobody's out there. If you bought 1,000 of those things, nobody's out there buying 100,000 shares so that they can make sure they can provide to you, because your option will never expire in the money. And zero risk trades are what we assume to be market maker positions, are acted upon, because if they're going to be zero risk, they're going to be hedged to neutral. So we want to look for options that we know are going to be automatically hedged against or automatically produce volume. So our gamma exposure model is a lot more sophisticated than GEX, which is simply a gamma weighted heat map of open interest. Ours is much more sophisticated than that. We filter all the options to only options we believe belong to zero risk trades. So market makers would be the ones that would risk zero in an options trade. That makes sense? Yep. And that's why hedge pressure, monthly hedge pressure, and the zone boundaries are always high volume, because maximum gamma is the maximum change in delta, and the maximum change in delta is the maximum order flow to match delta, which means maximum delta hedging. So everybody knows maximum GEX is maximum hedging via delta, because GEX or gamma is the derivative of delta. So higher gamma, or the maximum gamma, is the highest delta change. So the second derivative of the price of the underlying, which is the number of shares you have to buy, right? So it's high volume flow. And GEX typically doesn't have a solid actionable pivot that it produces. Max Pain tries to do the same thing, but Max Pain also has that same skewing problem, in which large out of the money puts and calls will skew Max Pain away from actionable pivot. So, yep. All right, we'll see y'all tomorrow. Love you guys.